So let us start discussing, my dear friends. Today, assessment procedure, filing of return of income. So 2 marks, 3 marks, like that, it keeps coming. So you can please, be very careful about how it is. Or more marks also will come. It's not just 2, 3. There will be many marks which comes from this area. But I'm saying each chapter you may get 1 or 2 marks like that, 2 to 3 marks. So when I say each chapter, there are sub chapters here, right? So that is the reason you have to see one by one. So furnishing the return of income. How do you furnish return of income? What is it all about? Let's see. So the return of income is always filed by the SSE, or in some cases it is filed by the representative SSE. Who's a representative SSE? An SSE who's representing somebody else. For example, you are a minor and you're earning a lot of income. So your income, who will be, giving the return, who will be filing the return, will be filed by your parents or your guardian. So representative SSE is an SSE who's representing somebody else. So one is minor. So if minor is there, the representative SSE will be the guardian. Second is, if you are a non-resident, if you do not have any permanent establishment in India, what you can do is you can hire an agent. An agent, when he has an office here, then you can say that agent will have some permanent establishment. So basically, you can file the return through an agent. Since you cannot file, you can hire an agent in India and he can file on your behalf. Okay, if you are not able to file. So first is, return is always filed by the SSE. However, some cases representative SSE also will be there. 2 cases, wherever there is a minor, then the guardian will come, and wherever there is a non-resident, agent will come. Very simple. That is the first part of the story. So the entire furnishing of return of income comes under section 139(1). So according to section 139(1), the following people shall furnish the return of income. So if it is a company or a firm, then it doesn't matter which amount, irrespective of any amount, you have to file your return. If you're a local authority, if the income exceeds the basic exemption limit, we know. Then if it's any other person other than 1 and 2 above, that is individual, AOP, HUF, LLP, artificial juridical person. In this case, if the gross total income exceeds the basic exemption limit. The gross total income exceeds the basic exemption limit. Yeah, and what is that basic exemption limit? That is 3 lakh rupees, no, in the new regime. Before giving effect to these sections, you see 54, 54B, 54D, 54EC, 54F, 54G. In capital gains, we saw all these sections, correct? 54, 54B, D, EC, F, and all those things. GA, GB, in respect of capital gains, and also deductions, 80C to 80U. All your deductions under 80C to 80U, everything. So this also is covered in this particular thing. So if you see, before giving effect to, earlier what people were doing, they had the income of around 7 lakhs, and then they had all the deductions worth 4-5 lakhs, and then it was coming less than basic exemption limit. So they are telling return need not be filed. No, you should not give effect to any of these exemptions. Only then return can be. And if without giving effect to these exemptions, if your income is less than the basic exemption limit, only then return need not be filed. Otherwise, return has to be filed, guys. So if you have an income of 8 lakhs and your deductions and exemptions of 4 lakh, 5 lakhs, 5.5 lakhs, then the final income will become 2.5 lakhs. No, return has to be filed. Okay? Because you cannot give effect to these things. You cannot give effect to these things. So if you see, there can ask one question. LTCG is 30 lakh. 54EE is 30 lakh. 54EE is what? Your rural electrification bonds and those bonds. Correct? That is easy. So E, obviously, like, regarding startup, etc. Anything for that matter. So you see, I'll just give you an example. Check it out. See, this is EC is the electrification bond that is covered. You see here in this particular section, EC is there. So if you are buying rural electrification bonds, etc., then you should not give effect to that. But here, when you are buying certain units of a specified fund, when you are buying units of a specified fund, it could be any specified asset which is given here. So if you are investing in the long-term units of a specified fund, so you will feel that you will get an exemption under 54EE, because if you see investment made does not exceed 50 lakh rupees. So just like 54 EC bonds, here also you have 54 EE bonds. So these 54 EE bonds you have to make within 6 months from the end of the what do you say, the date of the transfer. Within 6 months you have to do it. So whenever you transfer an asset, transfer of a long-term capital asset, you sell a house, you sell jewelry, you sell a land which is long-term, and then you invest within 6 months. Where will you invest? You will invest in a long-term specified asset. And if you do so, maximum 50 lakh rupees, then they are saying that whatever is the capital gain, that would be exempt. Now, accordingly, what you do, there is a long-term capital gain of 30 lakh and you invest in 54 EE long-term specified asset, and then you make it nil. Should I file the return is the question. Should I file the return is the question. So guys, if you very carefully see the list, 54, 54B, D, EC, F, G, GA, GB is there. EE is not covered. This section 139 was already framed. EE came later. Once EE came, they forgot to add it here. Because they forgot to add it here, EE is what? Not covered here. Which means in this particular MCQ question this is. So in this particular case, should I file the return? No. So 54 EE is not covered in under section 139(1)(6) proviso. So 54 EE exemption can be availed and no need to file the return. Interesting. Similarly, if you have some agricultural income which is exempt. So you have 20 lakhs agricultural income, 20 lakhs is exempt. Should you file the return? You see, agricultural income is exempt under section 10. Is section 10 seen anywhere here? No. So do you have to file agricultural income? No guys, deadly. So no need to file anything with respect to agricultural income also. Very, very different, very, crazy this is. So basically agricultural income also need not be done. Agricultural income also need not be done. Then if it's in the old regime, I have a total income of 2,40,000 rupees. TDS is 30,000 rupees. Yeah, so will I have to file the tax? We'll see. So a firm has to furnish return of income mandatorily, even though there is a loss, even though I am deriving only exempt income, even though I have not commenced any business, whatever the moment the company is formed, I need to file the return. There ends the matter. Sir, there is a loss. I don't care. Sir, exempt income is there. I'm only into agricultural income. It will say nothing. And I have not commenced any business after formation. No, I don't care. You have incorporated, right? So you need to file the return. Then, sir, the company or the firm is defunct, sir. It is gone. Nothing can be done, sir. It's gone. I said no. So in certain cases, an SSE, apart from his own return, is under obligation to file another return. I told you, representative SSE. And guys, as we already know, for assessment year 24-25 onwards, section 115 BAC has come, whereby the exemption limit is now 3 lakh rupees. It is 3 lakh rupees. So we know earlier it was the other thing. So some interesting cases here. Gross total income 2 lakh less 50,000. So deduction under that is section chapter 6A, 50,000 deduction. Net total income 1 lakh 50. Should I pay the tax? No. Return of income? No. Tax also not there. Return of income also not there. Why? The total income without claiming any deduction is less than the basic exemption limit. In this case, however, you see, total income is 4 lakh. Chapter 6 deduction is 2 lakh. Ultimately, net total income is 2 lakh. Now, should I pay tax on it? No. Should I pay tax on it? No. Should I file return of income? Yes. Should I file return of income? Yes. Third one. PGBP 2 lakhs. LTCG 30 lakhs. Less 30 lakhs exemption. PGBP 2 lakhs. LTCG 30 lakhs. Less 30 lakhs exemption. 54 EC. That is what? 54 EC. I told you. Should I pay tax here? No, because the net total income is only 2 lakhs. And 54 EC is covered in the list, my dear friends. 54 EC is covered in the list. So should I take that into consideration or ignore? I should ignore. So what I should take for the return of income? Is it more than 3 lakhs? Yes. How much is it? 32 lakhs. So return of income should I file? 100% yes. Case number 4. PGBP is 1 lakh. IFOS is 20 lakh less 20 lakh. This 20 lakh IFOS is agricultural income exemption under section 10(1). So net total income 1 lakh. Tax not there. Return of income not there. Tax not there. Return of income also not there. Point number 5. Salary 2 lakh. LTCG 70,000 less 70,000 is the exemption under 54 EC again. So net taxable income 2 lakh. Tax is it there? No. Return of income in the new regime? No. Why? New regime it is 2 lakh. Correct? New regime 2 lakh. 2 lakh 70. 2 lakh 70. What is the basic exemption limit in the new regime? 3 lakh. But in the old regime, should I file this? Yes, because basic exemption limit in the old regime is 2.5 lakh. So, new regime, no. Old regime, yes. Next, Mr. A, 82 years. Pension 4 lakh, LTCG 70,000, less 70,000, 54 EC. Total amount is 4 lakh. Tax not there. Should I file it in the new regime? Yes, because in the new regime, whether you are 80 years, 90 years, 60 years, 40 years, same. 3 lakh is the basic exemption limit. Should I file return of income in the old regime? No, because in the old regime, the amount basic exemption limit for 80 years is 5 lakh. That is 5 lakh. So these are the things. Apart from that, come to this now. This is also important. Person who fulfills certain conditions. So the people who fulfill these conditions is required to file the income tax return if during the previous year the following thing happens. Point number 1. You have deposited how much? 1 crore in the current accounts. You are showing in your return 3 lakhs income, but you have deposited in 5 current accounts put together 1 crore, exceeding 1 crore. Sir, what about savings bank account? In savings bank account, you have deposited 50 lakh rupees or more in all saving banks account. You have never filed income tax return, but you have, you have put how much? 50 lakh in savings bank account. You have never filed return of income, but or you have filed at lesser rates and all, and sometimes you have not filed, but you have deposited 1 CR. Doesn't matter. Sir, I'm in business, sir. My business turnover is 1.2 crore. Sir, but my expenses is 1.19 crore. So my income is only 1 lakh. Doesn't matter. Now you have to file the return. Understood? Because ultimately income is what? Income is after all expenses. But the deposits is 1.2 crore and expenses you are telling is 1.19 crore. How much is the final taxable income before exemption? 1 lakh. Generally, we should not file, right? But now they're telling no, you should file because amount of 1 CR. So I am unable to believe that you have deposited more than 1 crore in your account, but you're still claiming that you don't have to pay any tax. Even if you don't have to pay tax, I have no problem, but file the return. Similarly, in savings bank account, you are depositing 50 lakh rupees. I am unable to believe that you don't have to pay tax. Even if you can prove that you don't have to pay tax, it's okay, but you need to file the return. Next is an expenditure exceeding 2 lakh on foreign travel for himself or any other person. Deadly. Has incurred an expenditure exceeding 2 lakh on foreign travel. This is one of my clients I was mentioning in Gandhinagar. Same thing happened, guys. He had not filed return of income only, but he had paid some 7.5, 8 lakhs and paid TCS also on overseas this tour abroad to a tour agency, they had done this. So exceeding 2 lakh rupees on foreign travel for himself or any other person incurred, you have to pay. Has incurred an expenditure exceeding 1 lakh towards consumption of electricity. Electricity bill is 1 lakh rupees per annum. Yes, then you have to do the needful. For business, sales turnover or gross receipts exceed 60 lakh. Yeah, so then what deposit means? Any credit into account, buddy. Any credit into the account. Not cash, any credit. In the account, if this much has been credited, that is the meaning. Deposit means it's not just cash. Any amount credited to his account. Hope you understood, right? Yes. Sudhanu understood? Perfect. Got it? So, deposited in the account. And here, has incurred an expenditure exceeding 2 lakhs on foreign travel. Then what? Electricity bill 1 lakh. Sir, guys, these figures you need to remember, guys. MCQ questions they'll ask, unfortunately. Current account 1 crore. Savings bank account 50 lakh. Foreign travel 2 lakh. Electricity bill 1 lakh. Business, sales turnover or gross assets 60 lakh rupees. All MCQ questions they'll ask. Sales turnover or gross receipts exceeding 60 lakh rupees in the previous year. Profession, sir, I am not in the business, sir, I am in the profession, 10 lakhs. Aggregate TDS or TCS in the previous year, 25,000 or more, 50,000 for senior citizen. Fulfills any other prescribed condition. So, aggregate TDS or TCS in the previous year is also how much? 25,000 or more. Means what? See an example here. Total income 2 lakh 40. Is it less than the basic exemption limit? Yes. But TDS you have paid 30,000. You have paid 30 because, for example, if PAN you have not given, no 20% they'll charge, no. That TDS you have already deducted 30,000 you have paid already. Correct. So 1,50,000 worth services you gave to somebody under 194J. They have to deduct TDS at 10%. You did not furnish the PAN, so they deducted at 20%. Means they deducted 30,000 rupees. Ultimately, your entire income for the year is 1,50,000 plus some here and there other income all put together 2,40,000 you have earned. That's all. TDS 30,000 you are paying. Even though the total income is less than the basic exemption limit, since TDS is more than 25,000, return should you file or not? Yes. Hope you understood. But return was not filed. Then I'll ask you what is the fine? Is it none? Is it 5,000? It is 10,000? Is it 1,000? Generally under 234F, the fine is 5,000 rupees. But if your total income is less than or equal to 5 lakh rupees, then the fine will be 1,000 rupees. This can all be MCQ questions like this. Got it? Then come here, guys. This is a scenario where there is mandatory filing of return of income, okay, in certain cases. First one, the following cases, the return of income shall be furnished mandatorily, irrespective of their income or loss, irrespective of their income or loss. Persons holding assets outside India. So what used to happen, there would be a husband, wife would be living abroad, right? So the husband would transfer the assets in his name to his wife's name. Husband and wife, no problem, because you can gift also. Even under the Benami law, Benami Prohibition Act, any amount, any, asset given to the wife, no problem, you can give, no issues. So in Benami law, all that is covered. All that is covered. But there are other cases where the person in India or person abroad had some assets, he used to give the assets to his servant or to his driver or to his very, very distant relative or very good friend who's not well to do, but the assets are from the rich friend. Rich friend used to transfer all the assets in the, the friend's name. All these things used to happen. They are all called Benami transactions. To catch these Benami transactions, now they are trying to tell if you are a beneficial owner. Who's a beneficial owner? Beneficial owner means all the benefits of that will come to me, which means I am the owner of that property. So if I am that rich guy and I am transferring the asset to my driver, it's an example I'm telling. My driver is the beneficiary. He is getting benefit from that particular house, car, whatever. But who's the beneficial owner? I am the beneficial owner. So guys, the thing is, any person who is resident and ordinary resident in India and who is not required to file a return, it goes both ways. If a person who is living abroad has given the asset or house or car to Indian driver, or other way around. Here, the Indian is a rich guy. He has given his asset to somebody who is abroad. Correct? Abroad is great. Some aunties, some relatives are there. They are not relatives to me at all. My aunt's side, aunt's husband side, some relatives are there. They are not my relatives. But then we are close. I've given the asset to them. But I am in India. Now I am the beneficial owner of that asset. One more case, some foreigner or person living outside India is giving something to India, to a driver in India. Both cases. One fellow is the beneficial owner, in the other case is the beneficiary. If the asset is located outside India, such asset is located outside India, or I also have a financial interest in the entity. Means what? Financial interest means shareholding or signing authority he has. Basically, is the beneficial owner or beneficiary. So, lawmaker is telling, boss, no, you have to file the return. You have to declare that and file the return. No mercy. So, a person holding assets outside India may be an individual or HF. Sir, such person must file the return of income mandatorily in the form of manner prescribed. Beneficial owner in respect of an asset means an individual who has provided directly or indirectly consideration for the asset. I told you, my asset I have transferred somewhere else and that asset is outside India. You outside India has transferred something to me, but the asset is outside India. I am the owner. I only didn't know. But of course I will know. Nirmala madam is telling the beneficial owner also has to file the return, or the beneficiary also has to file the return. No mercy. But wherever clubbing provisions come, husband, wife, clubbing, then what? If clubbing provisions are arising, then there is absolutely no, this section will not apply, because in clubbing, anyway, wife's income is clubbed in the hands of the husband, husband's income is clubbed in the hands of the wife. So in that case, there is no concept of return filing, because anyway the husband will file the return or the wife will file the return anyway. Right? That is the thing. So, see the examples. Mr. A, resident and ordinary resident, having a house property in USA, filing the return irrespective of total income. Mr. A is a beneficial owner. Second, Mr. A, resident and ordinary resident, holding a bank account in Qatar for which he has signing authority, is filing the return irrespective of total income. And Mr. A, resident and ordinary resident, having house property in USA, rent from such property received by Mr. B. Who should file the return? Both A and B. Because A is the beneficial owner and B is the beneficiary. In all these three cases, it comes. Now, who is a resident and ordinary resident? We will see that now. So, guys, since there is a lot of thing called, resident, ordinary resident, resident, not ordinary resident, non-resident, we'll just quickly do the residential status. Okay. Though it is not part of assessment procedure, but we should know the residential status. It's predominantly in international taxation, but still we should know what is the residential status and all those things. Quickly we'll finish it off, because nowadays, from now, whenever you're seeing anything called resident, ordinary resident, resident, not ordinary resident, non-resident, you'll know who we are talking about. Okay. Right. So basically, guys, when there is a total income, which is defined in 2 clause 45, it says income as defined in section 5, which is computed in the manner laid down in the act. Income as defined in section 5 and computed in the manner laid down in this act. Income as defined in section 5 is what? Scope of total income, resident, ordinary resident, resident, not ordinary resident, and then non-resident. Three things: ROR, RNOR, and NR. Resident, ordinary resident, resident, not ordinary resident, and non-resident. Income as defined in section 5 and computed in the manner laid down in the act. So, scope of total income is dependent on these three things. So, what does the residential status mean? Very simple. Individual or HF, you are either a resident or a non-resident. And if you are a resident, there are two things: resident, ordinary resident, resident but not ordinary resident. And for firm, AOP, BOI, local authority, company, etc., it is either resident or non-resident. For the resident, the global income is taxable, and for non-resident, only Indian income is taxable. For resident, global income is taxable, and for non-resident, only Indian income would be taxable. So, what is the scope of total income? That is individual or HF. See, income received or deemed to be received in India. So, either the cash should have come in India, or it should go somewhere else and then come to India. That is called income received or deemed to be received in India. So, even though it is arising from a source in India, it is received somewhere else, and eventually it comes to India. That is also called as received or deemed to be received in India. So, for resident, ordinary resident, resident, not ordinary resident, and for non-resident, in all the three cases, it will be taxable. Basically, it will be taxable. You need to understand, for resident, ordinary resident, global income is taxable. See, tick, 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 everything is taxable. For resident, not ordinary resident, everything is taxable except something which is earning outside India fully. Is worked outside India, earning outside India, it will not be taxable. But for non-resident, first two is taxable, next two is not. What are the next two? We'll see. Right. So, one by one. Income received or deemed to be received in India. For resident, ordinary resident, taxable. Resident, not ordinary resident, taxable. Non-resident, taxable. Sir, what is ROR and R? We'll see. I have not yet discussed. Don't worry. Second, income accrued or arising in India or deemed to accrue or arise in India. Right? So, this source of income must be in India. That's why it is called as arising in India. And even if the source is in India, but money you are receiving somewhere else, it is deemed to accrue or arise in India because the source is in India only. Means I have a house here. Rental income, they are paying somewhere else. I don't care. It is deemed to accrue or arise in India only. Why? Because source is in India only, no? This also, all three cases, it's taxable. Third one is what? You are abroad, you will come here on a visit and you will decide, let me now do something whereby I will do what? Start a business in India, right? I'll keep the main business in India. Then when I go abroad, I will set up all the businesses there. But the control will be in India only. So many people, let's say from Kerala, they are all living in UAE. They come to India, visit to their hometown, and then they see that there's a business opportunity. For example, there are a lack of bananas in Singapore. Singapore, they import everything. So this Kerala Cheta is living in Singapore. So he decides to come to India, then start an export business. Everything is controlled in India, but all the fruits, etc., is going where? To Singapore. Right? You would have seen the coconut husk, no? There's a coconut which is hard shell. On that husk also will be there. That big, the covering. That covering in India they'll throw everywhere. But there's already a market abroad. Coir market, COIR, coir. So actually one of my clients did this. He came to India. He saw, it's his own hometown. He came in Kerala. He saw this coir. Everyone is throwing like that. But this coir is sold abroad for thousands of dollars. So he collected all the coir from many people, paid them some thousand rupees, then set up business in India and started exporting the coir. But where is he? Is he living in India? No. So if you see, if income or accrued or rising outside India, where is he getting all the money from outside India? But business is controlled from India. Profession is set up in India. Then, my dear friends, for ROR taxable, RNOR taxable. For non-resident, it is not taxable. You are living abroad only. You just come here for 15 days for some, wedding. Or you will just come to visit your parents and all in the hometown. When you come only, suddenly one business idea will come. You will tell all your relatives, hey, you manage this business, I will go there and do the business for you. Is he a resident? No, he's a non-resident. Is it taxable for him? No. See, deadly point. That is a point where you can make money without paying tax. Lastly, you have earned everything outside India. If Virat Kohli wins, man of the series in Australia, it is definitely taxable for him there also, here also. Of course, there will be tax credit which he can take, foreign tax credit. This is called, for resident, global income is taxable. Virat Kohli plans to live in UK. Eventually, he'll become non-resident. That time when he is earning anything outside India, will it be taxable in India? No. For RNOR and NR, outside income is not taxable. Means you are working outside, earning outside, not taxable in India. It will be taxable in those countries. Okay? This is the deal, guys. So, guys, other SSEs, no, like companies and all. Indian income, resident taxable. Foreign income, resident taxable. Indian income, non-resident taxable. Non-resident is earning income from India, like an Indian foreign company is earning, some amount in India, taxable. Non-resident earning foreign income, not taxable. This is very simple. Okay. So that is regarding the scope of total income. Now let us come to the residential status. Now, if you want to be a resident, if you want to be called as a resident, you have to follow two basic conditions. If you want to be called as a resident, you have to follow what? Two basic conditions. A1, A2. Basic condition number 1. Stays in India for, thank you, Mesh. So, basic condition, you have to follow what? One out of the two basic conditions. You have to follow one out of the two basic conditions. Let us call it A1 and A2. Let us call it A1 and A2. If I want to now talk about A1, what does it mean? Stay in India for greater than or equal to 182 days in the previous year. That is in the year 24-25. So, he should stay in India. That person should stay in India for greater than or equal to how many days? 182 days in the previous year. Or A2, stay in India for greater than or equal to 60 days in the previous year. First is what? Stay in India for greater than or equal to 182 days in the previous year, 24-25. Or stay in India for greater than or equal to 60 days in the previous year, 24-25. And double condition. And greater than or equal to 365 days in the last 4 preceding previous years, 23-24, 22-23, 21-22, 2021. This should be the condition. First, stay in India for greater than or equal to 180 days, or either this or that. Stay in India immediately previous year, 60 days, and 365 days in the last 4 preceding previous years. There are 3 exceptions to this, in which A2 should not be read as 60 days. A2 should not be read as 60 days. Which one? This 60 days. This 60 days will change in 3 scenarios. What are the 3 scenarios? First one, You are an Indian citizen. You have gone outside for employment outside India. So in A2, that 60 should be read as 182. So basically there is no difference between 1 and 2 then. Here also 182, here also 182. So there is no difference. So if you are going abroad for employment, for you to be called as a resident, you should have stayed in India previous year for more than 182 days. That 60 here will be read as 182. Next. Or either this, three exceptions. Second one. You are an Indian citizen. You are a Indian citizen. You are a part of the crew of an Indian ship. Right? You are an Indian citizen, part of the crew of an Indian ship. The Indian ship has gone abroad now. You are a crew member of a ship which is in, let's say, Mumbai, and now they are cruising to Kochi or Sri Lanka, wherever it is. So cruise ship. From Kochi they go to Sri Lanka, whatever it is. Ultimately you're going abroad. So there also what they're saying, in A2, this 60 should be read as 182 days, which basically what they're trying to tell is, if you are an employee going outside India to work, or if you are a part of an Indian ship, again crew member employee, then this second condition will not come only actually. Because here only if it's 182, if 60 also is to be read as 182, same, no? Basically they are trying to tell A2 will not come only into the picture. Only one condition will come. That 60 days and all I will not give. I will give only 182 days. So you follow either of the two basic conditions, you will be called as a resident. Third one is interesting. You are an Indian citizen, you are a person of Indian origin. You are either an Indian citizen or a PIO, person of Indian origin. Person of Indian origin means your great-grandfather, grandfather, somebody should have been in undivided India. You previously should have been an Indian citizen, or no problem, your parents should be Indian citizens or your grandparents are Indian citizens. Basically you have an Indian lineage, that is called person of Indian origin. Sundar Pichai is not an Indian citizen but is a person of Indian origin now. You would have got US citizenship. Satya Nadella is a person of Indian origin. Kamala Harris is partly person of Indian origin. Right? The Vice President of USA, J.D. Vance, his wife, forgot her name, she is also a person of Indian origin. Vani, I guess. Vani Vance. She is also a person of Indian origin. So Indian citizen or person of Indian origin. Second one is what? Non-resident. Third, you have come to India on a visit. You have come to India on a visit. Stay in India should be greater than or equal to 180 days. That is anyway there. In A2, 60 will be read as 182. 60 will be read as 182. Guys, this 182 also got changed later. We will see. So my dear friends, what it got changed to, we'll see later. It got changed. 60 was read as 182. Basically, they are trying to tell in these three cases, the second condition will not come only. The 60 should be read as 182. But in the third case, they changed it in Finance Act 2020. We'll see. 60 is not 182. It's something else now. So basically, guys, if you are an individual, you should follow at least one basic condition, A1 or A2. If you are a non-resident, both basic conditions are not followed. Right? But in a resident, you should follow at least one basic condition, A1 or A2. You should follow either A1 or A2. But if you want to be called as a resident but ordinary resident, or if you want to be called as a resident but not ordinary resident, what is the scene? You want to be called as a resident but ordinary resident, both additional conditions will be satisfied. Both additional conditions to be satisfied. What are additional conditions? We'll see. But if you are a resident but not ordinary resident, if you are a resident but not ordinary resident, only one additional condition should be satisfied, or no additional condition will be satisfied. So, if you are a resident but ordinary resident, you have to follow both the additional conditions. If you are a resident but not ordinary resident, what is it? What it means? If you don't follow both, or even if you follow one, that's all over. See, very simple. If you follow both, you are ROR. If you can't follow even one also, even if you follow one also, you are still RNOR, because to be called as ROR, you should follow both the additional conditions. What are the additional conditions? Resident in India for 2 previous years or more in the last 10 previous years. So first of all, if you, when will you be a resident? Last year 180 days, or last year 60 days, and 4 years before that 365 days. But then, since 10-15 years, if you are in India only, if you are a resident for at least 2 out of 10 previous years, that is one question, scenario, and stay in India for 730 days or more in the last 7 previous years. Most important, both the conditions must be satisfied. Both the conditions must be satisfied. Understood, guys? So this was all the additional conditions. This was the individual thing. This was the exceptions. And this is the other thing. Now we'll have to see the amendment. Okay, amendment we'll see. Most important. So guys, what used to happen? Hear me out. People know there is this dialogue here. 60 days is not there. How much it is? 182 days. For which person? Person, Indian citizen, or person of Indian origin? That fellow, he used to take how many days? How many days he used to take? 182 days for him to be called as a resident. What people used to do, they used to come from UAE and Singapore, wherever they are, Indians, basically Indian origin. They used to come to India, stay for 6 months, 180 days they used to stay. Set up nicely the business in India, superbly, properly they would have spent time, set up business in India. Next 6 months, go abroad and do all the export business. Because guys, you can't come here. That example that I gave, you'll just come here, 15 days, you'll set up. It's not easy. You have to spend time. Only then it will give money. Just to come to India, stay for 5 to 6 months, chill, set up the entire business here, then go abroad and sell. That be the case, he was obviously a non-resident, because for a resident, you should have a 60-day concept only is not there, no? Third case. Indian citizen, person of Indian origin, non-resident coming to India on a visit. When you're coming to India on a visit, you will just stay for 15-20 days is what they thought, but they were staying for 6 months. This 60 days should be read as 182 days means what? You are obviously staying for 6 months also. If you stay, you are still a non-resident. People were doing this. And if that be the case here, if you are a non-resident, no, this income, see this? Income accrued or arising or received outside India, but business is controlled in India. So, non-resident people were staying for 6 months in India, setting up business in India, doing everything nicely, then exporting everything outside India, and earning money and not paying tax, guys. Deadly. Nirmala madam could not take it. She analyzed the trend. People were staying for 6 months. So, she amended this. She's saying now that generally, some people were staying for 4 months, 5 months. So she's like, no, I cannot make it 182 days. I have to reduce the dates. I have to reduce the dates. Let me not make it 60. Let me change it. Let me not make it 182, but condition, let's not make it 182. So guys, only for this. And she analyzed this 3 incomes, that is total income in India, net total income in India, or net taxable income in India, these 3, 1, 2, 3. If it is less than 15 lakh, no problem. I'll keep it as 182 days only, no problem. But if 1, 2, 3 is more than 15 lakhs, guys, means other income you leave and Indian income, this you're earning more than 15 lakh, which is anything in India you're earning more than 15 lakh. Then 182 days is cheating. I should reduce the dates. That's the logic. So she made it 120 days, my dear friend. She made it 120 days. So here you can say it is point number 5, no? Amended 180 days amended to 120 days if net taxable income in India is more than 15 lakh rupees. If net taxable income in India is more than 15 lakh rupees, you can write that down. Point number 5, no, this one, exception. 182 days is to be read as 120 days if net taxable in India is more than 15 lakh rupees. Deadly. Hope you understood the point. So guys, if you see here, check this. I've given it here, don't worry. Indian citizen or a person of Indian origin who comes to visit into India, if NTI is less than 15 lakh. What is NTI? Other than income from foreign source, means Indian source, net taxable income in India. A2 should be read as 182 days only instead of 60, that there's no change. But if it is more than 15 lakhs, A2 is modified. 60 days should be read as 120 days. 60 days should be read as 120 days in the previous year, and of course the 65 days condition will come. It is deemed automatically to be a resident and not ordinary resident. No need to check any additional condition. It is deemed resident. If the moment you are staying 121 days, you are deemed to be RNOR. If you are RNOR, my dear friends, you see here, if you are RNOR, this income will be taxable. That's the beauty. That is what she wanted to do. This income will be taxable. It will become RNOR, resident and not ordinary resident. I'll give you time for this, don't worry. Hope you understood the point. If net taxable income is more than 15 lakh, 60 days will become how many days? 120 days. Plus 365 days in the last 4 preceding years. Automatically you are deemed to be what? Resident, not ordinary resident. No need to check additional conditions. No need to check additional conditions. No need to check what? Additional conditions. So if a person of Indian origin comes to India and his NTI is more than 15 lakh, if he stays less than 120 days, guys, non-resident. Stays more than 120 days but less than 182 days in the previous year, then what? Stay in India greater than or equal to 365 days in the last 4 years. That condition also has to be satisfied. Then automatically is RNOR only if one is a yes. Then if it is more than 182 days, then is a resident. And for that I have to check the 2 additional conditions. Very, very simple provision. Now general rule I'll tell you, when I'm going outside India, that day I have to exclude. When I'm coming into India, that day I have to exclude. General rule. When I'm going outside India, no, that day I have to exclude. When I'm coming into India, that day I have to exclude to count the days. Exception is shipping. That ship, Indian ship. So basically, 24th August, I am going into the Chennai Indian ship, captain on 24th August. Then it goes to Kochi, then it goes to Sri Lanka, then it again comes to India. From Bangalore to 5 p.m. I came on 24th August. Then Sri Lanka, it went to Lakshadweep, Singapore, Indonesia, Malaysia, Sri Lanka, and again went to Chennai on 14th October 24, 8 p.m. 24th August 24, 5 p.m. I got into the ship and I exited the ship on 14th October 2024. General rule, 24th August should be, what do you say? The day you are going also should be excluded from that, counting that you are a non-resident. Which means, general rule, 24th August you should say you are in India. Because till 5 p.m. you are in India. Then Chennai you reached on 14th October, 8 p.m. 14th October, 8 p.m. also you should say you are in India because you came back to India. General rule. If I am in the flight, no. If I go on the flight 5 p.m., I am deemed that I am in India that day. I come back on 14th October, I am deemed that I am in India that day. Even though first 8 hours I was not there. Correct? That's not the point. Not 8 hours, more than that. Correct. 20 hours I was not there. Still I am deemed to be in India if it is a flight and other things. For ship, most important for the ship, the residential status depends on the captain's certificate. That is called as the continuous discharge certificate, CDC. Continuous discharge certificate, CDC. Right? Continuous discharge certificate, CDC. So when are you not in India, guys? You are not in India from 24th August to 14th October. Both should be included in the non-residential status. This is an exception. General rule is what? If I fly 24th August, I fly from here, I am still in India on 24th August. I am not in India from 25th August. And on 14th October, when I come back to India, yes. Here, see, I can be in Kochi, I can be in Sri Lanka, I can be Indonesia, Singapore, I can be in Chennai, I don't care. For shipping, it is only based on CDC. So if the captain says you got in on 24th August, you are going out on 14th October, even though you are in Chennai, even though you are in Kochi, I don't care. It is deemed that you are outside India. If you see, if I am flying out of 24th August is counted as residence in India. Similarly, 14th October is counted, exception only ship. Alright, guys. So there is one last part, guys. Vijay Mallya, for example, he was staying in Bermuda for 40 days, Switzerland for 30 days, British Virgin Islands for 40 days, Cayman Islands for 50 days, Dubai for 30 days. He was staying in those countries which was not liable to pay tax only. He was staying in tax havens. So Nirmala Madam created one more section called 6(1)(a), concept of deemed resident. So if you are living outside India in a tax haven where tax you are not liable to pay tax, you are escaping Indian tax and you are making money. You are calling yourself a non-resident by staying in these tax havens. Nirmala Madam said, I don't care. I am deeming you to be a resident in India. Deadly. That is another section 6(1)(a). I am deeming you to be a resident in India. This is for the individuals, guys. Company is very simple. If it's incorporated in India, always a resident. Then incorporated in India, your resident if the control or management is wholly in India. That is called as the POAM rules. That part we'll see later. That we need not study now. We'll see later. That's about it, guys. Residential status. Now we can get back to assessment procedure. So with this basics of residential status, we can go back to our assessment procedure. Over here, right? So here you will understand, see, any person who is resident and ordinary resident, ROR, means he has followed one basic condition and two additional conditions, and who's not required to file a return in India, means what is not showing any income in India, but he happens to be the beneficial owner. He has paid money for somebody else, or he is the beneficiary. Let's say, for example, he is the driver. Then he also has to file the return of income now. Because if he is holding any Benami property on his own, he has to file the return of income. That's what this section means. That on his own, he has to file the return of income. Perfect. Moving on. Alright guys, 1.4 due date of filing the returns. As you know, if you are a company, then it is 31st October of the relevant assessment year. So previous year will be 24-25, assessment year will be 25-26, relevant assessment year will be this. So for the previous year 24-25, it will be 31st October 25. And any other person is required to get the tax audit done for him also 31st October 25. If you are a partner of the firm whose accounts are required to be audited and spouse of such partner subject to section 5A. This section 5A is a Portuguese law, the Portuguese civil code, especially in Goa, etc. The Portuguese were occupying, and later when they had to be thrown out and when the India had to be united, there was reorganization of all the states. So that time there were some rules with respect to the Portuguese law. So there also, anyway, if your firm is getting audited, even the partner also has to file in the same 31st October 25. Wherever transfer pricing is there, international taxation transfer pricing is there, 1 month extra, 30th November. And last but not the least, anybody other than this, like individual, for example, who is not going to tax audit, 31st July. 31st July of 2025. 31st July of 2025. Got it? And what partner is paid money? Only the working partner. Sleeping partner will not get any payment. Only the working partner will get the payment. So, loss return. Anybody who has sustained any loss in any previous year. Guys, 139.1 is normal return. That is this section. 139.3 is loss return. It's the same only. But if you want to carry forward the loss, you have to file it as a loss return under 139.3. What are the losses which are covered? Business loss, speculation loss, loss from specified business, capital gain, owning and maintaining, horse race. 72, 73, 73A, 74, 74A. Important to know. 71B, house property loss. 32.2, unabsorbed depreciation, not covered here, which means even though you have not filed the return, can you carry forward? Yes. Even though you have not filed the return, you can definitely carry it forward, guys. That is the meaning of this sentence. That is the meaning of this sentence. So, can I do inter-source or inter-rate set-off? Yes. This section, you can do inter-rate set-off. Even if you have not filed any return, you can do the inter-rate set-off. Only carry forward is not possible. Only carried forward is not possible. So you see here, due date for return filing 31st July, return filed on 14th August. Business loss 3 lakh, LTCG 2 lakh. Business loss cannot be carried forward. However, business loss can be set off against LTCG and remaining 1 lakh cannot be carried forward. The bar is only on carry forward. Bar is not against set off. Because in the chapter, if you say, it says shall mandatory and shall not be allowed to carry forward. But if you see the chapter name of set off, it says set off, carry forward and set off. Carry forward and set off is possible. I mean, not possible, sorry. Set off is possible. So in the same year, you can do a set off like you saw here. Case number 2, Mr. A, due date for return filing 31st July, return filed on 14th August, unabsorbed depreciation 5 lakh, LTCG 3 lakh. So here Unabsorbed depreciation of 3 lakh can be set off against LTCG, and balance 2 lakh also can be carried forward easily because unabsorbed depreciation and house property are not there. Due date for return filing 31st July 23. Return filed on 14th August 23. Return for assessment at 2023 was filed within the due date. Business loss 5 lakh. Current year business loss 4 lakh. LTCG 1 lakh. Current year business loss can be set off against this LTCG. But still 3 lakh loss will remain. This 3 lakh cannot be carried forward. Interesting to know, can this 5 lakh be carried forward? Yes, old 5 lakh can be carried forward. Yesterday, one of you asked this question, right? Remember? I think it was Hari or Sanjeev, one of the two, asked this question, yes or no? So the 3 lakh, can it be carried forward? Yes. Sorry, 3 lakh. This 3 lakh cannot be carried forward. Can this 5 lakh be carried forward? Yes. Why? You see, any person who has sustained the loss in the previous year cannot be carried forward. This 5 lakh rupees, was it sustained this year or previous year? Some other previous year. What has been sustained today cannot be carried forward. But what has been sustained today, can it be set off in this year only? Yes. And what has been sustained previously, can it be carried forward even though if I don't file the return? Yes. Did you get it, guys? One of you had asked this question. I told you when we do assessment procedure, I'll clarify. Got it? Easy. Belated return. Now, belated return is if you have not filed the original return at all, then you can file a return after the due date of filing. What is the due date? 139.1. Due date will either be 31st July or 31st October or 30th November. That's it. So if you do not file the return, then you should do when? Belated return can be filed 3 months prior to the end of the relevant assessment year or completion of assessment, whichever is earlier. 3 months prior to the relevant assessment year. So assessment year is what? 25-26. 3 months before the relevant assessment year ends. So 31st March 2026, go 3 months before. It is what? 31st December 2025. So you should go when? 31st December 2025. So belated return can be filed 31st December 2025. So belated return you should file before 31st December 25. If you fail to furnish this, then in assessment procedure there is a concept called best judgment assessment under 144 that will happen if you fail to do this on time. So last date of filing 31st December 25 or completion of assessment, whichever is earlier, it says. See here, completion of assessment, whichever is earlier. Assessment will be completed in two ways. One is there is a section 142.2 will give a notice, and if you don't reply to the notice, they will only assume something because you have not given anything. You have not filed the return. You have not given them any data. So under section 144, it's called as a best judgment assessment. Best judgment assessment, it will be filed on which day? I mean, the assessment will happen, and on that day, you should say that the assessment is completed. Either 31st December 25 or best judgment assessment, whichever is earlier. And let's say 31st July 24 was the due date. 10th December 2024, the assessing officer has given a show cause notice, SCN. On 14th December 2024, you have ignored the show cause notice and you have filed the belated return on 31st December 24. You can file belated return, no problem. Can you ignore the show cause notice and file a belated return? Yes, because assessment is not completed on 10th December. Is show cause notice an assessment order? No. Show cause notice is not an assessment order. Dhampur Sugar Mill Supreme Court decision. Show cause notice can never be called as an assessment order. So gain 10 lakh, loss 3 lakh. This loss, can it be set off? Return is not filed before the due date. 13 lakhs, can it be set off? Yes, it can be set off. But can 3 lakh be carried forward? No. Set off is allowed, carry forward is not allowed, already discussed. House property loss is 1 lakh. Loss return is not filed. Can this loss be carried forward? Yes, as section 80 does not mention 71B, house property loss. This provision anyway is not applicable to the new tax regime since interest on house property is not allowed in the new tax regime. Hence, will never be a loss from house property while calculating interest on self-occupied property. But if it is even if it is LOP, then 115 BAC deduction is available. So guys, in 115 BAC new tax regime, for SOP, that 2 lakh interest which you would be claiming is not allowed. For SOP, self-occupied property, it is not allowed. For let-out property, it will be allowed. There are some hidden points. Profit before depreciation is 20 lakh. Depreciation is 40 lakh. Unabsorbed depreciation 20 lakh. Return not filed. Can I carry it forward? Yes. No doubt about it. Belated return. Now, belated return, even beyond 31st December 25, can I file belated return? No. But if I go and say, sir, there was a death in the family, I could not, genuine reason, I'm very sorry, can you still file the return? There is a concept of condonation where they can say, okay, no problem. But guys, this condonation is useless now because there's one more section called updated return anyway. Under 139.8a, you have updated return. So you can do that further. So you can check these things. Then revised return. What is revised return? Whenever I file an original return under 139.1, and mind you guys, when I file 139.1, 139.3 also is possible. Or if I file belated return, original return I could not file, so I'll file belated return. These can be revised any number of times. If I have found a mistake in the return while I was filing, I can refile this any number of times. This is called what? Revised return. And this revised return last date is 31st December 2025 for the previous year 24-25 or completion of assessment, whichever is earlier. So due date, I don't file the return. Can I file a belated return? Yes. Can belated return be revised any number of times? Yes. Due date, I don't file the return. Can you file a revised return? No. Revised return cannot be filed when there is no return. Revised return should revise something. What something? Either original return or belated return. Original return I filed once before the due date. Can I revise it? Yes. When should I revise it? Before 31st December. Can I revise it again? Yes. I can keep on revising. No problem. So 139.1 and 139 can be revised. 139.1 and 139.3 can keep on getting revised. Can belated return also be revised? Yes. In Finance Act 2016, they said, okay, belated return also can be revised any number of times. So 139.1, is it filed before the due date? Yes. You can revise it before 31st December. If you have not filed the, what do you say, revised return, is it a belated return? If it is a yes, that also you can revise by 31st December. It is not an original return. It is not a belated return. Can you revise anything where there is no return? No. Loss return is filed within the due date. Yes. Can it be revised? Yes. When? Revised return 31st December. Loss return was not filed within the due date. Can you file belated return? Yes, you can. But can you do the carry forward benefit? No, guys. No. You can definitely do a revised return of a belated return. No doubt about it. But can you carry forward the benefit? No. You can carry it forward as per 139.3 very clearly only if it is filed within the due date. There is no second thought about it. Very, very clear it is. So let's see some cases. 139.5 assessment year 24-25. Due date 31st October 2024. Case number 1. Return of income filed on 30th October 24. Income is 5 lakh. Revised return filed on 31st December 24. Is it within the due date? Yes. But income is converted to loss. Is it possible? Is it a valid revised return? Yes. But can income be converted to loss? Yes, you can do anything. But now the question is, can the loss be carried forward? Again, it went to the Dampur Sugar Mills, which said revised return substitutes the original return. It is deemed to have been filed on 30th October. Hence, 8 lakh can be carried forward. Very important. I'll give you time. Don't worry. Just listen to the class. I'll give you time. Even though this has been filed beyond the due date, this replaces this. Is this filed within the due date? Yes. So this loss can be carried forward. Wonderful. Supreme Court decision. Case 2. Return of income filed on 15 November 24. Loss is 2 lakh. All MCQ questions. Revised return filed on 31st December 24, mind you. Here I have increased the loss to 20 lakh. I have increased the loss to 20 lakh. Is it a valid revised return? Yes. Guys, 12 lakh or 20 lakh cannot be carried forward because the original return only was filed after the due date. It was a belated return. So 12 lakh also not allowed. 20 lakh also not allowed because it was a belated return. Case number 3. Return of income is not filed. 142.1, I have asked for a notice for you to file before 10th December 2024. You filed it on 8th December 2024 and claimed a loss of 2 lakh. Revised return. Again, you made a revised return of that belated return. When? How much? 8 lakh. Revised return is valid. But 2 lakh or 8 lakh cannot be carried forward. And just the show cause notice is not completion of assessment. Why can't 2 lakh, 8 lakh be carried forward? Because you filed it on 8 December when the due date was 31st October. Hope you got it, guys. This is what? Revised return. Right? So apart from that, guys, we have other things. Quickly, we'll finish it off. 139.4a, it is the return by trusts. So if the income of the trust exceeds the basic exemption limit of 2,50,000, then they have to file the return. 139.4a they have to do. And the political parties also similarly, they have to file under 139.4b. Due date is 31st October. Here also due date will be the same, 31st October of the relevant assessment year. So one difference between the two, if I have to say, as far as trust is concerned, if you have not filed the return, no, if the total income is less than or equal to 5 lakh, then 272A, that is, you will get a penalty of 500 rupees per day from the date of default to the date of filing, or to the date of the best judgment assessment. And also under 234F, for not filing the return, 1,000 rupees you will get if the income is less than 5 lakh. If the income is more than 5 lakh, then under 234F, anyway it is 5,000 rupees. But 272 capital A, that again you will get 500 rupees per day. 500 rupees per day from the date of default to the date of filing the return of income. Date of default will be what? If 31st October is the last date, from 1st November will be the date of default. So from there, till whenever you file the return, 500 rupees per day. Interesting to know that this 272 capital A is not applicable to political party. So if political party does not file the return, no tension for them. They only have to pay this 5,000 rupees or 1,000 rupees and escape. So 234F is there for everybody, but 272 capital A is there for trust. So that is an additional hidden point, so to speak. Right? So later when you are studying, you can go through that. I'll give you time. So then return by certain institutions, guys. So this is what is this? This is certain companies, associations like research associations, mutual funds, then in other institutions, securitization, I think hospitals, medical organizations, trade unions, all these, they can seek exemptions under various sections under the law, under Income Tax Act. They can take exemption. When they are taking exemptions under all these sections, section 10 basically, if their income is exceeding basic exemption limit, then only they have to file the return. Otherwise, no need. Very, very simple. Then university, any university, college, institution which is approved under 35 or scientific research. Any scientific research association has to file their return under 139 4D 4E 4F. Here, if you don't remember the number and all, it's absolutely okay, no problem. Then particulars furnished to be furnished along with the return, what all you should furnish: exempt income, beneficiary, bank account, generic thing, you can go through this. Yeah, and in case you are engaged in the profession and your tax audit thing is coming for you, then of course you have to file the audit report also, and the location of business, style of business, principal nature of business, everything you have to file. Right. Now, we had the voluntary scheme, right? Voluntary scheme of filing the return. Then there is also this income disclosure scheme. In 2016, Arun Jaitley ji launched something called as income disclosure scheme. He came to everybody and said, if you have any hidden income, please disclose now. We will charge 45% tax, right? 45% tax. After that, nothing. 45% tax will charge, 55% you can only keep. No questions will be asked. You will not be prosecuted also. Many people didn't come forward because they felt scared. Because now if I get noted, next time onwards, they'll give me notices. So they didn't come forward. It was a bit of a failure, so to speak. Even though, what do you say, Pani Puri wala, Vada Pav wala had declared 200 crores or something in through that means, crazy. But ultimately, it was a flop show. But there was obviously the people who did not go for it bore the brunt, because this was in early 2016, and on November 8, 2016, you know what happened. Almost 10 years ago, guys, demonetization, right? So that is the scene. But after that, after 3-4 years, they started something called as updated return. So this is if you have never filed a return, or if you have filed also, if you want to file again, updated return is there from 1st April 2022. Anyone who has, whether or not he has submitted or not, he may have submitted normal return, loss return, revised return, belated return, I don't care. You can file updated return within 24 months from the end of the relevant assessment year. So for us, previous year is 24-25, assessment year is 25-26, end of the relevant assessment year is 31st March 2026, from there 24 months, which means till 31st March 2028. Till 31st March 2028, I can file something called as updated return. Updated return. Yes. So updated return cannot be a loss return, guys. You cannot claim income in the old return, and here you cannot claim a loss. This will always be increase in the income. As simple as that. Or decrease in the loss. Loss you had claimed 3 crore, now you are claiming loss 1 crore, no problem. Income you had claimed 1 lakh, now you are claiming 1 crore, no problem. It is always for the benefit of the revenue, not for the SSE. What is the benefit for the SSE? Prosecution and other things will not happen. You pay the fine and you move on in life. That is the simple thing here. Right? Then, one more thing, guys. Search and seizure is happening. People are outside your house, about to raid. Income tax department is about to raid. You know your time is up. Can you open the laptop and file updated return? No. Yes or no? That is so foolish, right? Not possible. Okay? Yes. So when the law search has been initiated, survey has been initiated, not possible. Correct? Basically, and one more thing. In my, you raided my premises and you found gold and money belonging to some other person. I have written there very clearly. I have written there very clearly. I have told 1 kg, 10 kg gold belongs to Unnati. 1 lakh belongs to Varsha. 20 lakhs cash is Hari. 35 lakhs cash is Sudanvas. I'll tell, write like that, all that and give there. So that time I'll call them, all of them and say, this is the, I'll put it on the group only now. Hey, the raid has happened. Can you open your laptop and start filing updated return? No. All this is not possible. See, that is what is given. Books of account seized, money bullion caught from other person, caught in with this person, all that not possible, guys. Not possible. Right? Yes. So basically surveys of many types. Surveys, normal survey, TDS survey. In this section, TDS and TCS survey are not covered. So if you do TDS, TCS survey, you can still file updated return. Okay? That is what it is. That is what it is. So when anything is happening, you cannot open. Search is happening, you can't open and file the updated return. Updated return should come from within, not force. From within only you should feel, okay, something may happen, let me just file the return and close it. It should be like that. Okay, that's what it is. Apart from that, if the AO has, and guys, if the proceedings are pending anywhere, assessment, reassessment, etc., if it has been completed for the relevant assessment year, then all these things I need to see. Proceedings are still going on means I can't file updated return. Basically, I'm trying to tell it's like an income disclosure scheme which has been legalized here in this way. They're telling, boss, you declare your income within 24 months. So I'm giving you time till 31st March 28. On your own, you want to come and tell the truth, come and tell the truth. That's what they're trying to tell. And if the AO has information that you have smuggled certain things, there are Benami properties, you have done PMLA, correct? Black money, undisclosed act, notice you have got from black money law, notice you have got from PMLA, then you can't open your laptop and do updated return. No. It's already been communicated to you, not possible at all. Similarly, you've got some information from abroad. It is called as Tax Information Exchange Agreement or Double Taxation Avoidance Agreement that you know, or TIEA, Tax Information Exchange Agreements. This will happen between you and your country, India, and not some other country, but some other special administrative region. For example, Hong Kong is not a country. Hong Kong is a special administrative region of China. Macau is not a country. Macau is a special administrative region of China. British Virgin Islands is a special administrative region of UK. So these things now will be what? What do you say? The exchange of information between these two places, India and Macau, India and Hong Kong, they are called as TIE, Tax Information Exchange Agreements. So in there also, if I come to know some details saying that in Macau this person's asset so much is there and all that, then also you can't file updated return. Right? Ultimately, I'll have to pay tax. So I'll be liable to pay tax, fee, additional tax and all those things. And whatever TDS, TCS have been already paid will be subtracted and additional tax will be paid. Normal. What is the additional tax to be paid? You see, if updated return is furnished after the expiry of time available but before completion of 12 months from the end of the relevant assessment year. So from 31st March, what is the time available to file the return? All you know that it is final time is 31st December 2025. From 31st December 2025 to what? 12 months from the end of the relevant assessment year. Assessment year ends on 31st March 2026. 12 months is 31st March 2027. So if I am filing between this to this, then I will have to pay 25% of aggregate, that is tax plus surcharge plus interest. You take tax, you take surcharge, you take cess, you take interest, you add everything. On that you will charge 25%. This is like a surcharge only, guys, actually. It's not 25% of everything. It is 25% of tax. Tax on tax is surcharge only, no? This is actually tax on tax on tax, because surcharge only is tax on tax. So when you compute the entire income, you will take the tax, surcharge, cess, and whatever it is, 25% on that is what you need to pay. If you do it after 31st March 27 till 31st March 2028, then you should pay 50% of that amount. This part after advance tax you will understand. This you can ignore now. This part. Then in certain cases, whenever there is a defect, assessing officer will intimate the defect and you can rectify the defect within 15 days. You can just go through, it's not very relevant. Then PAN, permanent account number, they can ask you MCQ questions as to when you should apply for PAN. All the details are here. And also they can ask you when all you should quote PAN in this area. So these amounts, whenever possible, you can just remember. If I am paying for a mutual fund, if it's exceeding 50,000, I have to quote PAN. If I am selling or buying immovable property, if the amount is exceeding 10 lakh or SDV exceeding 10 lakh, I have to quote PAN. If I am opening an account, I have to quote PAN. Getting a credit card, I have to quote PAN. Demat account, I have to quote PAN. I am putting and depositing cash in the bank account. Exceeding 50,000, you know, I have to quote PAN. Like that, sometimes they can ask you an MCQ. Guys, this is pure memory. You can go through all these things. I am going and booking a hotel. I am paying cash more than 50,000. PAN is needed. Right, all these things. And along with that, I have to intimate the PAN. I have to intimate, quote the Aadhaar number also. Aadhaar and PAN are interlinked. And if I do not possess the Aadhaar number, enrollment ID I can use. But now this all this has been removed till 1st October 24. After 1st October 24, you have to quote the Aadhaar number. Enrollment ID is not needed. Then there is somebody called as TRP, Tax Return Preparer. He is not a chartered accountant, not a legal practitioner, not an employee of any company, not a bank officer. Normal BCom graduate can become a tax return preparer. He has to register himself in CVDT as TRP, and then he can actually go ahead and assist anybody in filing the return. Is also useless now. Who should verify that? If an individual himself, if he is mentally incapacitated, then authorized person. Hindu undivided family, Karta. Where Karta is absent from India, any other adult member. Company managing director should verify. E-verification, ITR 5. That is the deal. Then they will ask you this. 234A, delay in non-filing of return, interest at the rate of 1% per month. 234F, we saw 5,000 rupees. But if the amount is less than 5 lakh, then 1,000 rupees. Non-filing of income by a trust, I told you, trust, 500 rupees per day. And then you will pay something called as self-assessment tax. Couple of amendments have come. Guys, I am going fast here because these questions will come only in MCQ here and there. You can also read it fast, no problem. The real deal will come in procedure for assessment 143.2, 143.3, 144, 147. That is the real assessment procedure. These are all like time pass things. But of course, these are also important. You can go through. There's nothing much I can add value here, to be honest, because it's more of theory and more of what you say, memory techniques here. All the important areas I've already covered. Now, I have not claimed an exemption. I have not claimed a deduction. Refund I am supposed to claim, but unfortunately I have not filed the return. Time limit also is over. 31st December is over. I have not filed any return. can I go and beg the CBDT and ask them to give me a chance? Earlier it was not possible, guys. Now I can go and ask for something called condonation. Condonation was possible earlier also, but now they have made the change. That is, condonation is 1192B. So in Finance Act 24, they have added this point for avoiding genuine hardships. CBDT, the Commissioner of Income Tax Appeals, Joint Commissioner Appeals can admit application or a claim. If there's any exemption, deduction, refund which has not been claimed before, he can allow me to accept it, no problem. So this is fine. I've already seen discontinuance. This you will see in assessment procedure. You can ignore now. This is extra point. Same thing is given here. This is the extra point which has been amended. That's it. So the second chapter in assessment procedure would be income tax authorities. So we should know who are the income tax authorities, what they do, what are their powers. At least briefly we should know, because it will help us in writing the answers to those things. Structure of the CBDT. CBDT is the Central Board of Direct Taxes. So guys, it starts from here. Here you can delete this DCITA. So first level is Inspector of Income Tax. Then you have TRO, Tax Recovery Officers. And then you have the Income Tax Officers, ITO. They'll have separate exams for that you can do. But if you write the UPSC exam, you can directly be appointed as an Assistant Commissioner of Income Tax. ACIT, ATIT. Then you have above Assistant Commissioner, you have DCIT and DDIT, Deputy Commissioner and Deputy Director. Then JCIT, JCIT Appeals and JDIT. So those who are looking into the day-to-day functioning of the law and assessment will be your commissioners, etc. Whereas those who are looking into the law part of the entire thing, whether a question of law is properly framed, whether in that particular case have they followed the law in the right letter and spirit, those things are analyzed by the directors. That's why you have commissioner and director separately. The operational part, administrative part is taken over by JCIT, whereas the review part is taken over by the directors. That's the only difference. Otherwise, it's the same, only at the same level. So there used to be only one commissioner of income tax. That's it before. Additional commissioner and commissioner used to be there. It was a lot of work. So recently they have added one more position, JCIT, Joint Commissioner of Income Tax. ITO, Assistant, Deputy, Joint, Additional, then Commissioner of Income Tax, then Principal Commissioner, Chief Commissioner, Principal Chief Commissioner, topmost. Whenever I tell every time AO, that is Assessing Officer, AO, and that will only be these people, guys. ITO, ACIT, DCIT, JCIT, and additional CIT and all those things. So in a faceless assessment scheme, so you have something called as verification unit, which will verify all the data that you have uploaded. Then you have the review unit, which will review the law and whether you have followed the law or not, done by the directors. Correct? So verification unit, review unit, all these people are nothing but AO. So these AOs sit in a centralized way everywhere now, but the centralized office is in Bangalore itself, Bangalore. So basically in the centralized processing center, the AOs will be sitting. It's near Infosys campus. So there, of course, basically in that, but from that particular place across the country, they will send notices. So this is called as verification unit, review unit. All these people now are handled. These AOs only handle all these things. There's an entire hierarchy. Starts from Inspector, TRO, ITO. Then it starts with Assistant, Deputy, Joint, Additional Commissioner, Commissioner, Principal Commissioner, Chief Commissioner, and Principal Chief Commissioner. The entire sequence. And these people here, 1, 2, 3, 4, 5, would be called as the AO, Assessing Officers. They are the assessing officers. Very simple. So these income tax authorities are appointed by, the central government. whereas the lower level employees can be appointed in the respective state because of various examinations. So they will not come through the UPSC route. That is what it is. So CBDT has a statutory body and they will look after all these provisions, whether they can accept provisions, reject provisions. For genuine hardships, can I give them some leeway? All this will be decided by the what do you say, CBDT, Central Board of Direct Taxes, CBDT. The Income Tax Department, the CBDT passes certain circulars. Are circulars, will it override the law itself? No. Income Tax Act, income tax rules, income tax notifications, etc. are part of the law. Circular is just a guideline given to the junior. Circulars are just guidelines given to the juniors for them to figure out that this is the interpretation that you need to follow in letter and spirit. That is the only meaning of circular. Circulars are not binding on the assessees. Circular is just binding on the income tax officers. That is what it is. Then there is a taxpayers charter which just speaks about what are the golden commandments of the assessee, what all he should do, and even the CBDT. CBDT should always help the assessee. CBDT should always, it should never take bribes like that. Similarly here, a taxpayer should always be honest. It's just like a dialogue. It's like a commandment. I have to follow this. That's called as taxpayer charter. Anyway, but the most interesting thing for us is what would be the jurisdiction of an income tax officer? An income tax authority higher in rank, of course, can perform functions which even the lower rank could do. Obviously, the lower rank fellow, his power will be subsumed by the guy on top. So if you are on top, you can do the powers exercised by the guy below also. So the jurisdiction is based on territorial area, which is PIN code, or it can be based on the person, SSE, wherever the SC has its principal place of business. It could be based on the classes of income also. It could be based on search cases, whatever it is. So generally, the assessing officer, if he is vested with a jurisdiction with respect to any carrying on any business or profession, if that fellow is carrying on the business or profession in multiple places, then I will have jurisdiction only over the principal place of business or wherever is residing. And if there's any dispute, then two assessing officers have to figure it out. Guys, all these issues used to happen a lot during physical mode. Now everything has become faceless, so it becomes very easy. And the SSE also can challenge the jurisdiction saying that this person cannot come here, other person should come. This also has reduced drastically because of faceless assessment. In faceless assessment, one assessing officer will send you one notice, that's it. Because now there is no concept of jurisdiction, everything is centralized in Bangalore. That's what it is, right? So this you can just go through, it's not very relevant. But what is relevant, I'll tell you, would be this also we can go through, guys. So basically, what is this? Can I transfer cases when there is a change in the jurisdiction? Yes. When there is a change in the jurisdiction, dispute in the jurisdiction, you can transfer the cases. So guys, I am going fast in these areas because not many questions will come, but nevertheless, MCQ here and there will come and it's self-explanatory. We will go very slow and we will go very in-depth when I start the next chapter, procedure for assessment. That is the real assessment procedure. Search and seizure assessment procedure is real. These are all very easy. So, but we have to do it. So that's why all the important areas I'm picking up, and of course later you will have to read it. Of course, I'll give you time, right? So when an income tax authority is there and a new income tax authority takes over because the old fellow is now transferred or something, then the new income tax officer may demand, the SSE may demand that the case be reopened again and hearing can happen once again. Yes, because you are a new person. Sir, old person who had a different view, sir, you are the new person. Please let me come and share with you my concern. So you can definitely go to the new person answer and talk. But for everything, it is mandatory to issue a notice when there is a succession. Succession means old guy is going, new guy is coming. This also to many extent it is of immaterial now because everything is faceless assessment. The entire assessment is happening by various units called verification units, review unit and all those things. But these four powers are very, very important. You need to remember. The assessing officer has power similar to a court. very deadly. Correct? The assessing officer has power similar to a court. What is the power he has, guys? He can discover and inspect any document. So wherever he goes, he has the power to discover and inspect any documents. Then, if anybody is not coming, he can summon them and enforce the attendance. I can order them to come, just like the court. When they summon, you have to go. You can't say, who are you? You're not the court. They are the court. See, powers as vested in civil code. This is called as quasi-judicial authority. Quasi-judicial, similar to a court. Something which mimics a court. Quasi-judicial authority. Discovery and inspection. Enforce the attendance. I can force the production of books. Compel means to force the production of books. And I can also issue commissions. Means what? I can call witness to appear, record statements and all those things. I can ask the witnesses to appear before me. All that is possible. So powers may be exercised irrespective of whether any proceedings are pending. So if income tax authority has reason to suspect that income has been concealed or is likely to be concealed, then I can ask for inspection. No problem. I can make an enquiry also. I can make an enquiry. I can ask another country to send me details with the permission of the authority. I can seize the books. These are all general powers. Important to know. I can seize the books. For how long? For maximum period of 15 days. Can I seize the books for more than 15 days? Yes, with the permission of CCIT and CIT. If powers are not given in other sections, I can use this section. If powers are given in other sections, then I have to follow other sections. If powers are not given in other sections, I can use this section. I can impound the books for maximum how long? 15 days. Can I go beyond 15 days? Yes, with the prior approval of CCIT or CIT. Then I can call for any information, guys. I can call for the name and address of the partner, name and address of the members of HUF. I can ask for everybody with whom you are paying salary, etc. Everything for the, to the tune of 1,000 rupees or more. I can ask all the details. I can ask details from the broker, agent. If your agent you have, I can ask the details. I can collect information under 133 and ask for information from other countries, tax information exchange agreements, everything else. If no other power is given in other section, can I enter any building? Yes. Can I enter a building where it is falling within my jurisdiction? Yes. Can I enter during business hours? Yes, I should enter only during business hours. Can I seize any book, remove any book, etc.? No. I cannot remove any other book. I can only impound documents if permission is given. I can inspect and make copies of all registers, no problem. I can call for information. I can ask any data from anybody, no problem. I can make inquiries. And you see, all the things before income tax authority will be judicial proceeding, as if it's a court. Deemed to be judicial, means it's like a court. I can go to a chartered accountant and say, please disclose everything about your client. I've got an order under 138. The board or any income tax authority by general or special order may furnish information relating to the SSC to any other officer, authority under law, time being in force. I can go to the CA and say, please break your confidentiality. You can break, no problem. Apart from that, I can go to SEBI officer and say, sir, you have done some analysis on this guy. Please give me the data. Or I am sharing you some data. One of my clients got caught in DT because there was a raid in GST. They found 40 lakhs cash in his bank account locker, which they found, which was not recorded. So they said GST is not paid on that. That information they passed on to income tax department. Income tax department raid also happened. There they again found some 75 lakhs in two other lockers of their wife and the son. See, details I am telling exactly because I have worked on these areas. Right? And they become clients after all this golmaal has happened to figure out how to end this. Now everything has now become the faceless collection of information. These two chapters, first two chapters are very easy. That's why I've gone fast. Yes, now let's come to assessment procedure, procedure for assessment, and try to understand how things are. So first of all, guys, whenever anything that I am doing as an assessing officer, before even making an assessment, I should inquire. The first part of the story is called Enquiry before assessment. Enquiry before assessment, section 142. So if the assessee has not filed a return within the time allowed under 139(1), then AO may issue a notice requiring him to furnish a return of income. They have used the word may issue. Correct? So, for example, if I date it 2/12, I send it 5/12, and you receive the notice on 7/12. 7/12 is the date when you say it is served, whereas 5/12 is the date in which you can say it is issued. It is not the date of the notice, general rule. It is not the date of the notice, it is the date of sending the notice. That's called issue. Whenever they tell that the notice has to be served, it means it is the day when you have received it. Because of faceless assessment now, because everything is sent via email now, the date of sending and the date of receiving both are the same. The date of sending, that is issuing, and service both are the same. 5th and 7th will be the same. It will always be 5th only now because it's sending via email. Otherwise, 5th and 7th are different, obviously. Sending via post. Now no longer post etc. is there anymore. So guys, if I have not filed the return, due date is over. There are two routes available. One is persons are required to file and has not filed. One route is the 142.11 route, whereby I will say, if you have not filed, basically I'll give you a notice under 142.1. And if you have not filed, then directly I can go to best judgment assessment. There will be a penalty of 10,000 rupees, rigorous imprisonment of 276D, 1 year, and 234F, 5,000 rupees you will have to pay. Or directly you can go for best judgment assessment, guys. But if you are not required to file only, I'll again issue a notice to file. And then if you have not filed, 1 plus 2 plus 3 will come, 4 will not come because you are not required to file. 234F will come when you are required to file but you didn't file. Got it? So 142.1 is an enquiry before assessment. And when will this be activated? If you have not filed the return. If you have filed the return, 142.1 will not come. Let me be very clear on it. You should not have filed the return and due date is already over. Means 31st December is already, the due date of filing the return. 31st October is over. 31st July is over. Then persons required to file the return who has not filed the return, 142.11 route will happen, not filed. And best judgment assessment route, 144 will happen. Directly best judgment assessment will happen, or before that 142.11 also will happen. Practically this only happens, guys. Best judgment is later. First only they will ask you, please file. Then also if you don't file, no, then I'll do best judgment assessment. Best judgment assessment as a bypass route. Directly I can go to 144.1A. But this is generally not followed. First I'll give you an opportunity. Sir, you have not filed. Why have you not filed? Kindly file. If you don't file, then also, no, if I'm asking you to file and you don't file, that is really, too much. That time I will do all these 4 items. No mercy. On the other hand, if you are not required to file only, still I am asking you to file because I have a doubt that you are supposed to file. Then also if you not file, 1, 2, 3 will come, 4th one will not come. And guys, I will also ask you to produce the books of accounts, but that will come only after another section. We will see that later. So there is no time limit for sending this notice under 142.1, guys. This one. Is there any time limit? Actually, there is no time limit. However, practically it is 6 years because books of accounts to be maintained under the Income Tax Act for 6 years anyway. But anyway, how many years? In another section, they have given a time limit in a different way. They are saying previous years and 3 years preceding previous years. These books can be, what do you say, previous years books of accounts, etc. I can send a notice asking you to file the return. So I can ask you to file the return of 2024-25, or I can ask you 23-24, 22-23, and 21-22. This previous year and 3 previous years before. 21-22, 22-23, 23-24. The notice under 142.11 regarding the production of books can happen in these times. Which means which year's accounts can be opened? These year's accounts can be opened, and I can ask you to file the notice. I mean, I can give you a notice to file the return. Assuming you have not filed, due date is over. Right? So that is the deal. And then the special audit you leave, later we'll see. These two later. The moment it is done, what do you say? This is one part of the story. Okay. Yes, so that is regarding 142.1. Now, after this notice is sent, you give a, what do you say, return, then it's fine. Otherwise, also you will file a return normally, right? Whether you file return normally within the due date, or you file the return after the due date as a belated return, or you do a revised return, or you file a return based on the enquiry before assessment. Because here they will tell you, asking you to furnish the return of income. Whenever you file a return, first thing that automatically happens is called as processing of return. So this special audit, and this we'll see later, guys. Processing of return. Intimation, deemed intimation, 143.1. That is what's going to happen. 143.1 is going to happen. Right? So that's called as a summary assessment, 143.1. Immediately what will happen? Processing will happen or intimation will happen. Based on what? Either a 139.1 return within the due date or 142.1 return. Based on whatever notice I have given, if you have filed a return, this will happen. And generally after this, CBDT will, basically what will the processing happen, guys? Processing will happen if there's an arithmetical error, incorrect claim if it is there. If some loss has been disallowed, they will say why it is disallowed, it is not filed. And expenditure, etc. has been disallowed because of some, audit report. Audit report says that expenditure should be disallowed, but you have taken it into account. So they will catch that. Everything is technology driven. So all the things are in place. They will figure out if there is an arithmetical error, incorrect claim. For example, HRA, you have claimed amount, but the thing is you have not, what do you say, attached the landlord's report, landlord's PAN and all those things. So automatically it will say it's an incorrect claim. Then what do you say? In your audit report, they have clearly mentioned this particular expenditure has to be disallowed, but you have already allowed it. So that automatically they will disallow. It's all system driven. Then under 10AA, etc., some income, a deduction you have claimed, but it is not supposed to be claimed because you have not followed the rules. So you have not filled the return properly. Automatically it will process and keep adding back or subtracting from the income, and it will throw the figure. So there will be two columns. One column where be whatever you have filed. One more is as per 143.1 what it should be. There will be difference. There will be no difference also sometimes, which is good, or there will be difference also. That is 143.1. Right? So the thing is, what happens generally is, of these cases, no, after the CBDT picks 3 to 5% in these cases for scrutiny. So basically, the processing of return should happen mandatorily. Scrutiny will happen after this. For example, if the refund is more than 1 crore, exemption is more than 10 lakh, Chapter 60 reductions, you have taken 50 lakh, no problem, you take, but show me the proof. For the proof, scrutiny assessment will happen later. Scrutiny assessment is your regular assessment under 143.3. So summary assessment means a quick assessment happens under 143.1, and in that 3 to 5% is picked for scrutiny assessment based on certain parameters of the department, right? So, if, for example, previous year 24-25 assessment 25-26, due date is 31st October, and you have filed it, end of the financial is 31/3/26, 9 months. 9 months is the time, and the last date before which intimation should happen is 31/12/26. Before 31/12/26, the intimation under 143.1, they should pass this 143.1, they should send you that mail. It has to be passed before 31st December 2026. So basically the thing is, as I told you, processing will happen, and based on whatever you have filed, after this scrutiny assessment they'll pick up. Before that they will send you a notice under 143.2. Guys, 142.1 notice is enquiry before assessment. They will ask you to file the return there. It is not an assessment, it's enquiry before assessment. They will ask you to file the return there. If you file, it will be processed under with section 143.1. After that, if it is picked for scrutiny, one more notice, scrutiny notice of 143.2 will be passed. And then assessment will happen under 143.3. I hope you understood the entire sequence. So 143.1 is possible for everything. For what? Where loss return is filed, incorrectly expense you have claimed, incorrect deduction you have claimed, tax audit has happened, and tax audit observations are different. But 143.1 is not possible if there is a Supreme Court judgment. For example, you have allowed an expenditure, and after you have filed the return, Supreme Court has come out with a judgment saying that this kind of expenditure must be disallowed. Can 143.1 highlight that expenditure and disallow it? No. 143.1, there is no human intervention practically. It is system driven. System will not take into account a recent Supreme Court judgment. So 143.1 is not possible for Supreme Court retrospective amendment. For that, what I should do? Normal scrutiny assessment should happen. Got it? So I again repeat, if you directly file on your own, no problem. If you do not file on your own, I will do an enquiry before assessment under 142 and ask you to file the return. The moment you file the return, whether in the first route or the second route, it has to go through the processing. And from the processing, some items will be picked, some returns will be picked, which will go for scrutiny. Before scrutiny assessment, now I'll give you a notice formally. That notice is 143.2. And then scrutiny assessment will happen under 143.3. That's a different procedure, we'll see later. But did you understand the intimation? Yes. Right? So basically you will have a intimation or deemed intimation. So here, for example, based on 139.1 and 142.1, based on this, what will happen? Intimation will happen. When they don't respond to you only within 9 months, see, you should get the intimation within how many days? 31/12/26. If you don't get it within 31/12/26, then what will happen? That is called as deemed intimation. It's automatic. If you have something to say, you reply to me within 31st December. If you don't have anything to say, I will assume everything is okay. That's all. So based on this, 143.1 will happen, 143.1 deemed intimation will happen, and 143.2 notice can be issued anytime. 143.2 notice is what? Scrutiny assessment notice. Scrutiny assessment notice. Right? Now the question is, in 143.1, I had shown an income of 10 lakh, but 143.1, in the, they have made some arithmetical error changes, etc. They are showing me 13 lakh as income. They are showing me that you have taken everything wrong. My question to you, which they're asking the exam, is can you appeal against this? You're like, what is this nonsense? I have shown 10 lakhs everything properly. You are simply saying 13 lakhs. Can I appeal against it is the next question. Can I appeal against this particular intimation or deemed intimation? Guys, orders can be appealed. Intimation, etc. Can it be appealed is the question? No. 143.1 is not an assessment order. 143.1 is just an intimation. Appeal can be filed only against an assessment order, mind you. Right? And one more interesting thing, the return only is not filed. The return is filed, 143.1 will automatically happen. If return is not filed, what will happen? I already told you, 142.1 inquiry before assessment will be issued to you. In that inquiry letter, they will say, kindly, what do you say, give your return. Kindly file your return, like that they'll tell. Correct? They may ask you to produce the documents also, but after everything, guys, what happens? Scrutiny notice. 143.2, scrutiny assessment 143.3. Now the question to you is, even if you issue 143.2, is 143.1 processing mandatory or not? I already told you in the beginning, 143.1 is mandatory. Right? I told you here, only after this 143.1, some may be picked up for scrutiny. Can you bypass this procedure? Even if you bypass, I don't care. 143.1 is mandatory. I directly filed my return under 139.1. 143.1 is mandatory. I didn't file my return under 139.1. They sent me enquiry before assessment under 142.1, requesting me to file the return. And when that process was happening, they also sent a scrutiny notice, which is possible. That's okay. But after I file my return, after you sent me an enquiry, I'll file the return. After that, is it mandatory to have 143.1? Answer is yes. So if you see, 143.1 is mandatory even though 143.2 is issued. You need to remember that 143.1 is mandatory. Can I ask for revision of intimation? Means if I feel something is a mistake, I can't appeal, obviously. I can't appeal. But can I ask for revision? Yes. Under 154, I can go for revision. To Commissioner of Income Tax Appeals, I can go and ask for revision. Or Commissioner of Income Tax under Section 264, I can ask for revision. So aggrieved SSE can now go for 152, 154, Commissioner of Income Tax against 143 intimation, where at the National Faceless Assessment Center, centralized National Faceless Assessment Center. Now in 143.1, there is a refund possible. Then immediately it is picked for scrutiny, and under 143.2 and 143.3. 143.2 is scrutiny notice, 143.3 is scrutiny assessment. 143.1 gave me a refund, but 143.2 and 143.3 assessment is still going on and it may result in tax payable there. Possible. Can assessing officer withdraw the refund? Can assessing officer withhold the refund, not withhold the refund? Here under 143.1 I was supposed to get 2 lakhs. But then in the scrutiny assessment, they are telling tax payable is 1 lakh. So until everything is settled, can I withhold the refund? Yes. A new section has been inserted, which we'll see. Right? So that is regarding 143.1. That is regarding 143.1. Intimation or deemed intimation. So guys, I hope you understood. General rule, guys, whenever any scrutiny assessment is happening under 143.3, penalty also will be levied, which is the tax. When they make a demand, no, it should be followed by a demand notice under 156. Understood? Whenever there is a scrutiny assessment under 143.3, there will be a demand. The demand should go with a notice of demand under 156. But under 143(1), if I say that you need to pay so much amount, what did I tell you? And repeat. First, either you will file under 139(1), you will either file it or you will not file it. If you file it, 143(1) should happen. And based on, and here if they say tax is payable, or if you file it, 143(1) will happen and there is no change here. But in both cases, 143(2) may happen. This is scrutiny notice. From scrutiny notice, it will go to 143(3) scrutiny assessment. The scrutiny assessment, if payable comes, it should go with section 156. This is called demand notice. This is normal. But in this particular case, my dear friends, I just want to ask you that in this particular case, wherever tax payable is there, I should give a demand notice. No? Will 156 come here also is the question. The answer is no. Because 143(1) is a deemed information. 143(1) is a deemed tax demand. Sorry, deemed tax demand. Deemed demand. No need of 156. No need of 156. You see, if you check the Bear Act, if you open 156, see, where the any sum is determined under 143(1), intimation under those subsections shall itself be deemed to be notice of demand. That's all over. So in this particular case, this tax payable mentioned here only is deemed notice of demand. And if you have not filed the return also, I can ask you to file under 142(1). After this also, 143(1) is mandatory. That's what I'm trying to tell. Hope you understood. So yes, guys. So hear me out. First and foremost, there can be something as enquiry before assessment. This is called enquiry. When will this happen? When you have not filed return of income. Due date is also over. Then you can give an enquiry. In this, you can ask for filing return. You can ask me to file the return. Very simple. Then when I file, I will file as per the date given there. No problem. Whenever I file a return, processing of the return is mandatory. Processing should happen. It is 100% mandatory. And in this processing, there might be tax payable, there might be refundable, or there may be no change. They may agree. If it is no change, good. If it is refundable, will you go and appeal? No. If tax is payable, then First of all, there is no, what do you say, appeal. Can you file an appeal? No. Second, only you can ask for a revision petition, revision application. You can go to Commissioner of Income Tax, Appeals, and also Commissioner of Income Tax under 154 and request him to revise it. That's all. There is no appeal. I cannot go and fight. I can only request. Revision is an application. I cannot appeal, mind you. Third one. No separate demand notice needed. 143(1) itself is deemed demand notice. Very simple. Understood? So this is when there is enquiry and then later intimation. Apart from that, this is normal. Apart from that, correct, this is normal. So you just listen to me, then I'll give you time, right? One more route is possible. I will file everything on time properly, no problem. I'll file properly under 139(1). Even after this, 143(1) should happen, processing of return. Correct? It will get processed. And the same procedure here, when the return gets processed, this star procedure, same star procedure will work here. Same. Now from all the returns which are being processed, generally, when the returns are being processed, 3 to 5% of the cases, they will pick for scrutiny. When they pick for scrutiny, two things will happen. First, a notice will go out. Notice is under 143(2). They'll give a notice saying that please fulfill this entire section, finish it. Please, I need some more documents. I need some more data. Whatever you have filed is okay, but I need something more. Please file another return. Please give me some documents. All that I will tell. And then, so basically in the notice, I will ask for documents. I will ask for more data. I may ask for one more return, whatever. I'll say these are the items that I have, consider this and give one more return. And based on how you respond to the notice, if there is response or if there is no response. If there is response, then assessment will happen under 143(3). This is called as scrutiny assessment or regular assessment. If there is no response, then 144 best judgment assessment can happen. Best judgment assessment. That's all there is to it. They are trying to tell when the processing of return is happening, okay, you have filed the return, no problem. Let's say you have not filed the return, I have asked for the return and you are still filing. Even after you are filing the return, let's say this process is still not happened, this process is yet to happen. Can I directly give any return when it's processing or anything that is happening? Directly also I can give 143(2) notice. 143 notice can happen. The question here was, should 143(1), is it mandatory? Yes. Sometimes what? 143(2) can start before 143(1), no problem. But I just want to say 143(1) is mandatory and it has to happen. Suppose you don't get it within 9 months. You don't get it within 9 months, then whatever happened only is called deemed intimation. So there's no, they didn't intimate you. That itself is what? Deemed intimation. Now, did you understand, guys? Yes or no? Good. So now let us discuss scrutiny assessment. We are done with inquiry before assessment under 142. We are done with deemed intimation or intimation under 143.1. So the next process is scrutiny assessment under 143.2 and 143.3. You see now, notice for making scrutiny assessment. So before the assessment under 143.3, a notice has to go under 143.2. When will the notice go? When the assessee has filed the return under 139.1 normally, or in response to 142.1. The assessing officer shall serve a notice for regular assessment on the assessee under section 143.2, specifying the date on which he should either attend or produce evidence. Now this attend here is now actually become faceless. Via email, he has to send all the documents. So my dear friends, as I told you, if you are a person, you can either file your return under 139.1 or you don't file. You're supposed to file, but you don't file. And if you don't file now, they can give you an inquiry before assessment under 142.1 where you are now required to file return. So in both the cases now you have filed a return. Now in both the cases what can happen? 143.2 scrutiny assessment notice can go, and then 143.3 scrutiny assessment can happen. But important to know, somewhere in between, for both the cases, 143.1 is also mandatory. Intimation here also. That is what we saw. Whether 143.2 happens or not, I don't care. 143.1 is mandatory. This is the entire process. You file the return under 139.1 or you file the return under 142.1. Either way, 143.1 is mandatory. There was a case where they directly gave 143.2 without doing this. Is it correct? No, it is not correct. Correct? 143.1 is mandatory within 9 months from the end of the financial year. Here, from April 1st, 2017, it is mandatory to issue intimation even when a notice for scrutiny assessment has been made under 143.2. Hope you understand. 143.1 is 100% mandatory. Simple. Now, let's see. Notice under 143.2 cannot be served on the SC of the expiry of 3 months from the end of the financial year in which the return was filed. 3 months from the end of the financial year in which the return was filed. For the previous year 24-25, let's say I will file the return on 31st December 25. What is the end of the financial year in which the return is filed? 31st March 26. Then 3 more months. April, May, June. Before 30th June 2026, you have to serve the notice under 143.2. Remember, time limit for 143.1 is 9 months from the end of the financial year in which return is made. Correct? So here, if for previous year 24-25, the return is filed on 31st December 2025, End of financial year is 31st March 2026. This should go before 30th June 2026. Whereas this should happen before 9 months. 31st December 2026. That is what I am trying to tell. It is not mandatory for 143.1 to come before 143.2. I repeat, it is not mandatory for 143.1 to come before 143.2. But because 143.2 has happened, you cannot ignore 143.1. You see the timeline here. 9 months from the end of the financial year in which return is made. Return of income was filed on 13/23. Intimation cannot be sent beyond 31/12/24. Same here also. Maximum time is this one. It should be done before this. So if you see here, this should come early, no? Intimation can come early also, no problem. There is no hard and fast rule that 143.1 should come and then 143.2. 143.2 can happen, but then 143.1 is mandatory. Both are mandatory. Hope you got the point. So you have to give a notice, guys, otherwise not possible. So some of the other points. And they have given the dialogue notice should be served. I told you the difference between issue and serve. But in the current context, it is immaterial because everywhere, I mean, when you issue, it is automatically served because of online. So 143.2 is served only to ensure that income is not understated, loss is not overstated, and tax is not paid less. These are the only three things. 143.2 cannot be for the benefit of the SSE. It is initially for the benefit of the revenue. So when I serve it, I will serve it when I feel that you have understated your income, you have overstated your loss, or you have paid less tax. To ensure these things are not done, you will do 143.2. But after the notice is served and I'll ask you to produce documents and then you give me the documents, then after that 143.3 can be what? Income can be reduced in that. You initially told me that income should not be income you have overstated. Sorry, income you have understated. I will give you proof that income is correct. And in fact, I will say, sorry, sir, I have given the wrong thing. My income should be less than what it is. I had declared income of 20 lakhs. You are telling it should be 25 lakhs. I'll give you all the documents. There I come to know by mistake I've made it 20 lakhs. It should have been 18 lakhs. No problem, allowed. So the initial intention of the what do you say, tax, the department is to ensure that you have not cheated. But once you show them the truth, then they can say, okay, sorry, no problem. Let's go back and maybe I will give you more benefit now. So they may increase the loss also. CBDT has told that very clearly. So 143.3 is called as a scrutiny or a regular assessment. It can benefit the SSE also, benefit the revenue also. But 143.2 notice where there's an intention to benefit the revenue. But 143.3 after the truth is out, it may benefit the revenue also, it may benefit the SSE also. However, in a best judgment assessment under 144, in a best judgment assessment under 144, income can be reduced, loss can be enhanced, not possible. Income reduction, loss enhancement, not possible. 144 benefits only the revenue. 144 cannot benefit the taxpayer because it's an income escaping assessment. That will come under 147. 147 also very clear, income escaping assessment. But best judgment assessment under 144, there is confusion. In 147, wordings are very clear. Income escaping assessment. There it is obvious. It can never benefit the taxpayer. Scrutiny assessment can benefit the taxpayer also. But what about 144? Best judgment assessment. There also hidden in the words are what? Best judgment. When will you make your best judgment? When you don't file anything. When you don't file anything, why will I give you benefit? Hope you got the point. So 143.3 can benefit the revenue as well as the department. Sorry, as well as the taxpayer. 147 income escaping assessment will never benefit the taxpayer because you have cheated. 144 also you have cheated, because not cheated, you have basically not bothered only to file the return. When you are not bothered to file the return, why should I give you benefit? So 144 income cannot be reduced, loss cannot be increased, 144 only benefits the revenue. So general procedure, I will file a return under 139.1 or 142.1. Return will be filed. Intimation will come first. General procedure I am saying. Then the scrutiny notice. But sir, if 143.2 generally happens already, no problem. 143.1 also should happen. This should the procedure generally which should happen. But if it doesn't happen also, if 143.2 comes first, intimation should go properly. This should happen before December. This should happen before June of the same year. This is the general procedure. Let me be very clear. But by mistake, if this goes first, I cannot say that this will not come. From April 2017, Arun Jaitley ji had inserted that point that intimation is mandatory. It's in the law now. And once notice of scrutiny is given, then I will call for physical meeting is no longer there, guys, because now everything is faceless. 2 clause 23C, everything is electronic mode. And 282A, submission of the documents electronically. Correct. AO's name also will be given, that is deemed to be the signature. There is no signature, nothing now. Earlier they used to send a letter with a signature. Now they will give his name. Gayatri Murthy, Assistant Commissioner. That's it. That is only signature. An email will come. If you have given wrong email ID, it's your problem. It's not their problem at all. They will send it to the email ID which you have given in the return. That's it. If you have given the wrong email ID, nothing can be done. It is deemed to be served. So 282, submission of documents electronically. AO's name will be given, deemed signature as per the National Faceless Assessment Center. Then couple of other points. My name is Punarvas, and so many times people have made a mistake. Some people have called me Purnivas. Some people have called me Punarvas. Some people have called me Poonam. They have made me girl, Poonam. One fellow was the best. Punarvash, it seems. What you will wash, God only knows. Wash away the sins. Right? Then one more fellow said Punarvas. WAS. I told sir, after I die, you call me. Because it will be Punarvas. Correct? Anyway. So, what I am trying to tell is, it's a very, different name that I've got. It's the star of Lord Rama. Correct? Punarvasu Nakshatra. So, the thing is, my parents, I was born in that Nakshatra only. My parents used a lot of creativity. And they said, I don't know what to name. Let's name after the Nakshatra only. Anyway. So, but I have seen, this is all happened to me only. Purnivas, Poonam, Punarvas, Purnimavas, whatever they want, they have put my name. Now, that income tax officer also has seen my name, like, what is a strange name? He has put some name like Poonamvas and all those things and send it to me. Is the notice valid? Nirmala madam is not taking any chances. Under 292B, she is telling, even if there is a mistake in the name, notice is valid, deadly. Then one more thing, guys. Tell me, this 143.2 notice, no, should be sent before 30th June. We saw 30th June 2025. What if they send it on 30th August? 30th August, they have asked me to send all the documents. They should have sent it before 30th June. They have told me on 30th August, please send the documents. Instead of seeing the timeline, like a fool, I have sent the documents. Are the proceedings valid? This went to court. Court said, no, proceedings are not valid because it is time barred. Anything time barred is not valid. But the beauty is, They inserted a section for that also. 292 BB, important. They said, even if the notice is time barred, even if the notice is time barred, if the SSC attends the hearing, deadly. The SSC attends the hearing, it is deemed to be valid. Crazy stuff. It is deemed to be valid. Guys, can I serve 143.2 if return only is not filed? Can I serve 143.2 if return only is not filed? No. If you see the dialogue of 143.2 only when you file a return, either under 139 or 142.1. So, passing a 143.2 notice when the return only is not filed is 100% invalid. There are two routes available. One, enquiry before assessment. We have already seen that. I can ask him to send a notice now. Send a notice asking me to file the return, or directly best judgment assessment. Directly what? Best judgment assessment. We have seen this here, remember? You are supposed to file, but you have not filed. I can go for 142.1, or I can directly go for best judgment assessment. Same thing I am telling. So if you have not filed the return, 143.2 scrutiny notice is not at all possible. 143.2 is not served. Directly 143.3 is initiated. Void ab initio. Void ab initio. 143.2 time limit should be served within 3 months from the end of the financial year in which its return is made, then only it is valid. If it is served after time, void ab initio, except 292 BB. What is 292 BB? If you actually attend the hearing. So, this one, last return file 31/12/24. This is, let's say, assessment year 24/25. End of the financial year 31st March 25. 3 months. 143.2 should happen before 30th September 2025. And this is the notice time. When should the assessment be completed? When should the assessment be completed? So let me kind of change this example. Let me make it assessment year 25/26. So assessment previous 31/3/25. Assessment year 25/26. Due date 31st October 25. Last return filed, late return filed 31/12/2025. End of the financial year 31st March 2026. 3 months 30th June 2026. And 143.3 assessment. The assessment should be completed as per the timeline under 153, 12 months from the end of the assessment year. 12 months from the end of the assessment year. When is the assessment year? My assessment year is 25/26. 12 months from the end of the assessment year is 31st March 26 plus 12 months, 31st March 27. So 143.3 should be completed before 31st March 27. So there were different dates given before. All that you can ignore, guys. There are different name. Now it is very simple. 12 months from the end of the assessment year. That is 143.3 should be completed by 31st March 2027. So there was a case of Maruti Suzuki when they amalgamated. Amalgamating company was Suzuki, amalgamated company was Maruti. Let's say the return of income was filed on 28/11/2019. High Court approved the amalgamation on 29th January 2020 with retrospective effect from 1st April 2019. 143.2 was issued to Suzuki on 6/6/2020. Guys, when did the amalgamation happen? 29/1/2020. On 6/6/2020, they issued a notice. Was Suzuki in existence on 6/6/2020? No. But Maruti attended the meeting. Maruti attended the meeting. The assessing officer said 292 BB, it is valid because even though it is time barred, you attended the meeting. But it went to the Supreme Court. 292 BB will apply only if the SSC is existing. On 6/6/2020, first of all, you sent a late notice. SSC was not at all existing also. SSC was not at all existing. When the SSC is not existing, how can you send a notice? Right? SSC was served on non-existent SSC, hence it is void ab initio. This was a small case. (142)(1). I am calling for return of income, books of accounts, information. This is what enquiry before assessment. And this is scrutiny notice. This is enquiry before assessment. This is scrutiny notice. In 142(1), I can call for return of income, books of accounts, information. Assessment is not possible under 142. It's just an enquiry before assessment. Notice can be issued even if the return of income is not filed, obviously, right? 142(1), I'll give you a notice because you have not filed the return of income. There is no time limit of 142(1). We saw that also. 3 years before data you can ask for, but when should you ask for? No time limit given. Here 143(2) is what? Notice for regular assessment under 143(3). It is a 143(3) assessment. It is notice for regular assessment, and then assessment will happen under which section? 143(3). Return of income has to be filed, guys. And when can I give this 143(2) notice? 3 months from the end of the financial year in which the return of income is filed. Hope you understood. Then if you see here, these are the other points which are here. After taking into everything, I will give an order of assessment after all the evidence, etc. So basically they are trying to tell, these are generic point. In case of a research organization, news agency, etc., assessing officer will give effect to all the provisions, and then if there is anything, any problem where the research association which has taken exemption is not following the rules of exemption, I have to intimate to the central government. Similarly, university or trust, etc., where they have got exemption, if they have claimed exemption in a wrong way, I have to approach the central government and say, sir, this you have approved these institutions to get exemption, but they are not following the rules properly. For example, they are not supposed to invest in stock market. All these people are investing that extra money in stock market, sir. I should go and approach the central government for that. And finally, I should give the order within 12 months. We already discussed. Yeah. So as I told you already, 143(3) is happening means whatever you have paid in 143(1), that will be adjusted. That's all. So we discussed, that's about 143(2) and 143(3). So we are done with 142, enquiry before assessment. Then 143(1), that is intimation. And then scrutiny notice under 143(2). Scrutiny assessment under 143(3). I told you one thing, under 143(1), there is a refund, but automatically 143(2) and 143(3) have begun. When we were doing 143(2), I asked for some documents, you given me some documents, and later I am realizing as an assessing officer that, hey, this will become a tax payable case. So in the interest of revenue, can I withhold the refund which is given under 143(1)? Answer is yes. Earlier there were two sections, 241 capital A and 245. 241 capital A and 245. Now they have merged everything into 245. New 245 has come. New 245 has come. So, the Finance Act 23 has substituted Section 245 by merging the existing provisions of Section 241A and 245. The amended provision of 245 is applicable with effect from assessment year 23-24. It came in 2023 itself. Withholding of refund and set off of refund. So, can you withhold? Yes. And can you set off? Yes. So, if you see, amended provision, 241A shall not apply from 1st day of April 2023. Amended provision, this is the amended provisions. Where under any of the provisions under this Act, a refund becomes due or is found to be due to any person. Assessing officer or commissioner, principal commissioner or chief commissioner or principal chief commissioner, as the case may be, in lieu of payment of the refund. In lieu of means instead of paying. Set off the amount to be refunded or any part of that amount against the sum, if any, remaining payable under this Act, after giving intimation to such person in writing of the action proposed to be taken under this subsection. Very simple. So very simple. They are telling what? That this refund will not be given to you. It will be withheld. Correct? So see the pointers. Refund can be due to any person under any provisions of the Act. A refund arising from the payment of excess tax, tax paid under protest, giving effect to an appeal, whatever it is. So one place there is a refund coming, and here there is a tax payable because of many reasons. The order for, and then again set off. Set off of refund should be passed only by the assessing officer or that commissioner, whoever it is. And you can set off the entire amount. I have a refund due under Income Tax Act, but there's an amount payable in PMLA, money laundering. Can I set it off? No. Point number 5. And the sum should be payable to the by the person to whom the refund is due only. Mr. A has payable 1 lakh. Mrs. A has refund of 2 lakh. Can I set off Mr. A and Mrs. A, husband and wife? No. Point number 6. And you should give a intimation before that. Partnership firm is there, and partnership firm has a tax payable. But partner in his individual capacity has a refund. Can I set it off? No. As already discussed, it should be the same person. Person here means firm's refund can be adjusted against the firm's payable. Just because there is no difference between the partner and the firm, and it's only a fiction created by law, you cannot take it like that. So it was a Allahabad case law. Baljit Singh Bakshi was the assistant commissioner. Now, one more thing can happen. There is a refund due 5 lakh refund. There is a payable 6 lakh. Can I adjust it? But this one, no, payable 6 lakh. I have gone to the High Court and asked for a stay order, and the High Court has granted a stay order. If the High Court has granted a stay order, if the High Court has granted a stay order, can you still do the set off? You see, yes, tax dues of the firm cannot be set off against refund due to the partner in his personal capacity. It is not open to the revenue to adjust refund for recovery of tax which has been stayed. Sorry, point number 9. Right? Yes, and again, where a part of the refund is set off under the provisions of subsection 1, or where no amount is set off and refund becomes due to a person, having regard to the fact that proceedings for assessment is still pending. This is one more thing. This is what, guys, 245.1 is what? Where on one side refund is due, on the other side amount is payable. 245.2 is what? Refund is due for sure and I have not adjusted against payable, but proceedings are going on now. And the assessing officer feels that, sir, as per the proceedings, I feel it will be a payable. So in the interest of revenue, can I withhold? That is one more thing. This was earlier in 241A. Everything is shifted to 245.2. So yes, in the first case, both the proceedings are done. In the second case, refund is due, but proceedings are going on. That is 143.3 procedures are going on, for example. And then I feel, sir, according to me, sir, 100% payable will come, sir, because the proceedings are still pending. And sir, I feel in the interest of revenue, I should withhold, because if I pay him now, it will adversely affect the revenue, sir. And I'm going to record the reasons in writing also. Kindly withhold the refund possible. Proceedings must be pending. Prior approval has to be taken. And see, point number 8 is interesting. Section 142.1 notice is served. What is this 142.1 notice? Enquiry notice. Enquiry. In enquiry, I will ask you to file the return under 142. I'll ask you to file the return. You have to immediately file the return. Is enquiry before assessment actually assessment? Here when I say proceedings are pending, that was the question. Proceedings are pending means if I give an enquiry under 142.1, are the proceedings pending? No. Proceedings will be pending only when you give a 143.2 notice or a 144 notice. Best judgment assessment also you'll give a notice. If you don't give those notices, just an enquiry before assessment will not make it. Issue is pending. That's what it says. 142.1 notice itself would not amount to initiation of assessment proceeding. For that to happen, it should be 143.2 and 143.3. Similarly, 144. 142.1 notice is not initiation of proceedings. Even an intimation under 143.1 cannot be proceeding assessment proceedings. Intimation, unlike a notice under section 143.2, cannot be set to initiate assessment proceedings. These are the provisions. You can just go through that later, okay? And when after 144, you can go through this also. Got it, guys? This is an amendment as per Finance Act 23. 241 capital A, one section was there, and 245 are there. Both are merged into section 245. Very, very simple. Now, let's go to Best Judgment Assessment, BJA, Best Judgment Assessment. So, guys, 143.2 notice is given. one notice that is given, no, it can directly go to 143.3 assessment. Obviously. What, before you make an assessment under 143.3, you have to give a notice under 143.2. Otherwise, it's not valid. Before you give a notice under 143, what do you say? Before you, make an assessment under 143.3, you should give a notice under 143.2. Similarly, before you make a best judgment assessment under 144, you have to give a show cause notice under 144. In all the cases, show cause notice is needed except one case which we'll discuss. In one case, show cause notice is not needed. Directly you can go to 144. One more type of assessment is income escaping the assessment, 147. Income escaping assessment, 147. When income escaping assessment is happening under 147, notice under 148 is again needed. So, it clearly shows that before any assessment is starting, you need to give them a opportunity of being heard. This is called as Principles of Natural Justice, PONJ. So before 143.3 assessment, what notice you will give? 143.2 notice. Before 144 best judgment assessment, what notice you will give? 144 show cause notice, except one case. In one case, it will bypass 144 and go to best judgment assessment. Before doing assessment under 147, what notice you will give? Notice under 148. Sir, which is the case where show cause notice is not needed, sir? I've given you here. In 143.2 notice, I will demand you to produce the books. And that production of books is in another section, 142.1.2. In 142.1.2, I will ask you to produce the books. You will produce. If the reply is not satisfactory, then no need to give one more notice under 144. Directly I can go to 144, no show cause notice. I hope you understood. One of the reasons is I can ask you for the books of accounts under 143.2. You don't give me correct books of accounts. I'm not happy with it. Then directly best judgment assessment. You've given the accounts not at all satisfactory. This 142.1.2 only is like an opportunity where I'm telling you, please give me correct books. You have given me all wrong stuff. I'm not at all satisfied. Can I directly go to 144 without giving a show cause notice under 144? Yes. That is the only exception. Otherwise, here you see, if a return is filed under 139.1, normal return, 139.4, belated return, 139.5, loss return, revised return, 139.8a, updated return, or I've asked you to produce the books under 142.11, 142.12, or there is a special audit ordered under 142.2a, or there is a scrutiny notice under 143.2, or your method of accounts is not correct. You're doing hybrid. Either you should do cash or accrual. You're doing hybrid system. I'll come to know about it. In all the 6 scenarios, 144 can be initiated. I will give a show cause notice. Show cause notice. Except 2 items. I told you already, production of books, 142.11, 142.12. In this case, no 144 show cause notice is needed. Directly best judgment assessment. In all the other cases, 1, 4, 5, 6. In 1, 4, 5, 6. 1 is what? You have filed the return normally. You find the return belatedly. You have filed the return, revised return. You filed the updated return. 142.2a, special audit. 143.2, scrutiny notice. 145.1, method of accounts. 1, 4, 5, 6, First, I will give you, if you have not complied that properly, I will give you a show cause notice. And after that show cause notice, 144, that before the show cause notice, why is that show cause notice? PONJ, Principles of Natural Justice. And if nothing is satisfactory, I will directly, assessing officer will directly pass an order called 144 order, ex parte, means without the party being present. I have asked you, you didn't come, I don't care, ex parte order. Ex parte means what? Without party being present. And it should be a speaking order, means what? All the reasons I should give there. What reasons I'll give? You had filed a revised return, I was not satisfied, I asked you for reasons in a show cause notice that I gave under 144, but that also you didn't reply, and you didn't come also in front of me. You didn't attend any online hearing. You didn't send me the documents. I'll give you all the reasons. I'll make a speaking order. According to me, this should be the income. Now you pay. That's all. But when I've already asked you for the books of accounts under 142.1 or 142.1 or 142.1.2, I have asked you to produce some documents and you have not produced, then there is no need of giving you show cause. Because it itself is a show cause. I hope you are understanding. Everybody with me online? Everybody with me? Come on. I'm going slow. Thumbs up. Yeah. So, in these two cases, yes. Even by mistake, don't open the Bare Act and read. In my regular batch and all, we have lot of times, I'll explain all that neatly. Here, don't even bother doing it. Correct? Epilepsy will come. Fits will come. Don't do. Okay? Yes. So, I have made everything into neat charts. Be very easy for you to understand. Don't worry. Got it? So, that is what is given here. See? Already discussed. Same thing here. Correctness and completeness of accounts. And I told you already in 144, it's always for the benefit of revenue. There is no refund seen only in 144. No refund. Ex parte assessment is made. Assessment year 24-25, financial year 23-24. Due date is 31st October 24. Return of income not filed until 30/11/24. Last date under belated return is what? 31/12/24. Can I send a show cause notice before that also? Yes. No problem. Is there any hard and fast rule that show cause notice should not be sent? No. Why? You see, if the return is not filed under 139.1 also, I can give you a show cause notice, mind you. I need not wait for you to go till subsection 4. Subsection 4 time limit is 31st December. Subsection 1 time limit is what? 31st July for individuals and all, and for tax audit cases, 31st October. Section is very clear. The moment you fail under 139.1, I need not give you enquiry before assessment, nothing. It will bypass everything. Direct. So you remember this. If you didn't file the return, here, if you didn't file the return, I can give you one more enquiry before assessment. This is immaterial. I can directly give you 144 show cause notice. These are all the routes available to assessing officer, guys. You file the return? Good. I need some more information. I'll do enquiry. Can I do direct scrutiny? Yes. Can I do best judgment? Yes. These are the routes available to assessing officer. You didn't file the return? I can do from the beginning, enquiry before assessment, kindly file the return. I don't want to do that. If you have not filed the return, can I give you scrutiny assessment? No, already discussed. So if you have not filed the return, no, only two options available. Directly First give an enquiry under 142. Ask you to file the return and then go to the other steps. Request you to file. And once you file, no, then it will go to two things. Either it will go to the scrutiny assessment route or it can directly go to best judgment assessment. And if you have not filed the return, which means you have failed to do 139.1, directly I can give a show cause notice under 144. These are various routes available to the assessing officer, my dear friends. Various routes available. You cannot tell you should do this only. No, I'll do whatever I want. He'll directly give me a show cause notice under 144. Can I tell? No, sir, it's wrong. You should have gone through enquiry route. Like, hey, poda. Ogalo will tell. My wish. Act is very clear. 139.1 you don't do, 139.4 you don't do, and automatically this one. Sir, please come to 142. No, who's telling you? Is there a hard and fast rule? No. There is no hard and fast rule at all. Various options are available to whom? Assessing officer. He can do whatever he feels like doing. You cannot say anything. It's as per the law. He's doing purely as per the law. You cannot force him. No, no, sir, please do this, sir. Why didn't you do this, sir? You didn't give me an opportunity. No, I don't want to do it. Direct SCN. Please come. Show cause notice. Possible, guys. Everything is possible. Hope you understood. Right? So coming back here. 31, 11 and all you should have filed. You have not filed only. Due date is 31st October. You have not filed 31st October. 30th November, can I send a notice? Yes, 100% yes. I am seeking reply between 15th December. Seeking your reply, 15th December. But guys, you still have time till 31st December to file the belated return, no? So you see, let's say you will file the return on 15th December. You will give reasons. So there was a death in the family. You know, when you were in school, we were killing all our grandmothers, grandfathers. How many of you have killed your grandmothers, grandfathers in school? I have killed many times. I tell my Ajji even today, I have killed you so many times, Ajji, sorry. Teacher also used to get confused. Last 2 weeks ago also, grandmother died. No, that was my mom's side. No, it is dad's side. Then again, 3 weeks later, grandmother died. Which grandmother? My mom's side's grandmother sister. That we have done it many times when bunking school, right? Here, so I'll tell the same thing to this fellow. Sir, sorry, sir. Correct. Mother passed away, sir. Sorry, sir. That fellow will say, your mother has already passed away. No, sir. I was telling about neighbor's mother, sir. Sorry, sir. All that you cannot tell. But anyway, I'm just saying. Give reasons for what? Death in the family. AO accepts the reasons. He'll say, okay. He will make this valid under 139.4. Imagine. He will cancel this actually and say, anyway, under 139.4, belated return you can file till 31st December. You have anyway filed 15th December. Okay, leave it. No problem. AO will dump 144 and close. You will file return of income on 15/12/24. Reasons are not satisfactory. Neighbor's mom passed away. Neighbor's wife passed away. Neighbor's wife ran away with one more neighbor. All not satisfactory. Now, best judgment assessment I will do based on all the information filed on 15 December. 144 will happen. One more. Last date also over. You send the best judgment assessment on 15 June 25 next year. I will ask your reply on 30th June 25. Now SSC cannot file the return since return last date is over. No, 31/12/24. Return I cannot file. How can I file the return? Last date is over. So I will give you reasons. If reasons are not satisfactory, 144. If reasons are satisfactory, AO can still agree for 139.8A. Updated return is there. 24 months, still time is there. Or one more thing, guys. I can file a return under 142.11. What is 142.11? Enquiry before assessment, and I told you for that there is no time limit. Is there any time limit under 142? No. So here when I am asking you to file the return, I cannot file the return. I'll give you reasons, everything. If the reasons are not satisfactory, directly 144. Reasons are satisfactory, I may beg, sir, please drop 144, sir. Please allow me to file return under 139.8A, sir. Updated return. Okay, go ahead. Or I can file return under 142.1 since there is no time limit under 142.1. I can do that also. See, we have merged everything and made it into this. And as I told you, if there is no remedy available in law, there is a writ petition, High Court, Supreme Court, SLP, special leave petition. That is what you can do. Generally, you do a High Court writ petition. Then, one more interesting thing is, that's all about here. It's given here. This assessment order under 144 should be passed within 12 months from the end of the assessment year in which the income was first assessable. Same dialogue. Here also 143.3 also same thing. See, 12 months from the end of the assessment year. 143.3 also same timeline. 144 also same timeline. No change. During the course of the proceedings only, the assessing officer will tell, no, your accounts are very complex. It has many softwares interacting with each other. I don't know the authenticity of the documents. Volume is huge. And I don't know about the correctness of revenue. Some you are showing as receivable, some you are shown as received. Same transaction is multiplying many types. And the nature of business, let's say, is insurance, is a very specialized nature. Nature of business, you are Wazirex. I am doing the audit of Wazirex exchange. You are very specialized nature of business. You are dealing in Bitcoin. I don't know. So in this case, I feel it is necessary for you to get a special audit done. Special audit is not a special audit in Companies Act. It is a special audit in Income Tax Act. I'll say I'll nominate a chartered accountant. Please get the audit done from him. And the inventory and all, I'm difficult to value for me. So I'll appoint a cost accountant, get the inventory valued by him. Sir, but tax audit is already done, sir. I don't care. If tax audit is done also, please get this done. No problem. I'll order this. Give me all the documents. Sir, what about expenses of this audit? Don't worry, I will bear. Government is telling I will bear expenses. Don't worry, but I want the audit to be done. And don't worry, I will give you opportunity of being heard. Principles of natural justice. Based on all the materials gathered, no problem. Please get it done. No, I will not get it done, sir. Okay. I'm telling you, please get it done. No, sir, I will not get it done. See here, failure to comply with 142.2A, special audit, will result in best judgment assessment. Will result in what? Best judgment assessment. Sir, I want to file an appeal. No appeal. Only remedy is what? Writ petition. Can you do an appeal under 142A? Never. Only thing what you can do, writ petition. That is what I have given here, writ petition. So, special audit. Assessment or reassessment is completed means no problem, no special audit. Assessment is pending or ongoing. See, assessment is completed. Can I do special audit? No, that's a normal case. Assessment is pending. Assessment is ongoing. Can I do a special audit? Yes. I will give you show cause. In that, 6 reasons are specified. What are the 6 reasons of special audit? 1, 2, 3, 4, 5, 6. I have specified the 6 reasons and ask you to give me the reply. You wait for the reply from SSE. Take approval. Then give a special audit direction. On the other hand, if the reasons are missing, you have simply blindly given a special audit without any of these reasons only. Can you give a special audit order without the reasons? No. Reasons are missing. Special audit is directed by AO. SSE can file writ petition directly. They will go and tell, sir, they will go and say, sir, it is not done. They will go and say, sir, they have not given the reasons only. It's missing. Reasons, show cause notice only is not given, guys. For special audit, show cause notice only is not given. Directly, special audit is directed. So again, writ petition in the High Court. So example, assessment year 24-25, return of income is filed under 139.1, notice is given under 143.2 already. Scrutiny assessment also has happened under 143.3. Special audit also has happened under 142.2a. Report by CA also has been filed. Scrutiny 143.3 is going on. Scrutiny 143.3 is going on. I'll ask for documents under 143.2. Can I ask for documents? Yes. In the notice, I can ask for documents. No reply by the SSE. So 144 show cause notice is given. SSE replies to SCN and AO is satisfied, then no problem. 144 is dropped. 143.3 was anyway going on, that will continue. If audit findings are used, one more show cause notice is given under 142.3. So how many show cause notices will come here? First show cause notice is for 142.2a, special audit. After that, show cause notice for 142.3. What is this? Guys, if I have ordered a special audit, if I want to use the observations in my final assessment, if I want to use the observations in the final assessment, I should give one more show cause notice. Correct? First show cause notice is to go for a special audit. Second show cause notice is to use the audit findings. One more show cause notice is what? 143.3. For 143.3, what is the show cause notice? 143.2. You already know 143.2 is a scrutiny notice. For what assessment? 143.3 assessment. Then one more show cause notice is what? 144 show cause notice. So there are 1, 2, 3 show cause notices. Four show cause notices. Show cause notice for special audit. Show cause notice for using the findings of special audit. Show cause notice, scrutiny notice 143.2. Then best judgment assessment notice. 4 notices will go in this scenario. I'm just giving you the practical thing how it works. Since I work practically on this, I know how it is. So that's why I'm sharing this with you. You should know in your mind how the practical thing works, because that only will they'll give in the exam. No reply. These are all tricky MCQ questions. You have not replied to show cause notice. Then I'll obviously do what? Best judgment assessment under 144. Now deadly. 142.3 says audit matter can be utilized without giving show cause notice under 142.2a. You reply everything nicely. I may do the audit findings. Then I will ask you, can I please use this in the report? I will give you show cause notice. When I am asking you to file the, for 144 show cause notice, I am asking you to file the reply. You didn't even bother replying. When you didn't even bother replying, again when I do the special audit for using the matters, should I ask you again? No way. Audit matter can be utilized without giving show cause notice under 142(2)(a). So if you do not reply to show cause notice, my dear friends, this 142(3) show cause notice to use the audit findings is not needed. Other three will be there. Show cause notice for special audit, show cause notice for best judgment assessment, and show cause notice for scrutiny assessment. Scrutiny assessment. Got it? This is the concept of special audit. Then at times, the assessing officer, to make estimate the value of any good, asset, property, etc., to understand whether you have taken the correct value, can direct the valuation officer to do so. So here, assessing officer will ask to estimate the value of either asset, property, or investment. So the evidence will be either produced by the assessee, or the valuation officer only will know in that particular property, in that area, how much value it will be. And then he will give the report to the assessing officer, who will then give also the report to the assessee. And there will be a opportunity of being heard, where he can say, valuation officer, sir, this was wrong, this was right. He can tell that. Then finally, assessing officer will decide the value based on the PONJ. PONJ means what? Principles of natural justice. This is the full procedure of 144 read with 142 capital A valuation officer and 142 2A special audit. So guys, after 144, next is income escaping assessment under 147. But before we do 147, we need to now understand certain things in search, seizure, and all those things. Why? Because the procedure in both the things is the same. Before we understand all these things, there have been amendments which are there in, I've given here. Before we understand the time limits and all those things, summary of changes, we need to understand, what do you say, the next chapter, which is, what do you say, the search, survey, seizure, those things. After faceless it will come. Yes. Because in survey and seizure, the procedure is similar to what we have to study now. And there have been changes also. So first you have to study this survey, search, seizure, and then go to the other areas. Let's see. (133A), then 132. Survey 133A, search under 132. So 133A is what? It is a routine exercise to enlarge the tax base. So it is just to check. This is not, what do you say, to go and see some documents. It is just routine checking. Whereas search, my dear friends, is your income tax rate. Search will be income tax rate. Initiated based on information available to unearth concealment of income or assets, RAID. whereas this is survey under 133A. It's a routine exercise to enlarge the tax base and verify the correctness of books of accounts of the taxpayer. So 133A is just going and checking out the documents, whereas 132 is your income tax rate. You would have watched in the movies, no? That is 132. So this 133A can be broadly classified into 133A1, A2A and A5. A1 is what? It is surveying the business premises of a person or any other place where the activity of charitable purpose is carried out. Business profession or any other place where charitable actions are done. 133A2A is what? TDS TCS compliance. And 133A5 is any function, ceremony, event, any event if it's happening, ceremony, function if it's happening, there if I go and do a survey. Correct? You would have seen this guy Janardhan Reddy. After he came back from jail, he did a lavish ceremony for his daughter's wedding. This was many years ago. You would remember. In Palace Ground, he created the Vijayanagar Empire. That was the theme for the mining baron. Correct? So then can I attend the function and do a survey? We'll see that. So this is the first thing. We'll have to do a survey for specific reasons. You can, of course, enter the premises. I can inspect the accounts, check or verify the accounts. I can check the premises of the chartered accountant also, who is subject to the survey operation if the books are kept, etc. So can I impound the books of accounts which are there in the CA's office also pertaining to the client? Yes. There was one more case. Can I impound the seize? Impound means seize. Can I seize the laptop of the chartered accountant? This happened in SR Bartley Boy E&Y case, where the E&Y auditors were sitting in the client's place and they raided the client's place. When they raided the client's place, they also raided the auditor, and in the sense the premises auditor was sitting, they took the laptop of the auditor. He went and put a case saying that in that laptop there are details of all clients. Why the hell should I give you this client? This client I'll give you, ask me why all clients you are taking. So he won the case. So you can't just impound the laptop like that when other clients' data is also there. But you can impound the respective books of this particular client if you have any. This is what it says. Very, very simple. Time of entry for conducting survey. Yes. You see, may enter any place of business during business hours and any other place. Business hours during the place of business will be this. Other place will be after sunrise and before sunset. So guys, there can be two things of survey. One is direct place of business. One more is what? Any other place. Any other place will be after sunrise and before sunset. Mind you, I'll give you a couple of examples in a while. Hold on. I cannot remove any assets, but I can impound the books. Guys, remember I told you when there is no power given, then you have to see a power under 133, which we did previously. Can you impound the books of accounts? Yes. Up to how many days? 15 days. Beyond 15 days, you have to take permission. Same thing. Then in TDS TCS survey, you need to do certain things. And function, you should do it only after the conclusion of the function, not before the conclusion of the function. So the gist of the story I will tell you. Don't worry. Right? As far as survey is concerned, survey under 133A2. College jam surveying. It should be done only during business hours. Can I go to the principal's house also, wherever they have kept the documents? Yes. There it is, after sunrise, before sunset. That's the dialogue. So for 133A2, business hours 9 a.m. to 6 p.m. Very clear. Principal's house, you have to enter, you cannot enter, or you have to enter before 6 p.m. Assuming 6 p.m. is a sunset. Can I enter at 5 p.m.? Yes. Here, can I enter at 5:45 p.m.? Yes. Can I exit morning 3 a.m.? Yes. Can I exit morning 5 a.m.? Yes. They should enter within the prescribed time is what they have given. Not exit. They should enter at the prescribed time. What is the prescribed time? For survey, normal survey, principal place of business, it is business hours. For any other place, for example, the principal's house, it is before sunset. Guys, these questions will come in MCQ many times. Don't worry, I'll give you time. I'm just saying, so you should be alert. So one you have the TDS TCS survey. One more you have the other place. And one more we have function. Can you enter when the function is going on? No. You can enter only after the function is over. Not during the function. It is a problem. Anyway, so to make it easy, I have made a chart. To help understand that issue. Very, very important chart this is. Particulars, normal survey 133A, TDS survey 133A2A, then event and function 133A5, and we have the generic section 133B, normally going and impounding, that general section which I've already seen yesterday. So specific section, if it doesn't apply, then general section will come. Specific section, normal survey, place of business or profession. TDS TCS survey, place of business or profession. 133A5, wherever there is a function, ceremony or event. 133B is place of business or profession. Other place also I can do where books of accounts are kept. For example, principal's office, principal's house, sorry. In all the other cases, others are not applicable. Time and place. Time will be what? Business hours. Here it is after sunrise, before sunset. After function, here it is after function, and 133B is business hours. What is time? Other place. Other place is after sunrise, before sunset. So guys, here you see, I told you, no, if it is the principal's house, if it is the college, you should do it between business hours. If it is the principal's house, you should enter after sunrise, before sunset. That is the meaning of other place. This place is college. This place is principal house where the documents are kept. Is charitable organization covered? Yes. Is religious organization covered? No. Can I impound cash? No. In a normal survey, I cannot impound cash. Can I impound documents? Yes. For how long? 15 days. Can I take an inventory of cash stock valuables? Yes. Similarly here, you cannot impound cash in any of those things. You can only impound books of accounts in the function. You cannot impound books of accounts in a TDS and TCS survey. No. And in this, nothing, everything is a no for 133B generic section. Very, very important chart. Right? Very, very important chart. All MCQ questions will come in this only. I took some half an hour to design this chart. Okay? Simple. So this is the entire chart. Now, with the survey thing which is over, now we need to go into the concept of search and seizure. I told you survey is just normally checking out and analyzing. If I find anything in survey, then I can go for a raid. Correct? You usually think in a raid they will call you and tell I'm raiding. No. Opportunity of being heard. They'll call and tell boss I'm coming now. In the next 10 minutes I'm raiding you. No. Then raid, they will analyze the survey details and then they will directly do the raid under 132. So one of the reasons of the raid, once you do and you get the money, that could be income escaping assessment. That is why we haven't done 147 yet. 147 is what? Income escaping assessment. When will that come? After the, one of the reasons is search of it after it happens. Right? There have been quite a few amendments in search and seizure. There have been quite a few amendments in income escaping assessment. All that can come in May 25, November 25 onwards. Correct? So it's very, very important. That is the reason why we are doing this slowly, as slow as possible. Right? Moving on now. So that is survey. And now we will come to search. Search is what? Raid. You would have seen in movies. That fellow will be sitting at home chilling. Suddenly the police will come along, the income tax department. They'll give you a search warrant, saying that search warrant has been issued by the pre-principal commissioner. We are now have to search your premises. Then they'll enter. They'll start searching everywhere. Bed, underneath the bed. They will remove the bed. They will destroy the entire bed. They will go to the toilet, destroy the walls. That is classic case of raid 132. Initiated based on the information available to unearth concealment of income. One of the information can be survey also. No problem. Through survey also I can get the information, no issues. So, who will authorize the raid, guys? These are the people who are authorizing the raid. The ones who can issue an order under 132 will be all these people. Principal, Director General, PCCIT, CIT, PCIT, additional CIT, all these people. They can issue order under section 132. Authorized officer, the one who shall execute the order. So they will issue the order. These fellows will execute the order. So PDGIT, DGIT, PDIT, all these people can authorize, whereas these people can execute the order. Very simple. So additional CIT. So additional CIT, additional DIT and JCIT can authorize to these people. Additional director, deputy director and all those things. This you just can go through, guys. No need to remember all these things, but yes. So there will be an arrest search warrant under form number 45. That search warrant is what you need to clearly understand. And what do you say? They have to say, yeah, okay, this is the time now where they have given me the option to do what? I can raid the premises of some person. So that is given in a warrant which is issued like this. Let me try showing you that. Yeah. It looked like this, guys. See, form number 45. Authorization of warrant under 132. To deputy director, deputy commissioner, all these things. Higher officer will tell. To the lower fellow is telling, whereas information has been laid before me, I am hereby authorizing you. I'll give you a summons. And then I'm authorizing you to, if summons under section 7, etc. is issued. Now this fellow, Sarva Shri, blah blah, Shri, Srimati, these people have to do what? If they have any money, bullion, jewelry with them, and whereas have reason to suspect that these things will be kept or found in so and so other place also. I have all information. I'll tell, I have information that this much amount of gold is in this house, this much amount of gold is in the other house. These documents will be moved to this house. So I hereby authorize you to enter and search the building. Search any person who is there in that particular entire building. Place identification marks on the books. Means ID, you can tick. Examine the book. Seize is a specific power given here. I can impound the books of accounts. Document. Guys, I can impound the money. In survey, you cannot impound cash. In survey, you cannot impound cash. Here, you can impound cash. Make a note or inventory of such money. convey such books, documents, etc. Then sign, we will put sign, seal and send. This I will show to the person and say, sir, authorization has been received, sir. Now we will have to raid your premises. That's all. Very simple. So, if you do not have that jurisdiction, I can go to, like I'm in Bangalore, I want to search in Delhi. I can go to that commissioner in Delhi and take the authorization. I have taken an authorization from Mumbai to search somebody's premise in Kolkata. But I have also come to know that some of the books are kept somewhere else. You will have an authorization to raid only one place, that's all. Or multiple places, but it should be there in the authorization. The Mumbai commissioner has told, please go and raid this particular building in Kolkata. But when I've gone there, I've come to know many documents are in the next building. I cannot enter without authorization. So should I again go back to Mumbai, take authorization, again come back? That fellow will run away. No, they say immediately contact the Kolkata commissioner, show him the authorization of Mumbai, and he will give permission immediately, and immediately you can raid the next house also. Until that, you can cordon it off for protection. When can search be exercised? I have given summons under 131(1). Yesterday we were doing the generic provisions in there. Power to summon, powers of civil court. First one, summoning and enforcing attendance. General, that's a general power. So I had a doubt that this fellow is doing some golmaal activities. So I issued a summons under 131(1) asking him to come and produce the documents. He has not done. Or whatever documents he has given is all fake. Right? So I'll show you certain things. One deadly point is there. 142.12 sent on 1123. What is 142.12? 142.12 is what? Asking you to produce certain documents. I have asked you to reply before 2123. I have given you 20 days time. This is an MCQ question. Can search be initiated on 3/1/23 only? Like 2 days after you send the notice, answer is yes. Deadly. Raid can be initiated assuming that assessee would not produce the books. See the dialogue. I have sent you the notice for you to, what do you say, give me reply on, certain documents that I want. I've given you time 20 days, but I know for sure you will not respond. So in 2 days only I can initiate the search. Raid can be initiated assuming SSC would not produce the books. See here. Any person to whom summons or notice or aforesaid might be issued. He will not or would not produce books. How cool is that? I may issue the notice, but even if I issue, I know you will never reply. So I'll raid. Imagine, guys, deadly powers under 132. I hope you are getting it. And it is or, mind you. So is there a procedure to be followed? First you have to give 142, then you have to do summons. Nothing. I have reason to believe. I have reason to believe. Reason to believe. I have documents. I have evidence. Reason means one day is doing meditation. Suddenly in the meditation, somebody will come and tell this fellow has a lot of cash. Go check. No. Reason to believe will have, which means he has evidence. There's a tip off. He has good evidence to know for sure that this fellow has, what do you say, doing some golmaal activities. I don't have to give him any show cause notice, direct attack. I have to get an authorization, that's all. And in the authorization, I should prove that, sir, even if we give notice, sir, there is no point, sir. He will not give anything, I know for sure. Yes, then you can go and raid. Deadly powers under 132, my dear friends. Any person in possession of any money, bullion, jewelry or other valuable article, yes, and represents has not been or would not be disclosed. Randomly, some person is having money, jewelry, bullion, which belongs to somebody else. Yes, do the raid, no problem. Ultimately, there should be what? Reasons to believe. That is what the most important thing. I can enter, I can break open the lock and search any person. All the employees I can search there. I can ask any person to give the, see point number D. I can ask any person to give password. Form of electronic record to afford necessary facility. Give me the password. I want to open this. Seize any documents. Place identification mark. The last question, can I arrest the person? No, that is not your right. You cannot arrest anybody. Can I seal the business? No, I can protect the business and just see that, okay, so nobody will enter, but I cannot seal it off. In movie, they will take creative liberty and they will put that raid going on, office seal, they'll put that seal, all that is not possible actually. In movies, they want to show all masala, they'll show. But can I take the help of the police? Income tax officer, if they go, they'll slap them and send. Can I take police protection? Yes, 132.2. I can take help of the police. Sir, can I take help of a certified fraud examiner to come and look into the books? Can I take help of a coder? Can I take help of a ethical hacker? Can I take help of a locksmith to open the lock? Can I take help of a carpenter to open certain things? Yes, that is point number 2. I can take. Then I found some goods. I don't know what the value is. Can I ask the valuation officer? Yes, remember we discussed valuation officer. Yes, I can go to valuation officer who will estimate the fair market value of the entire property within 60 days. Where the property is huge. I found a yacht. Inside the yacht, it is all made of gold. Can I seize the yacht and bring it home? Can the assessing officer take it home? Can he take it in the income tax department? No, he will seal it there only. That is called deemed seizure. Physical characteristics or dangerous nature. There is some bomb there, but there is some highly inflammable material which is of high value because it's made from very rare minerals. Yes, have raided all those things, assume. Then I cannot touch that. If I touch that, obviously it's a problem. So yes, can I just keep it there? Yes. Can I seize it? Yes, it's called deemed seizure. It's called deemed seizure. Also called as constructive seizure. And in case there are truckloads of books, I find an entire godown of documents. I cannot immediately take it. So can I pass an order asking that SSE not to touch it? Yes. That's called order of restraint. That order also within 60 days. From the date of the order, it is valid. Sir, this entire godown is filled with so many documents, sir, it will need minimum 12 trucks to carry. You know, Subrato Roy of Sahara passed away. SEBI and Supreme Court had asked him some documents. He actually mixed up all the documents and sent it to them in 12 lorries, believe it or not, 12 lorries, and all documents were mixed on purpose. These are the documents. Take it. You figure it out. I don't know. So in order for that to happen, can I pass a restraint order? Order of restraint? Yes, I can. I can take an examination on oath and use it as evidence whenever need be. When I enter your premises, if I see cash there, I will assume that the cash is yours. If I see gold, I will assume that the gold is yours. If I see a signature which says under your name signature, I will assume it's your signature. I don't know. You prove me that it is not your signature. If I have some document which is like a sale deed, I will assume that is a sale deed entered by you. That's all. If it is a stamped document, I will assume that the stamped document you only took it. These are the presumptions. If GST also has done a raid, GST department, and some books are with them, can I go and request their books? Yes. Right. If I feel that some more documents I need, can I request that particular department? Yes, I can. If CBI, money laundering, enforcement directorate, etc. is there, can I go and request them? Yes, definitely. Then I will hold that with me, all the documents and the money, etc. And then later I will release it after releasing the liability. So you see, I'll request documents under 142.12. It is not given. If it is not given, guys, I can do two things. One, I can do best judgment assessment. And mind you, remember, there is no show cause notice. Yes or no, we have already discussed. If I have asked for documents and you do not give it without giving a show cause notice under 144, I can go for a best judgment assessment. Or I can directly go for a raid. And in case the documents are with some other person, I just told 132 capital A will come. I can request the documents from that some other person. It's lying with enforcement directorate, it's lying with the GST commissioner. I can say, sir, please give me those documents, sir, please. Got it? So action by officer, normally I can physically seize, or 132.1 proviso, constructive deemed or implied seizure based on the volume, weight or dangerous nature of goods. 132.3 order of restraint. It is not volume, weight, nothing. I have just put a order of restraint other than 132.1 and normal case. Sometimes other parties items are also there. There is 20 kg gold lying there, which is clearly written. This belongs to, let us say, this belongs to Supriya. Seeing your name here and telling. This belongs to Supriya from Mangaluru. Address and all I have given. Assessing officer will tell, is this yours or is it Supriya's? I will tell it's Supriya's. I am caught. I don't want to. I want to throw her also under the bus. Now, instead of seizing it, I can also say, tell that assessee, do not touch that. It's an order of restraint. If you touch that, you will go to jail. Don't touch. Order of restraint. Then I can go to Supriya and say, please prove, is this yours? So I can do that also. You see, where other party proves the source. You prove the source until you prove the source. It's called as undisclosed income. Obviously, you prove the source. And if you prove the source, it means you have not shown this as income. If you have shown the income, please show that also where you have shown this income. You have not shown any gold, anything in your return. Why? Obviously, that's why it's kept here. No, in some go down it is kept because you don't want to show. I will prima facie, means on the face of it, show it to be what? Undisclosed income. And I will pass an order of restraint. Restraint means what? Do not touch that. Can I release the asset? Yes. Books and documents can be released under 132A for more than 30 days from the order of assessment or reassessment. It is possible only with the approval. But if all proceedings are completed, can be retained only for maximum 30 days. Guys, I can keep the books till the final order is passed. When the final order is passed, within 30 days, I should return it. If I want to keep for more than 30 days, then I should take the approval. What is the possibility where it's kept for more than 30 days? Other agencies may want it, no? I have finished my assessment, no problem. I will call the GST officer. Sir, this is also there, sir. Can I hand over the books to him or will you need to go through? Should I give it to you? Through him, obviously. I have to ask permission, not permission, but I have to inform you and then give it the documents to other department. So when should I give it back to you? Within 30 days. If I want to keep it for more than 30 days, I should take the approval of the higher authorities. Then all existing liabilities will be recovered and only then balance will be released within 120 days of search after approval. So all the liabilities I will set right and within 120 days of search, I will give it back to you. So as I told you, there is something called as provisional attachment. Provisional attachment. I want to see what these assets are. So 132.9b and 132.9c in search, it can be attached for 6 months. And then I will refer it to the valuation officer for, I see many assets which I don't know the value of. So I cannot seize them. I want valuation. So I will provisionally seize them. Provisional attachment means provisional seizing. I will provisionally attach them. For how many months? 6 months. And then eventually I will give it to the valuation officer. Either during search only or within 60 days of search, I have to hand it over to him. Valuation officer will value within 60 days. So I'll find the asset. I don't want to attach it because I want to fix a value first. So I will provisionally attach it. For 6 months I can attach it. I'll pass an attachment order. I'll immediately refer to valuation officer, either during search also or within 60 days of search, and ask him to value the property. He should do it within 60 days. This is in search and seizure case. In normal cases other than search and seizure. Sir, this is not a search case, sir. Can I still attach the property? Yes. Up to 6 months you can attach the property. It can be increased also with approval up to 2 years. Or 60 days after the date of assessment or reassessment, whichever is later. This is a general provision. This is specific to search. What if it is not a search? What if it's a survey later which leads to other things? What if it is in some other section, not search section? Their attachment is up to 6 months. But can you increase the attachment to more than 6 months with approval? Yes. Either 60 days after the date of assessment till that date or 2 years, whichever is later. Because assessment also can go on for 2 years. Got it? So that is regarding search and seizure. So if you see here again, all other seized assets may be applied for discharging the liability. What will be liability? Government dues, existing liability. Existing liability under Black Money Act, Wealth Tax Act, Gift Tax Act, everything. Plus any new liability also will be adjusted. Can I, like for example, I collect some 20 crore worth of goods and all the old liabilities I knock off. Current year's liability also, can I take, for example, can I pay advance tax from that money? I have seized money worth 10 CR. All old liabilities came up to 9 CR, knocked off, 1 crore is left. Can I tell the government, sir, this year he has not paid advance tax also. Current year of raid, he has not paid advance tax also. Can I recover advance tax from this? This went to the court, guys. This went to the court. Can I recover advance tax? What do you think? So this existing liability shall not include any advance tax payable by the SSC. You cannot take that. After you recover all the amounts balance, what will I do? I will give back. Will the department give me interest on the seized money? Yes. On any balance left, they will give 0.5% every month. That is 6% per annum, guys. Good interest. A is amount of money seized. B is proceeds of any asset sold towards liabilities. C is adjustment towards existing tax liability. Final liability. Interest is payable from 120 days from the date on which search was completed to the date of completion of assessment or recomputation. See example. Search was initiated on 37/24 and was completed on 3rd August 24. The search party sees the following assets on 3rd August 24. Cash 2.7 crore, other valuable 60 lakhs. The existing liabilities under the Income Tax Act amounted to 25 lakh rupees. The SSE files an application to the assessing officer by 30th September 24 and explains that out of the cash seized, 60 lakh is accounted for. Sir, you have seized 2.7, sir, and that 60 is accounted. Give it back to me. I'll show you the proof. You show the proof, take the money back. 2.1 crore is still unaccounted money. The AO releases the cash of 35 lakh. 60 lakh, in that 60 lakh, he will take the existing liability 25 lakh and pay remaining 35 lakh back. The AO determines under section 147, that is income escaping assessment, tax inclusive of interest as 2.3 crore. Assessment under section 147 is completed on 3/3/25. Balance is returned. The amount of cash seized 2.7 crore. Add proceeds of other valuables. They told they got 60 lakh is accounted. Sorry, this one. Other valuable 60 lakh. So we'll add that 60 lakh less money which has been released. This includes the money which has been released. No, 35 lakh subtract. What is the liability they have given? What is the liability? 25 lakh is the liability. Here, existing liability 25 lakh. Plus under 147, the final AO has determined 2.3 crore. So assessment plus existing liability, that I will to add, subtract. So after adjusting everything, balance will be 40 lakhs. This balance I'll have to pay interest from which day? Completion of 120 days from the, so this is important. Is payable only from 120 days from the date on which search is completed. Search is completed on 3rd August. So August, September, October, November. That will be 120 days. 27 days in August, 30 days in November. Sorry, September 30 days, October 31 days. Right? 27 days in August, September 30, October 31, November 30 days, will be 120 days. $28 days actually. In August, 28 days. September, October, November. So it will be done from which day? Here, from the expiry of 120 days. So 120 days happen. So from 1st December till when did you pay the money back? 3rd March. 1st December to 3rd March. Month or part of the month it says. How much percent? 0.5% per month or part of the month. December, January, February. 3 days in March also interest is paid. So 4 months. 0.5% into 4 months. Totally 80,000. Very simple. Same thing is given in the chart here. So book seized here under this section, you can keep it for maximum 30 days. I can make copies, etc. But if I do not have the jurisdiction, I should seize and hand over to the person having jurisdiction within 30 days. Provisional attachment also we have already discussed. So guys, from September 2024, the search proceedings have changed, which we have to see later. I will do the old provisions first, then new provisions later. This is for search happening on or after 1st September. Search happening before 1st September, that is till 31st August, different procedure which we have discussed now. After 1st September, different procedure. We have to study both, unfortunately. So now we are doing the old procedure, not the new one, old procedure. The new one we'll see later. Later, all this later. Cannot study now. Full thing will be done later. Got it, guys? This is the old procedure of search. Old procedure of search. For search happening before 1st September, different procedure. Search happening after is a different procedure. So one more thing, 144A, that's a tool for higher authorities to intervene in complex cases. So if there are any complex cases, the Joint Commissioner can issue directions to AO and call for some additional documents on his own. This is for complicated cases. And, you know, some foreigners, guys, foreign companies, non-residents earlier, they were always being harassed by the assessing officers. They will do something, they will allow an expense which they are not supposed to allow. Later, they'll say it is disallowed, and it always used to create a problem. So there was a concept called dispute resolution panel which was set up. It was earlier only for foreign companies and non-residents, but now they have made it for everyone. So when transfer pricing issues, etc., are covered, it always used to create a problem. So now, rather than you giving an order to me fighting you, and later again you revising, whenever you are making an order, assessing officer when he is making an order, any variation, etc., whatever, that draft assessment order should be passed to the SSE immediately. You should give the draft assessment order to him immediately. Draft order. I will give 30 days time to accept the order or reject it. If I accept it, well and good, there ends the matter. If I reject it, then I can go to, instead of filing an appeal, a faster mechanism is to go to dispute resolution panel, where they will go through everything, check the variations, reduce the variations, enhance the variations, etc., and give a direction to the assessing officer to complete the assessment. So if the AO wants to make any variation which is prejudicial to the SSE, it can be because of transfer pricing, need not be because of transfer pricing, no problem. But for individual SSE, other than foreign company, if it is related to a transfer pricing officer, so your TP variations in international taxation, for other SSE, it should be TP variation. For foreign company SSE, it need not be TP variation. Draft order is first given to SSE. He may choose to accept or reject. If he rejects it, he can directly go to the dispute resolution panel. and the DRP will give directions. The directions are binding on the AO. DRP can just confirm the variation, reduce the variation, or enhance the variation. DRP has no power to set aside, means cancel not possible. You either say yes, you decrease or increase. You either say yes, you increase or decrease. You cannot cancel. DRP doesn't have so many powers. And within 1 month of receipt of the direction, or when there is no objection, 1 month on acceptance of no objections, within 1 month only AO to complete the final order. So a draft order is given before to reduce litigation. That is the beauty of 144C. For foreign company or non-resident, all cases. For other SSE, only TP cases. If there is recharacterization from one head, from PGBP up made it into IFOS, all that is it covered in this order? Yes. See, recharacterization also is covered. That's it. Draft order, objective, everything. It is binding on the AO. DRP to issue directions within 9 months from the end of the month in which the draft order is forwarded. So here, within 9 months, they will ask them to pass the order. So draft order is given to the SSE 9 months from the end of the month in which draft order is forwarded to the SSE to enable him to complete the assessment. So when the draft order is given to the SSE on 14th October 2025, end of the month is 31st October 2025. Within 9 months, I should give a direction. What is the end of the month? 31st October. November, December, January, February, March, April, May, June, July. Before July 2026, I should ask them to I'll give a direction to either confirm the variation, reduce the variation, enhance the variation. Within 1 month of receipt of directions, that is by August 2026, 1 month, AO to complete the assessment based on the draft order. So in order to avoid litigation, draft order is first sent to SSE to see whether there is objection or not. A special provision created specifically for foreigners. But later they made it for other SSEs also. Method of accounting: income from salary, no role. House property, no role. Capital gain, no role. Income from other sources, it should be cash or mercantile system. This is also same. You can use cash or mercantile. Hybrid not possible, but ICDS to be followed always. Stock valuation always at cost or NRV. If it is securities listed at stock exchange, cost or NRV. Inventory of securities held by scheduled bank, ICDS. This you can just go through, guys. Not very important. Just go through. Recognized stock exchange, again as per ICDS, the same way. This you can just go through. We'll see that later. Leave it. I have to connect it with some other point. I'll do it later. So after this, we'll have to do income escaping assessment. After having done with, what do you say, 142.1, 143.1, 143.2, summary assessment notice. Summary assessment is 143.1. Scrutiny assessment notice is 143.2. Scrutiny assessment is 143.3. Best judgment assessment is 144. Right? Then we saw search and seizure, 132. And before that we saw survey. All that we saw. So we understood many things. Now let us come to income escaping assessment under section 147. Income escaping assessment under section 147. Okay. 147 guys, section 147. Interesting area. So, most important thing to understand is, first we will be doing a procedure from 1st April 2024 to 31st August 2024, because from 1st September 2024 the process has changed, correct? So the thing is, many people say that let's do directly from 1st September, but I do not believe that, because institute can give anything. Search also has changed from 1st September. So the thing is, from 1st September the entire procedure is different. The search procedure before, from 1st April 2024 to 31st August 2024 is different, and from 1st September it is different. So we will not take any risk whatsoever. Let us directly dive into 147. And now whatever we are doing now will be from which date to which date? 1st April 2024 to 31st August 2024. After we finish the full procedure of 1st April 2024 to 31st October 2000, after we finish the entire procedure, then we'll go from after 1st September, what is that? Okay. Now first we have to do the old procedure, guys. Old procedure. So let's do it. So this is like a combined reading of many sections: 147, 148, 148 capital A, 149, 148B, and 151. So in all these cases, in which case will 147 apply? You should understand that 147 is a section whereby the assessing officer can assess or reassess or recompute the income which has escaped assessment. So during his assessment, he'll feel that some of the incomes are assessed in a wrong way, or some of the incomes are assessed in a, what do you say, has escaped the entire assessment procedure. But that logic, he will assess or reassess the income. So for this entire section 147 to 153, these sections are governed. So during the assessment, if the AO finds some other income which had escaped assessment, he can assess or reassess such income without following section 148A. We'll discuss all those things. Right. The entire procedure also we will discuss. So basically, guys, before that, when will 147 apply? Check it out. If the return of income is filed in one scenario, return of income is not filed. If the return of income is filed, right? 143.1, what will happen? What is 143.1? You already know. That is the summary assessment. Summary assessment, that is your processing of return. Let's say it has happened. Then 143.3 has not happened. No need. Every case will not be assessed. I told you only few cases will be assessed. Other things, by that time you got 143.1, that itself is deemed to be intimation that the assessment is over. No problem. Let's say 143.1 has happened. 143.3 did not happen. 144 did not happen. Can I directly open it under 147? 100% yes. So just because you haven't got any notice under 143.2, just because assessment has not happened under 143.3, And just because there is no best judgment assessment, do not think that 147 will not happen. 147 can happen anytime. Timeline we'll see. Second, 143 one has happened, then your scrutiny assessment also has happened. Then later after scrutiny, they have done a income escaping assessment because they found certain things. Later, can I do 147 again? Yes, because the Bayer Act is very clear. It uses the word assessment or reassessment. Yes, this is assuming you have filed the return. What if you have not filed the return only? If you have not filed the return, maybe 144 will not happen, best judgment assessment. Can 147 happen? Yes. Can 147 or 147 happen? Yes. On the other hand, you have not filed the return. Can 144 happen, best judgment? Yes. Can 147 of happen, reassessment of 144? Yes. Can 147 of 147 happen? 100% yes. This is what I wanted to tell you. Everything is a big yes in this section. Right? So section 147 is what we need to study. The old one also, what was there? Excuse me. We have to study both the old as well as the new. Just studying new and going may not serve the purpose. Only for May 25, November 25, we should study both old and new. From next attempt onwards, going forward next year and all that, things will change. Anyway, so 147, the procedure slightly has changed, but other things, the main structure remains the same though, but yes, this entire thing has changed. Issue of notice, procedure, everything has changed. So this was the old section till 1/9/2024. Anyway, I've given you the old and the new in the notes, don't worry. Yes. So guys, very simple. Very, very simple. I'll explain the procedure. Then later, of course, you can go through that. Check it out. Basically, guys, this is the procedure from, again I repeat, 1st April 2024 to 31st August 24. First, we study the old procedure. From 1st September, things have changed. Okay? Sir, why are we doing the old procedure? I will tell you. So, information under section 148 you have to collect. Correct? That information is given in two explanations. Explanation 1, explanation 2. Okay? There are two informations. That information you need to collect. Information is given in what? Explanation 1 as well as explanation 2. Right? So, you see. Yes, here. You see, guys. Possession of information. I told you just now. It is there in page 3.16. Possession of information by the AO. There are two types of information. Actual information, deemed information. So this is explanation 1. This is explanation 2. If he collects these information during the course of his assessment, only then he can do a 147. Let me be very clear on that. Right? What is that information? Explanation 1. See, explanation 1 is what? Information in accordance with the risk management strategy formulated by CBDT. CBDT has told, please pick up all the things where refund is more than 15 lakh. Please pick up all the items where there is a huge mismatch. Some figure they would have given. So that strategy keeps on changing year on year. So based on the risk management strategy, that is the information that I'll collect. They would have said, if any person has shown return of income 10 lakhs, but he has spent 25 lakhs in foreign travel, please flag them and reopen the proceedings. That would be one of the strategies. So strategy, who will decide? CBDT will decide from time to time. So based on the strategy, that is my information. Can I act on it or not? My wish. But is it information? Yes. Second, government company, for example, or government controlled company, the C&AG, Comptroller and Auditor General of India, he feels that the assessment etc. of the SSE is not done as per the provisions of the Act. So this is the audit point. C&AG has raised the issue that maybe we have to look into the tax implications of the same. Objection he has raised. So that will be information with me. I can assess, open the income. Please know that 147 will not come only because of search case. Most important to understand. 147 will not come only because of search. 147 will come for many things. First one, according to the risk management strategy. Second, C&AG has given a report where he has raised objections about the way certain things are done in this company. Third one, the Mauritius branch of my company, I have obtained some information via DTAA, Double Taxation Avoidance Agreements, or via TIEA, Tax Information Exchange Agreements. So information received under an agreement referred to in 90 or 90A. Tax Information Exchange Agreement, Double Tax Avoidance Agreement. I've got some information. So this is point number 1, point number 2, point number 3. Point number 4, 135A is called faceless collection of information. So, believe it or not, CBDT has everything on you. One of my friends is working with the centralized processing center. He said, you give me your phone number, I'll tell you your history, geography, social studies, everything. Where you went, which day. Because guys, you think about it, wherever we go, we give our phone number. OTP will come there. If you have observed in the last 4-5 years, everything has changed to OTP. Should have a valid phone number. Everything is OTP based. Just think about it. Correct? So he will tell you, he said, I have information that where you bought, which mall you went, what you bought there. Because you would have scanned, everything is UPI now. Plus, you went to, this mall and bought 5 t-shirts, 5 shirts in this particular place. Because the points are added to your account, I can extract that data also. So guys, they have clearly lot of information on their hand. They are not using it, that's all. That is called what? Faceless collection of information, 135A. Plus, they have also given you a notice under 143.2, scrutiny notice, ask you to produce documents. They'll ask you to produce documents under 142.1, if you remember. That is also faceless collection of information only. So these are various sources of what? Information. Because of which I will get what? Income escaping assessment. And lastly, tribunal or court also has given an information that this was fraud. Let's say you have operation and mismanagement. You have, the entire mismanagement of the company has happened. Let us say that one of the directors has committed fraud. In one of the court orders, they have declared that this fellow is a fraudulent guy, or they have told that this company has taken money and not paid taxes. Basically, any other cases going on, now that information also is there. So, there are two things. One is actual information, second one is deemed information. What is actual information? First one, risk management strategy. Second one, C&AG. Third one, DTAA, TIEA. Fourth one, faceless collection of information. Fifth one, tribunal order. Hope you understood. With this information, should I go ahead? That is my choice. But I have the information with me. Next, deemed information. This is no need of actual information. If something else happens, this gets triggered. If something else happens, this gets triggered. What is that something else? Obviously, search. Now you are seeing the connection. If 132 happens, automatically it's deemed that I have information that income has escaped assessment. Or books of accounts were requisitioned under 132A. Means what? I do not have the documents. The GST fellow has the documents. I am requesting the documents from the GST guy. And from there I come to know that you have done golmaal. Next, guys, that's why we did that and came here. Survey, except TDS survey. Survey in the business premises, survey in the other place where the books are kept, other things are kept, that survey. Not TDS survey. I did a survey conducted under 133A except TDS survey. I did a survey of the function. After the function got over, that also. Apart from that, the AO is satisfied that the money, bullion, or any other article seized under 132 or 132A from any other person belongs to the SSE. Or books of accounts, documents, etc. from any other person belongs to the SSE. What is this? I am raiding one person, and in that they have written books. This books belongs to PJ. And open, there are many things. Cash 25 lakhs belongs to PJ. Gold 10 lakhs, belongs to, what do you say, Sudanva. Correct? Property papers in the name of Mahima. One more property papers in the name of Varsha. All these things. Okay. Is this information against each one of us? Yes. That is what they are trying to tell. They raided somebody. They raided somebody, but they got all information about us. And presumptions we have seen. If it is there, it is there. It is assumed that, it is correct. You have to prove that it is not correct. Understood? Got it, guys? So, these are called deemed information. What are the deemed information? Search, requisition, survey, except TDS survey. Then, when I did the raid of somebody else, I found details about all other SSEs. That will be deemed information against all other SSEs that income has escaped assessment. This is what? Explanation 1, explanation 2. Explanation 1 is actual information, explanation 2 is deemed information. Actual information, risk management strategy, C&AG audit, TIEA, DTAA, faceless collection of information, then court order. 5. And here search was initiated or books was requisition, 2 things, survey other than TDS TCS survey. Then AO, I have satisfied that the money, bullion, jewelry belongs to somebody else, books belong to somebody else. That somebody else only will be the SSE. He is doing the raid of somebody else, but then he found somebody else's data. That somebody else will become the SSE now, because now I found all the other persons, SSE's details in somebody else's house. Notice under 148 can be issued with this information. Deadly. So coming back, you see, information under section 148, income escaping assessment. First proviso, I require prior approval of the higher authorities. I need to take prior approval before giving what? Before even going ahead with any notice. So that prior approval can be taken under section 151 through a sanction. Principal, Chief Commissioner, all these people will give the sanction. And then, guys, first of all, what should I have? Information. Then I should take permission under 148 first proviso. How will I take permission? By the authorities mentioned under 151. Authorities are mentioned under 151. Then, guys, there is a concept called 148 capital A. That is a procedure. 148 capital A, that is a procedure. That is called principles of natural justice. That is show cause notice to a show cause notice it is. 148 capital A procedure, principles of natural justice, show cause notice to a show cause notice. Deadly. You would have heard till now show cause notice. Where have you seen show cause notice? 143(2). Scrutiny assessment notice. Correct. Then best judgment assessment 144, you would have seen a show cause notice. We have seen that. Here also they are giving a show cause notice. And this is one show cause notice, before show cause notice, deadly. The principles of natural justice, SCN to SCN. And this also I should get a sanction. I should get a sanction. And there is no sanction if one more order has been passed, that we'll see later. You leave that. Ultimately, what will happen? Show cause notice under section 148 has to be filed after this. Guys, first one, SCN to SCN. After that, again sanction and then given a final show cause notice. First, I'll give a warning. These are the information that I have with me. Tell me why a show cause notice should not be sent on you. Give me reasons. Then I'll wait for you to reply. Because it's a very deadly thing that I'm doing now. I'm putting a 147 case which is deadly. So before even sending why, I should ask, I should warn you, saying that, look, I am going to send you. That is called SCN to SCN. I am not saying I'm going to open assessment. I am going to show, giving you a show cause notice to explain yourself. Before that, kindly explain now only. Before, let's avoid that. One warning. You don't listen to the warning. You don't reply. So then I'll give you this final thing. Okay, boss, I'm going to open the thing now. 147. Please tell me why I should not open. 148 is I'm going to send you a notice for opening 148, 147. Tell me why I should not send a notice. That is 148A. This 148 is what? I am opening the assessment again under 147, income escaping assessment. Tell me why I should not open the assessment. That is 148. Both are different. I have made it the easiest way to follow. Do not read anything else. This much is more than sufficient. And then assessment will happen under 147. Then the time limit will be under 153.2. Time limit of completing the assessment will be under 153.2. But guys, interesting point. There are certain star points. That is 3 points in explanation 2 and 1 point in explanation 1. 3 points in explanation 2 and 1 point in explanation 1. That directly bypasses everything. And directly I can go to and give a show cause notice. Which are those 3 points? Logically, you only tell me. 3 points in explanation 2. First point, it is clearly I have done a raid. In the raid, it is shown so much gold, money, everything is shown, which definitely you have not shown in the return. Should I sit and waste my time to give SCN to SCN? No. Please show cause as to why I should not give a show cause. No, it's right there in front of me. What more do I want? Proof. So that for that case, no need of 148A. No need of 148A. You will directly bypass everything and go to 148. Second, that's what now you will raid somebody, you will find somebody else's property there. It's written there clearly. What is there to ask? Presumptions. I have already assumed it's yours. Should I say I'll give you SCN to SCN? No, direct SCN. So books and documents if I get, or other things if I get, direct. No questions asked. I already have the procedure, so no questions asked. Right? Yes. But if I do survey, etc., then I have to give a show cause notice. Then 1 point in explanation 1, that is faceless collection of information. Guys, the fact that I have information on you, faceless, that itself shows that you have the income has escaped assessment. Why should I even actually go ahead with you and then say, please give SCN to SCN, not needed. So for 4 points, 148A will be bypassed. Search asset found of SSE in somebody else's house, books and documents found in SC in somebody else's house, and lastly, faceless collection of information. in actual information, that is explanation 1. So predominantly if I have to see this chart here which we just saw, this one, for this one and 2, 3 and 4. These 4 items which I have made it in yellow. This one, search, money bullion, documents. For these 4 items will bypass 148A. It will only bypass 148A. What is that 148A bypass? SCN to SCN will be bypassed. Show cause notice to show cause notice will be bypassed, guys. SCN to SCN will be bypassed. Hope you understood. Got it? Then assessment will happen under 147 and time limit under 153 too. This again, this another sanction is not needed if there is a fit case order that we will see. So guys, to explain the concept to you, prior to Finance Act 2021, search and seizure had a different procedure under 153 capital A. Finance Act 2021, Nirmala Madam, gave a sunset clause for 153 capital A. Different assessment only was different. And she made everything to come under 147. Search and seizure case was part of another section which was removed in 2021 and everything was made to come under 147. Similarly, survey. Survey was always under 147. I hope you are getting the point. In 2021, till 2021, search was under 153 capital A. That got removed in 2021. Everything she merged into one simple procedure of 147. But till 31st August 2024 only. Because the thing is, now things have changed. So why am I doing this old procedure, sir? I am doing this old procedure only to make you understand the search case, search. Because my dear friends, the current procedure I am doing, full procedure, no, whichever I am doing now, 148A, all those things, will apply to what? Search cases till 31st August 2024. If anything has been searched from 1st September 2024 onwards, new procedure has come. Should we do that new procedure? Yes, later. This will be done later, don't worry. I am doing only this now to tell you in the exam if they ask you any question. Date is very important in the current exam that you get. Search was conducted on 1st August 24. This procedure you have to follow, whatever we are doing now. Because as I told you, in 2021, all procedures were merged into 147, which we are doing now. Guys, everybody with me, give me thumbs up. I want you to understand this. Are you with me? Give me thumbs up. Online people. Sir, when the law has changed, why are we doing the old procedure? Because, my dear friends, Nirmala Madam has told for search conducted from 1st September onwards, new procedure. ICA fellows are little crack. They will give, okay, search was conducted on 1st April. 2024, 1st July 2024, 1st August 2024. You cannot write the new procedure. It's the old one. So we are doing this only and only and only because, only for this attempt actually. May 25, May 24, November 24. Sorry, May 25, November 25. Because after that only new will come, no? In 2026, when we are standing, we will not tell, okay, search was conducted before 1st September. No, this will be forgotten. So unfortunately, you have to study both the procedures. No choice. Unfortunately, you have to study both the procedures. So I repeat again. Till 31st August 2024, old procedure will happen, which what we are doing now. So, and this 147 also, see 147 is what? It will have search also, survey also. What did I tell you? The concept of survey, concept of faceless information, the risk management policy, then TIEA, DTAA, that was always there. This was always in 147. Now this 147 also has changed to new 147. Correct. So we have not done the new 147 yet, and we have not done the new search procedure yet. We are studying the old one which was there only to ensure that we know what was the procedure for search. I hope you got the point. We are only doing the old procedure to figure out what was done the search. Similarly, they can ask you, survey was conducted in 1st August. Survey was conducted in 1st July. We have to follow the old procedure. Faceless collection of information was done on the 5th May. Institute, you know, they removed law. Correct. On the top, whoever is deciding, God only should help them. Right? I tell it in every single forum that, I mean, ICA is an amazing body, but some of the people running it, some of the people have zero brains. Right? Unfortunate. They are killing the profession by doing some stupid things in the syllabus, like removing law. Because you will need law every single time. Whenever you study, whenever you work, you will need the law. Very sad. Anyway, leave it. So, I hope you understood why we are doing the old procedure. This procedure now. This procedure is to help in understanding old search cases. When I say old, it's not too old also. Before till 31st August. We are doing this procedure to understand old search cases. We are doing this procedure to understand old survey cases. Old faceless collection cases. So, after 31st August, no. This entire list that you saw is split into two. Search will be a different procedure. Other remaining things, faceless collection information, survey, CBDT, risk management policy, that will be separate. What is that separate thing we haven't yet discussed? I hope you understood the structure now, my dear friends. So we are understanding the case current procedure to understand the old search, old survey, old risk management, everything old. Hope you got it. So as I told you, now Finance Act 22 also cleaned up everything. And then finally added 148B, everything they added that you leave. But ultimately, this is still old for us now. And 148, notice that I'll give under 148, I will ask you to file a return. And that return is mandatory. And return filed under 148. So basically in that 148 notice, this notice here, show cause notice, I will say, boss, you have not responded to everything, please file a return now within the due date. They'll give you some due date. If you don't file, Is it mandatory, discretionary? Mandatory. Can that return filed under 148 be revised? No, since it is not a return under 139.1, 139.3, 139.4. It cannot be revised. One final return you have to file. That's it. So, to revise, check explanation 1. Any information, risk management, audit objection, DTAA, faceless collection of information, court or tribunal order. In these 4 items, point number 4 is highlighted. Why? Because in point number 4, it will bypass everything. So except point number 4, for 1, 2, 3 and 5, I have to follow the procedure of 148 capital A and 151 sanction. And guys, when I am doing that procedure, the assessing officer will pass a fit case order saying that yes, I feel it is a fit case for 147. He'll analyze everything 1, 2, 3, 4, 1, 2, 3 and 5, sorry, and he will say yes, it's a fit case. So we'll pass an order under 148 saying fit case. So the moment I say it is fit case, again sanction not needed. So 148 notice, I will directly give show cause notice asking you to file the return there. No 151 sanction needed again because a fit case order has been passed. And 149 timeline to be followed. And 147 AO to be AO, that is assessing officer, will complete the assessment within the 153 time limit. I'll say assessment to be completed. Assessment to be completed within 153 time limit. This is from which side? First side. Explanation 1 side. Explanation 2 side. 132 search. 132A requisition. Then books, documents, somebody with another person. These 3 items. Survey, normal survey is covered, function is covered, TDS, TCS is not covered. Survey will still go through the normal route, but these 3 star points and this star point here, faceless collection, will bypass all the star points. 4 star points, 148A will be bypassed. You will take a sanction and directly 148 notice will be given. There is no SCN to SCN concept. And finally, 147 will be passed by Income Tax Officer, Assistant Commissioner of Income Tax, DCIT, ADIT, DDIT. Everybody below JCIT. Everybody below JCIT can pass the order. But if there are any mistakes, I should check, right? So that's why 148B was introduced. And they say it will be get the mandatory sanction of their higher ups. Joint Commissioner, Assistant Commissioner. So anybody below Joint Commissioner can pass the order with the approval of the higher up. Who is the higher up? JCIT, ACIT, DCIT, etc. It will be passed by whom? Either it can be passed by below JCIT or it can be passed by JCIT, ADIT, additional CIT, higher authority. That's all. It can either be passed by lower authority with the approval of the higher authority, or it can be passed by the higher authority only, no problem, without any approval. So this is the revision point of information and deemed information. Got it? So, we'll revise this point later. Amendment you don't read. That's it, guys. So, yes. So, that is the first part of the story. Now, amendment we'll see in a while, no problem. So, what is the time limit, guys? Time limit. Time limit to issue notice under 148, section 149 says, notice can be issued within 3 years from the end of the relevant assessment year. On the other hand, notice can be issued beyond 3 years also, but up to 10 years period. So, notice can be issued beyond 3 years or up to 10 years period from the end of the relevant assessment year. The following conditions are satisfied. Basically, if the expense, asset, expenditure, entry in the books, etc. is 50 lakhs or more. This is the procedure till 31st August, till 31st August. So, if my previous year is 17-18, assessment year will be 18-19. So, notice for the previous year 17-18 can be issued within 3 years from the end of the relevant assessment year. 31st March 2019 is the end of the relevant assessment year. Plus 3 years, 19 to 20, 20 to 21, 21 to 22. Till 31st March 2022, I can open the proceedings of 17-18. 17-18, I can open the proceedings till 31st March 2022, assuming the amount, this is generally up to 3 years. Predominantly, if the amount is, what do you say? Whatever amount it is, generally. But, sir, can I open 14-15, 13-14, 15-16 also? Yes. Beyond 3 years, up to 10 years I can do. Provided the income escaping assessment is how much? More than 50 lakh rupees. The income can be in the form of an asset, expenditure, entry in the books of accounts, amounting to more than 50 lakhs. Income escaping assessment should be how much? More than 50 lakh rupees, guys. Only then I can go beyond that particular thing. Absolutely, I can check beyond that. So, if this is the time limit which was there before, which means even for search cases also same. All search cases before 31st August 2024, if I have to open the case, it is 3 assessment years, 3 years from the end of the relevant assessment year, or 3 to 10. 3 to 10. So, in the old one, no, it used to be 4 to 6, beyond 6 not applicable and all those things. But in the new one, it is how much? It is very simple. In the new one, it is still 31st August 2024. It is 3 to 10 years. Up to 3, 3 to 10. 3 to 10 if the amount is more than 50 lakhs. Now, I told you about the fit case order, right? 148 AD. I can do a fit case order. The assessing officer will pass whether it's a fit case or not. Now, that fit case thing, order, can it be appealed against? That fit case order, can it be appealed against? 246 capital A, Commissioner of Income Tax appeals. Can I go? Or can I go under 253 ITAT? So, yes, basically, if you see, can notice under section 148 AB be appealed again? Show cause notice of show cause notice, cannot appeal. Can 148 AD fit case order appeal? No, because if I go to 246A, CIT appeals, any order can be appealed only under two sections. One, 246A, CIT appeals, then you can go to 253 ITAT. ITAT is the last fact-finding authority. After that, it's only question of law. Question of law, I can appeal to High Court and Supreme Court. But the last fact-finding authority is what? CIT appeals and ITAT. So 246A and 253. So any order appealed 246A, CIT appeals and 253 ITAT. Can notice under 148 AB be appealed? Show cause notice of show cause notice? No. Can 148 AD fit case order be appealed? No. 148 AD is not appearing in 246A and 253. What is the remedy? I told you already. For every remedy, the only remedy is a constitutional remedy. I can file a writ petition to the High Court. I can file a writ petition to the High Court. Very, very simple. So, for example, assessing officer had information about his Bangalore business and he opened a 148 and a fit case order of 148 AD. During the inquiry, he comes to know about income escaping assessment in Chennai business also. Is further 148 again needed? One more show cause notice should I give? No. Since the same SSE, same assessment here, explanation to 147 says no 148 needed again. Can be asked in MCQ. New 148 is needed again, not needed again. So explanation very clearly says not needed again. There was a case law where they said it was needed. So to nullify the judgment, they passed this order. Next, 148 AD, assessment year 21-22, PGBP head. Okay, so 148 AD, that is what? Fit case. When I was checking, under the PGBP head, I had passed a fit case order and the assessment was going on. During the course of the assessment, I found AO found capital gain also had escaped assessment for the same assessment year. He was doing PGBP, then he realized capital gain also was income escaping assessment there. Should I give a 148 notice? No. Same SSE, same assessment year, explanation says no need of 148 notice. On the other hand, in assessment year 2021, when I was doing for assessment year 21-22, I came to know some prior period item, assessment year 2021, that had escaped assessment, CG. So yes, guys, since the assessment year is changing, SSE may be the same, assessment year is changing. So new section 148, new section 148 AD. New section 148 and new 148 AD has to be passed. What is the time limit of completion of 147? Should be completed within 12 months from the end of the financial year in which 148 is served. 147 should be completed within 12 months from the end of the financial year in which 148 is served. Assessment year 18-19, 148 notice could have been served till 31st March 2022. Correct? When should you file the 148 notice? 148 notice can be filed when? Within 3 months from the end of the month in which notice is received. Correct? And for assessment year 18-19, when can you file maximum? 3 years, no? 3 years only. How 3 years? Assessment year 18-19, 31st March 19, 19 to 20, 20 to 21, 21 to 22. Assuming it is not more than 50 lakh. If it is more than 50 lakh, only 10 years. So the last date when which can serve the notice will be 31st March 2022. 148 notice was actually served on 20th January 22. No problem. When should you complete the assessment? 12 months from the end of the financial year in which 148 is served. When is it served? 21, 22. What is the end of the financial year? 31st March 22. From there, 12 months. So you should complete the assessment before. You should complete the assessment before 31st March 2023. 31st March 2023. Hope you understood. Later you can, check all this. Don't worry. I'll give you time. Then these are all MCQ questions. I have made it into examples. MCQ questions I have made it into examples. Right? During the course. Correct. So people ask me, sir, how do you study so much in depth? For income tax, the credit should go solely to my guru, Shri Vinod Gupta sir, VG sir as we popularly call him. He is an encyclopedia on taxation. Living and breathing encyclopedia on taxation. I am very happy and proud to call him my guru. So when I was studying, I did not have money to buy his classes because his classes were almost 30,000 rupees. He was the first person in the whole of India to start satellite classes back in the day. Now he is retired from teaching, but yes. So I could not afford his classes, so I bought his books. His books are the gold standard for any CA student. But unfortunately, students want shortcut now. Nobody, opts for that methodology. Some 8 to 10 volumes of books. Everything in depth. Crazy books, amazing books. That only was some 3,000 that time. That only we could afford. Then I studied from his books. And once I cleared, I messaged him, he replied also. And then once I embraced direct access, I just messaged him saying how his teaching have made an impact in my life. He immediately replied. Then I just said, sir, I am also a teacher, sir. Can I seek your blessings? Can I come to Delhi? He said, come. So cool, no? Next day I went, sought his blessings. And whenever I'm stuck in direct access somewhere, I'll try to read everything. Everything I did, still I have some, I'm not convinced. If I want to get convinced, I'll just message sir. Sometimes he only calls me immediately. Such is the great man, Vinod Gupta sir. Right? So all this analytical mind, etc., where to look, I got it from him. So I'm happily, I share this in every class. Right? Amazing. Amazing, amazing teacher. Right? Yeah, he is the real encyclopedia of taxation. Real guru of taxation. Amazing. So I will never forget sir and what he has done in terms of the knowledge he has given to students. Amazing, right? So of course, with that, and of course your own way methodology, you can figure out how students think, what examiners think, etc. Now is the time of summary book and that whatever fast track, marathon, whatever. We are all doing the same thing, but I'm saying this is not the way to study, guys. Not the way. Correct. So I had actually taken, direct access classes again after clearing the exam also, because that time you can sit with a very clear mind without any hassles. So just to understand in-depth thing, I had again taken some classes back in the day. So what we are studying now is really not the way to study, but no choice. Nowadays students only have become like that. They want everything shortcut. If I tell 150 hours or 150 hours, please finish it in 80 hours, 90 hours. How can you finish everything? But we have to devise a way. We have devised. See, aren't we finishing? Yes, we are finishing. Right? Yes. So first only I told you that I am not going to go fast. Whatever it is, I'm going to do it like this only. And anything extra, I'm going to give you a video. I told you already. Right? This is not even a fast track batch. My fast track batch also is some 170 hours. My regular batch is some 240 hours. Correct? So it is impossible to finish in the hours. But I told you, we have to devise a way. Perform or perish. The demands of the industry are what? Finish everything in shortcut method. But I don't want to do shortcut method. I am trying to break down the entire law into these charts. That's the logic. Ultimately, it will be effective, guys. Ultimately, you will clear. Right? But personally, if you ask me, is this the right way to study? For examination clearing, yes. But is this the right way to study for life? No. I always say that. But it's okay. But you will say, sir, that I'll figure out later. First, let me clear the exam. You have to listen to that also, no? You have to first clear the exam. Then only you have to talk about the life aspect. Right? No problem. But do not worry. Whatever we are doing is more than enough for the examination. We have solved questions also separately. You have seen how you can at least apply the questions and answer. Yesterday when we solved questions, you are able to easily apply and everyone could solve. There was one mistake in the answer also, you figured it out, right? So, my objective is clear. Whether we take 50 hours, 40 hours, 30 hours, 20 hours, ultimate objective is what student should clear. But I always used to think about after clearing what will happen. That I've stopped thinking now because the majority of the students don't think that way. So I have also changed my methodology. Let me not go 10 years later how they should feel, 5 years how they should feel. Let me just concentrate on making them clear the exam. After that, they'll only figure it out, no problem. So when I was handling law, I was of the opinion that 5 years later we should see. Now I've stopped that. I like, okay, next 6 months exam now, you want to clear, I'll help you clear. You want, how will you want to clear? You want to clear in-depth way, fast track way, marathon way, whichever way you tell, I'll make you clear for sure. That should be the attitude. Change with the times, right? Sad but true. Sometimes you have to accept. Yes. So, writ petition in High Court is what you need to do. Okay, guys? Yeah, I was just thinking about VG sir, and yes, hats off to the man. Brilliant. So, all this analytical mind from sir only. He taught us how to think, how to go here, go there, all those things. And we are just passing on the legacy. That's all, guys. Right? No one can even come close to him. Nobody can touch him also. That is how awesome he is. Yes. So during the course of the entire deal, what will happen? During the course of what? Assessment procedure. Then 24th August 2022, 20 lakhs has escaped income. 20 lakhs has escaped income. So should I do 148 plus 148 AD? Not needed because 147 explanation says that during the course, if you have additional stuff, when did the thing open? This entire thing opened. I've opened the proceeding already. During the course of the investigation or during the course of the proceeding, I found again 24th August 2022, 20 lakh more had escaped income under 148 and 148 AD. So, should I again give 148, again notice 148 AD for new income coming in? No, 147 explanation says not needed. On 10th March 2023, 48 lakh had escaped assessment. 149 can be done only till 31st March 22. The same example, this one. I can do only till 31st March 22. But I found income escaping assessment on 10th May 23. The last date I can send notice was under 149 was 31st March 22. And the assessment should be completed by 31st March 23. I am getting information on 10th May 23. Is it time barred? Yes, time barred. No 147. On 10th May 23, 64 lakh has escaped assessment. 64 lakh. Assessment 18-19 can be reopened till 31st March 29. Why? 10 years. Anything found on or after 1924, there is an amendment. Finance Act 24 will be discussed later. Right? Assessment 18-19 can be reopened till 31st March 29. New notice under 148 is needed. New order under 148 AD can be issued. So in 147, income is assessed. In 148, you will serve a 148 notice. In 148A, before issuing a 148 notice, you shall serve a show cause notice before 148 notice. And in 149, notice shall be issued. This issued and service is of no use now because everything is email. So there is, you don't have to remember these things, it's okay. But I'm just telling these are the wordings given in the law. Notice shall be issued when? For less than or equal to 3 years, any amount. For greater than 3 years up to 10 years, 50 lakh rupees. So when I say the word issue, generally it used to mean, is it date given in the notice, date mentioned in the, well, the AO signs, is it the day when you actually post it or when you hand over to the post office? Kanubai Patel clearly said, whenever I use the word issue, it is the day you hand over to the post office. Now it is called the date of sending the email. Now it's very simple, it's date of sending the email. One more case. Last date of sending notice for 18-19 is 31st March 22. 28th March 22, 31st March 22, June 22. Correct? So the last date you should send it was on 31st March 22, obviously. 3 years. SSC died on 28th March. Notice was sent to legal hair in June 22, possible or not? No, time barred. I can send it to legal hair for all the property which is belonging to the old SSC, but that also should be sent before 31st March. Vipin Walia case. Then share by Patel and R.K. Upadhyay to be issued on 31st March 22, handed over to postman on 30th March 22, served on 5/4/22. Issued before time limit, served after time limit. Yes, guys, it can definitely be issued before 31st March 22. As I told you, now the email should reach him before 31st March 22. Email should reach him before 31st March. Sir, if it bounces and all, I cannot tell because I will purely go by whatever email ID you have given. Actually, 147 is always for the benefit of the revenue, guys, as per Sun Engineering case law. Matters lost in original assessment for which you have not claimed any appeal cannot be claimed in reassessment. Guys, 147, mind you, is always for benefit of revenue, same as 144. In the original assessment, you have lost a matter with respect to allowance or disallowance. You have not filed any appeal. Suddenly you will wake up and can you claim that deduction in a reassessment? No. Expenses not claimed earlier cannot be claimed in reassessment. That was a Supreme Court judgment in Sun Engineering. So the regular assessment, the assessing officer did a disallowance. I did not claim it only. Or even if I claim it, I lost it in the case. I did not appeal also. Suddenly when you reassess the income and add more income, can I go back and say, sir, that day you did not allow, this time you please allow? No. But with respect to the escaped income, can I do certain things? Yes. Escaped income I can do. Other things I cannot do. Couple of more things, then we'll break for tea. 148 explanation to deemed information. What is deemed information? Search, requisition, books of account with somebody else, bullion with somebody else, survey. Survey is also deemed information. Even though it is deemed info that AO has info, still 148A procedure is needed for survey. You have already seen it. And 148A enquiry procedure is not applicable to search, requisition, books with others, and faceless collection of information, which you already know. So we'll have to do the exclusions. We'll have to do the exclusions that we will see. We will see. So after everything, guys, now we have to do the exclusions. This one. With effect from 1st April 2023, a period of 15 days to be excluded for the purpose of computing the period of limitation under 149. Cases referred to in clause 1, 3 and 4, that is deemed information cases. When the search is initiated under 132, search is initiated when many searches are there, whenever the last search is initiated, and also when I make a requisition with my other department. If it is made after 15th March, and the period for issue of notice under 148 expires on 31st March, then 15 days. Example, guys. You see. In case search is conducted on 20th March, assessing officer is deemed to have information suggesting that income has escaped assessment. We know. He can issue notice for which year? 2021, 21, 22, 22, 23, 23, 24, because 3 years is not yet over. Since 3-year time limit is over. However, for 2021 assessment year, the last date will be only 12 days. No, why? 20th March, if I find, by 31st I have to send. Only 12 days is remaining. It is less time. So what this section is saying is, if the period for the last days is just, less than 15 days you have, that's all. In this particular case, when you have done a search, on 20th March in such a way that you only have 15 days to give the notice. Then they are trying to tell that you can extend it by 15 more days, which means, guys, you can now issue the notice up to 15th April. This they can ask in MCQ. So 15 days has to be excluded. Similarly, I have to give an SCN to SCN, right? And in SCN also, I should give him time to respond. That time to respond also, I have to exclude from my calculation, because if I've given him 20 days time to respond, that 20 days I have to exclude. Ultimately, they are trying to tell that I have to exclude all these things and only then do the needful. So whatever it is, I have to exclude all the provisions and only then do it. So exclusion is the key. That's what they're trying to tell. Then also, let's say the person who got this notice, he immediately went to the High Court to get a stay order. So when he's going to High Court to get a stay order, that stay order, the High Court says, okay, stay order will be granted for the next 20 days or 1 month, 2 months. That stay period also has to be excluded. So what all you will exclude? If it is more than 15th March. After 15th March, 15 days you exclude. Then opportunity for being heard you should exclude. Injunction you should exclude. Even after doing all these things, if the time available for me to pass the fitness order under 148 AD is less than 7 days, then the time will be extended to 7 days. Means what you see, For assessment year 18-19, AO had information on Mr. Khan of an income of 35 lakh which had escaped assessment and issued show cause of 148 on Mr. Khan on 10-3-22. Mr. Khan had to respond by 7-4-22. So guys, 10-3-22 to 7-4-22 has to be excluded because that's the time given. Mr. Khan filed a writ petition to the High Court on 8-4-22 only. The High Court passed a stay order on such proceedings till 17-6-22, guys. 10th March to 7th April I have to exclude. 8th April to 17th June I have to exclude. And the time limit for passing 148A is 1 month from the end of the month in which the time allowed to file response to the show cause notice expires, as the SSE did not respond. So if you see, the time limit is 1 month from the end of the month in which the time allowed to the SSE is expiring. This 7th April 2022, end of the month is 30th April. 1 month from there is 31st May. Since the time limit has already expired because the stay order is till 17 June. On 17 June, I'm coming out, stay order is lifted. On 18 June, I'm telling I have to pass the order. But the order passing date is only 31st May. But no, to that 31st May, I should add what? 10th March to 7th April, 8th April to 17 June. So they are saying since it's already expired, I will get 7 days to pass the order. So what will be the time limit? 29 days time needed to respond to show cause notice, that is from 10th April to 7th March, plus 71 days, that is the entire stay order period. What is 71 days? 8th April to 17 June, plus 7 days, which is calculated in point number 1. Totally 107 days I will get from 31st March 22, 16th July 2022. This also can be MCQ question. So time taken to reply is exclude, extended time given for replying. Sometimes they can give you extended time if you beg. If you go beg, they will give you extended time to respond. So that also you should exclude. Court order, any injunction if it is there, that also you have to exclude. And if search or is initiated after 15th March, then 15 days. So for assessment year 2021, income if it is less than 50 lakh, last day is 31st March 24. Correct. If the survey is happening on 20th March 24, survey 148A notice, they are giving 10 days time to reply. That you have to exclude. So 10 days will now become 30th March 24. I will reply. 148 notice time limit. Exclude the time to reply. That is 30th March 24. 31st March is the last day. No, I have to exclude that. I have to exclude 10 days. So till 9th April, no problem. 10 days is excluded. But 148 is given on the 11, 12, 13, 24 date is valid. It can be issued up to 24/4. Why? I should do 10 days plus 15 days. That is what it says. You will get the extension of 15 days only if you do the search after 15th March before 31st March. Otherwise, no. Basically, at least one should happen before 31st March. At least one should happen before 31st March. Then 15 days extension is allowed. What one should happen? Somebody should impound your books, AO, or they should record a statement, or search should be initiated. 15 days extension is allowed. For example, on 30th March search happens. 2nd April recording happens. 3rd April impounding happens. Because one of it has happened before 31st March, 15 days extension will be allowed. So we'll do a full revision of this to understand, so that there will be absolutely no doubts, guys. Come on. Coolly. See, quick revision. Everything applies till 31st August 2024. First one, show cause notice under 148 AB, opportunity of being heard. This I will have to give an opportunity of being heard when? 7 days to 30 days from the date on which the notice is issued, or extension with the sanction. Correct? So this is SCN to SCN. I will say either reply within 7 days, or I will give maximum time 30 days. One order under 148 AD, fit case order. First one is what? SCN to SCN. Second one is what? Fit case order. Fit case order will be within 1 month from the end of the month in which SCN under section 148 AB is reply is received, or whenever it expires. You should pass an order within 1 month from the end of the month in which show cause notice under section 148 AB reply is received, or reply is not received whenever it expires. Then I have to send a C. First one is SCN to SCN. Second one is fit case order. Third one is SCN. Send a notice under section 148. I will demand you to file a return within 3 months from the end of the month in which notice is received. Send a notice under section 148 to file a return within 3 months from the end of the month in which notice is received. Time limit under section 149. For search, 1 and 2 is not applicable, obviously. Directly I will come to this. For search, 1 and 2 is not applicable. In fact, for 4 things, 1 and 2 is not applicable. Search, requisition, faceless collection of information, and when I find some data in somebody, when I find the bullion, jewelry, or books of an SSE in somebody else's house. So in all these cases, 1 and 2 point, this 1 and 2 will not apply. 149 time limit, 3 years from the end of relevant assessment year, 3 years to 10 years it can go if income, asset, expenditure, or book entry is more than or equal to 50 lakh. What are the exclusions while computing 149 time limit? Time allowed to reply to SCN under section 148 AB. Extended time allowed to reply to SCN, that is also to be taken into, to be removed. 148A procedure if it is stayed by the court. Even after excluding 1, 2, 3 above, remaining time AO to pass 148 AD is less than 7 days, then extended to 7 days. Then survey, search or acquisition. If you impound, documents are impounded after 15th March, 15 days extension. At least one should happen. Impounding, recording, search. Ultimately, 153.2 to be completed within 12 months from the end of the financial year in which 148 is served. This also we had discussed. This is the entire procedure of 147 old. This 147 old procedure included search also, other things also. Till 31st August, all mixed. From 1st September, search is a different procedure, other things are different procedure that I have not discussed. This is the entire procedure for search and other cases till 31st August. From 1st September, search is different, other cases are different. That we have not yet discussed. Till here, is it clear? Everyone, thumbs up. Yes or nobody's? Right? This is a full revision. Couple of other points here. Notwithstanding anything contained in 149, notice under 148 may be issued at any time. in consequence of or to give effect to any finding or direction in an order passed by authority by appeal, reference, revision or court proceeding. So, if a court has given any order, then can I open the proceedings of 148 any time? Yes. But that any time cannot go beyond 10 years. I hope you know that. It should be 10 years only. Right? Yes. As I said, 150 operates to relax time limit. Any time should be within the 10 years only. But then sometimes I'll ask you, when will 147 be dropped? In an assessment, reassessment or recomputation, the tax shall be chargeable at rates at which it would have been charged had the income not escaped assessment. That is respective rates of the relevant assessment year. Where assessment is reopened under 147, SSE may claim that the proceedings under 147 shall be dropped if we can show that tax liability is more than or equal to the amount that even if the income alleged to have escaped assessment had been taken into account. So guys, sometimes there may be a scenario where he may claim escaped income expenses, right? I told you escaped income expenses I can claim. When I'm claiming the escaped income assessment, I can prove it to you that, sir, if I pay tax now, including all those things, it will be much lesser than what even if you add that to the income, it will be the same. In fact, I'm paying more tax now only. Let me go. Under those circumstances, you can let go of this. This is just a revision. You can just go through these points. They are nothing great. Anyway, so go through all this. And most important is this revision, guys. Full revision. So in the exam, if they ask, in the exam, which exam? May 25, November 25. If they ask you search procedure conducted till 31st August, you should write point number 3 onwards, full. Okay, that's what. Very important, write down. Okay, guys. So, what was I saying? That now two things have changed. So, in this, what were you doing? Everything applies till 31st August 2024, right? So, this entire procedure, that is, we have from 1 to 6, right? 1 to 6 procedure. Old procedure 1 to 6 applicable to 147 cases except the 4 star points. Search. Remember, search deemed information, that is your collection, faceless collection of information, search. And when I went to somebody else's place, I found the SSE's other data. Whereas 3 to 6 applicable to search cases. This is all till 31st August 2024. There is no doubt about it. I hope we have done it fully in depth. Now, from 1st September 2024, for search happening after 1st September 24, new procedure. Similarly, other 147 cases. Only the search is changing. Search is changing to different procedure. Other 147 cases. All other 147 cases. Correct? There is a new 148, 148A procedure. Hope you understood. Mind you, they are saying from 1st September 2024, all 147 cases except search, obviously, except search, will go under the new 148 process. Cosmetic changes, just few changes, that's all actually. Few changes from old procedure. Few changes from old procedure. But search, the new procedure is fully different. New procedure of search, fully different it is. Did you understand the structure, yes or no? Please. So guys, we had finished the old procedure of search and seizure and income escaping assessment. Now we need to understand what is the new process. So you see, income escaping assessment. Guys, in 1980s to 2003, 147 had all other cases. Means what? Collection of information, tribunal order, court order, double tax avoidance agreement, tax information exchange agreement and all that. Whereas search cases was a part of concept called block assessment. Means what? If I open 1 year, if I open, let's say, 2000, if I open the books of 2000, if I do the search of 2000, automatically last 6 years you had to do the assessment. Means what? If I search your premises in the year 2000, from 1994 to 2000, everything would automatically reopen. That was the concept in 2003. Okay, so in 2003, the finance minister, I think it was Chidambaram, if I'm not wrong, or Pranab Mukherjee, I don't remember who it was. So they changed it and they said, let us do different now. All other cases means what? Collection of information, tribunal order, court order, DTA, all other cases, let me continue with 147. Whereas search cases, they said, let me abolish the concept of block assessment. And they started a separate sort of assessment called 153 capital A. It is individual assessment every single year. Guys, I already told you in 2021, they merged everything. I told you, right? In 2021, they merged everything. Only one section was there. 147. 147 was there for everything. What everything? Collection of information, DTA, TIEA, risk management policy, search, survey, and even I enter the premises, somebody else's asset is there here. Everything was merged into 147. Guys, from 1st September 2024, history repeats. We have gone back to 1980s. We have gone back to 1980s, guys. From 1st September 2024, history has repeated. All other cases 147. Search cases, the concept of block assessment has come back. Concept of block assessment has come back. Imagine. Hope you understood. So we need to see what now? A new procedure of block assessment and a new procedure of 147. This is for everything after 1st September 2024. For search happening before 1st September 2024, we saw the class. Point number 3 to point number 6 has to be followed. For search cases after 1st September 2024, new procedure will follow. Sir, can they give anything? Institute can give anything, guys. You cannot say only new thing will come. You cannot say that it's wrong. Anything can come. And if you studied the old procedure, it's very easy to study what is the new change, especially in 147, no? 147 things have changed in 148, etc. If you study the old one, okay, new one is, it'll be easy to remember the new one. I hope you understood the structure at least, right? History has repeated now. Other cases 147. And such cases, the concept of block assessment. Block assessment. Now, in the exam, other than, we'll write down all this later, don't worry. In the exam, other than such cases, new procedure will come. 147, 148 and 148A. That is from 1st September 2024. Old procedure also we should know. We have already checked the quick revision note. Search cases, my dear friends. Search if it is initiated before 31st August 2024. Old procedure. What is old procedure? Point number 3 to point number 6 of the revision notes. Point number 3 to point number 8 of the 6 of the revision notes. But if the search is initiated on or after 1/9/2024, concept of block assessment, new procedure. Concept of block assessment, new procedure. There is a structure. Now let us understand the new procedure of 147, 148, 148A, 149 and all those things. So I will just revise the old one which you knew already. This 148A. This is the old 147 procedure from 3 to 6. From 3 to basically all this 6. It is search. From 1 to 6, I can say it would be old 148. So, show cause notice opportunity be heard 7 days to 30 days from the date on which notice is issued or extension is given. This was the first point. Second point was what? Order under one SCN. This is SCN before SCN. Second one was order under 148 AD means fit case notice. That is within 1 month from the end of the month in which SCN is received or it expires. Third one, send a notice under 148 to file a return within 3 months from the end of the month in which notice is received. For search 1 and 2 is not applicable. Then 149 time limit was what? 3 years to 10 years. All those things we've seen. Then what? Time allowed to reply. Extended time you should exclude. If 148 is state court order, that you should do. And if the remaining days is not less than 7 days, extend to 7 days. All that we have seen. And in survey case, if it is because of search or requisition, if it is less than 15 days, extend to 15 days. Impounding. Impounding, recording or search should happen before after 15th March, before 31st March. Then it will be extended to 15th April. We have seen. An entire 147 to be completed within 12 months from the end of the financial year in which 148 is served. We have seen all this. Now in the quick revision only you keep an eye and you see what are the changes now. Interesting. This is the new 147, new 148, new 148A, new 149 procedure. 7 days to 30 days removed. SCN to SCN. 7 days to 30 days removed. And what have they told? Reply to be given to SCN before SCN under section 148 as per the time limit specified in the notice. That's it. They have removed that 7 days to 30 days. And they have told whatever time limit they have given in the notice. They can give 1 day, they can give 5 days, they can give 7 days, they can give 20 days. That time limit I have to follow. This is the new 148A. New 148A, 149, etc. not applicable to search. Remember, there were three things: information, deemed information. In information, what all was there? Repeat. First one, risk management policy. Second, C&AG audit points. Third, DTAA, TIEA. Correct. Fourth, faceless collection of information. 5, tribunal order. In information. In deemed information, what was there? Search. Then requisition. The search, somebody else has searched GST department. I'm requesting them. Survey. Then when I enter somebody else's property, somebody else's accounts are there. Beauty is, in the deemed information concept, they have removed the concept of search. And they have removed the concept of deemed information only. They have merged everything. There is no information, there is no deemed information, everything is merged into one. Correct? In the new 148A procedure, in the new 148A procedure, my dear friends, you see, where the SC young officer has information and suggests that income has escaped assessment, you should give a SCN of SCN. That's it. You should reply within such period as may be specified in the notice. 7 days to 30 days removed. Fit case order will be passed. That's it. Information. And in 148, they have given the dialogue of information. You see here. First one, risk management strategy. Second one, audit objection. It's not just C&AG, everybody, all audit objections. Third one, 90 and 90A. Fourth one, faceless collection of information. Next, tribunal. Next what? Survey. What is removed? Search, fully removed. Search, when I enter your place and search. Second one, somebody else has searched, I'm requesting, that is also removed. Third, when I enter your place and search, I find somebody else's books, removed. Why? Everything is now covered in the new search procedure. So guys, information, deemed information, merge. Did you understand? Yes or no? This is the new 148. Then we had seen fit case. Fit case is not needed for, the concept of 148A you will bypass. You will bypass for 4 items. You will bypass for 4 items in the old one. First, faceless collection of information. Second, search. Third one, requisition. Fourth one, when I enter the search, somebody else's property is there. Somebody else's asset is there. In this, these 3 things already removed. No, these 3 things already removed. It's not part of the new 148, which means 148A, SCN before SCN is needed. For other things. It is not needed for faceless collection of information. Earlier, SCN before SCN bypass. Bypass used to happen for 4 items. In that 3 items are already removed now. Now bypass will happen only for 1. I hope you understand how easy it is to study the new thing when we know the old thing. If you have to study it from before now, it would have been difficult. Now it's very easy to understand what is the old thing, what is the new thing. Fit case order. Remember, fit case order number 148 AD had to be earlier done before 1 month before the end of the month and all, removed now. Fit case order, time limit removed. Then SCN to SCN should be accompanied by information. They have defined it in 148. I have told you what do you mean by information. Except faceless collection of information 135A. In all other cases, SCN to SCN is needed. What is SCN to SCN information now? Point number 1, risk management strategy. Point number 2, audit objection. Point number 3, DTAA. Point number 4, TIEA. Point number 5, tribunal order. Close. Sir, faceless collection, for that SCN to SCN will not come. Everybody with me online? Yes or no, guys? Easy. If you know the old one, new one is easy. Reply, guys. Come on, all of you. Yes. Next. 148 notice is issued. Correct? Again, you see, there they had given in the old one 148 notice to be issued, and you need to file the return. When should you file the return? You see the old one. Send a notice under 148. File return within 3 months from the end of the month in which notice is received. That dialogue was there. See now. 148 notice is issued, return to be filed as per the time specified in the notice. That's all. But maximum 3 months from the end of the month in which notice is issued. Same thing only they have retained, but they have added one line as per the time specified in the notice. 135A faceless collection is not applicable to. Basically for 135A, in that 148A, SCN to SCN will not come. Direct 148 notice after approval of specified authority. Obviously, because guys, in the old provision, SCN to SCN was not applicable to first one 135A, second one search, third one requisition, fourth one search and others assets are found. And in the new provision, these three are deleted anyway, and it is shifted to new search provisions. So obviously what remains? Only 135A. This is the bypass rule. Bypass rule. So here 135A faceless collection of information, 148A not applicable, direct 148 notice after approval of specified authority. Next, survey. Survey is also there, no? Survey. Survey other than TDS or TCS survey shifted from deemed information to normal information. I think I told you, no, everything is merged. So in this merger, what all will it be? First one, risk management. Second one, audit objection. Third one, DTAA. Fourth one, TIEA. Fifth one, survey. Sixth one, tribunal order. Seventh one, 135A. But for 135A, but for this, no SCN to SCN. Correct? They have merged information and deemed information. Earlier, survey was part of the deemed information. Now, survey is not part of the deemed information. Survey other than TDS, TCS survey shifted from deemed information to information. And for all information except 135A, 148A is mandatory. right? So if you see, can you see guys? Now, notice under 148A, normal period 3 years. There we had seen 3 years to 10 years, no? All that is not there now. It is 5 years. If the amount is more than 50 lakh rupees, 5 years. That is notice under 140 SCN to SCN. And for SCN to SCN, you need 3 months to respond. That's why normal SCN. This is SCN to SCN. This is normal SCN. They are given 3 months. 3 years and 3 months, 5 years and 3 months. Because you need time to respond and all those things. So 50 lakhs has been retained. Earlier it used to be 3 years to up to 3 years, then 3 years to 10 years. Now it is 5 years. That's all. So they have shortened the duration. For search cases on or after 1st September, block assessment. Search cases, old provision, 3 to 10 only. Search cases till 31st August, 3 to 10 only will apply. This one is gonna come from 1st September only. And this is not search case, mind you. This is income escaping assessment. Earlier, search and income escape assessment were fully merged. So you see time limit. Previous year 24-25, assessment year 25-26, escaped income other than search. Normal case, 148A notice can be issued within 3 years from the end of the assessment year. So 31st March 2029. 148 notice can be issued within 36-29 because here I'll give you time to write, no? So 3 years, 3 months. But if the income is more than 50 lakh, I can launch it till 31st March 31, 148, 36, 31. Indirectly, time limit to complete 148A notice, seek reply, adjudicate fit case, everything should be done within 3 months is what they're trying to tell. Because if you see in 148A, they have clearly mentioned not 148A, they have removed, no? SCN to SCN. As per time limit specified in the notice, this entire procedure and time to pass fit case order. Because they have removed the time limit of also 1 month. So this point and this point, fit case, everything together should be passed within 3 months. Indirectly, they are telling because of this dialogue here. So indirectly, I can say time limit to complete 148A notice, seek reply, adjudicate fit case, everything is 3 months. And authorization authority now is additional director, joint director, additional commissioner, joint commissioner, 4 people. This is the new procedure, my dear friends. So this is the entire procedure for which one? 147. So let's go to the search case. So we go to the search case, it's different, and then the time limits will be later after this. Search case. What is the procedure with respect to search? Search and seizure. Here also things have changed. How it has changed, we'll see. Yeah, see 5.10. Earlier, separate regime used to be there, and in 2021, it got subsumed into 147, and from 147, it has now gone to what? Concept of block assessment. Concept of what, guys? Block assessment. So, dear friends, in search procedure, what will happen is, you see, any search initiated on or after 1/9/2024, previous year 24-25, they'll initiate a search on or after 1/9/2024. Automatically, what happens? 6 years, it will be a block period. Means previous year 18-19, 19-20, 20-21, 21-22, 22-23, 23-24, block period. It will all come together as a block. Means what? You will have to reopen all the 6 years. Correct? So if it's initiated on 1/9/24, the previous 6 years block will come into the picture. So assessment year 19-20 to assessment year 24-25. It will be an entire block. And assume in that previous year 23-24, in that 144 is pending. Previous year 22-23, 143 is pending. Previous year 18-19, 147 is still pending. Everything will abate. Abate means what? Get cancelled. And everything will now come under the block assessment. It will come under the concept of block assessment. So, search is initiated on 2/10/2024, completed on 14/10/2024. So, first of all, for this previous year, search is initiated on or after 1/9/24 for previous year 24-25. 6 years before, it will be taken as a full block period. From 18-19 previous year to 23-24 previous. Have you ever heard of this, guys? Very weird, no? Very weird, no? Means what? I will initiate a search on 1/9/2024. Suddenly they will say everything last 6 years statute. Last 6 years statute cancelled. All the 6 years will be merged. And I have to file all merged income I need to do, and very weird, crazy it is. It was actually a failure before. That's why they deleted it in 2000. I don't know why they brought in. I don't understand the logic, to be honest. It's more confusing. Year on year was very easy. Now I have to sit and count the income of all the 6 years. This is still previous year 23-24. That is what? 31st March 24. 1st April 23 to 31st March 24. Eighteen, 19, 147 pending. 22, 23, 143 pending. 23, 24, 144 pending. It will all abate. So tell me, guys, in the search 1/9/24 happened and search completed on 14/10/24. Assume search initiated on 2nd October, completed on 14th October. So immediately when they started on 2nd October, from 18-19 to 23-24, everything statute. But what about 1st April 2024 to 14th October 2024? Is that also covered in this? Yes. So guys, even if I do it on the 6 years anyway will come, plus 1st April 24 to 14th October 24. That also I should cover, no? If some cash I get, I cannot say it is this, it's not this year, it is some 8 years ago and all, I cannot tell. This also is automatically part of the deal. That's what they are trying to tell. So, when I say 6 years, it is not just 6 years. 6 years plus this year. If the search has happened today on 2nd October 24, then this also will be taken into account for my calculation. Then, subsequent search. Original search happened on 14th October 24. Completion date of assessment as per law 31st October 25. Subsequent search happened on 14th December 24. Completion date of that search 31/12/25. Not completion of the search, of assessment. Should be done within 1 year from the end of the month in which the search was initiated. So here also end of the month 31st December 1 year 31st December 25. Should I wait for the original assessment to be completed? We will see this. We will see this. So guys, very deadly provision. See, where on or after the first, see page number 5.10. When you read, you will understand. Where on or after first day of September, a search is initiated under 132 or books of accounts, other documents or assets are requisitioned under 132A. Case of a person, assessing officer shall proceed to assess or reassess the total income of such person. There will be a block period. The block period shall consist of the previous year relevant to 6 assessment years preceding the previous year, and shall include the period starting from first day of April till the end of the authorization. Exactly same thing. 18, 19 to 23, 24 plus 1st April 24 to 14th October 24. Regular assessment for block period shall abate. There will be one consolidated assessment for block period. So you forget about concept of assessment here. All these 6 items will be blocked together. Hope you understood. All these 6 items will be blocked together. From 18, 19 to 23, 24 will be blocked together. Till block assessment is complete, no further assessment or reassessment shall take place. The assessing officer shall assess the total income of the assessee, including the undisclosed income, which shall include any money, bullion, jewelry, all those things. Undisclosed income will be computed. If I enter the place, I find somebody else's income, that also will be added in that fellow's income. Same like before, no change in that. Now you see, tax will be how much, guys? 60% for the block period. Deadly. There is no concept of separate taxation here, direct penalty. There is no other sections. Directly for search, different. 60% for block period. And there will be a surcharge. Central government can, CBDT can release the government can release a surcharge later. As of now, they have not given yet. 60% plus surcharge. Presently, there is no surcharge. And guys, other sections, no, 234 ABC, penalty, 270A will not come because anyway I am charging 60% plus surcharge. But penalty will be levied. Penalty will be 50% of the tax payable. Deadly, guys. Penalty on only undisclosed portion. 50% of the tax payable. Think about it. Deadly point. Whatever you have to pay tax, no, on that 50% you need to take. Time limit, you see, 12 months from the end of the month in which the last of the authorization was made. That is what I am showing here. Original search ended on 14th October, end of the month 31st October, 12 months from end of the year 31st October 25. And let's say I made a subsequent search 14 December 24, end of the month 31st December 24, 12 months from that 31st December 25. So here they have given it is 12 months. If international taxation transaction or specified domestic transaction under this is your international taxation, that also will be basically evidence will not be considered This you will learn in international taxation. You leave that, no problem. Section 148 has been substituted where concept of deemed information was there. In that, search provision was removed. Block period, 6 assessment years preceding the previous year in which the search was initiated. Undisclosed income will be anything, guys. Money, bullion, jewelry, valuable article, or any expenditure also. Any expenditure, unexplained expenditure. Income based on any entry. So when they make the search, they will get a sign from the witness that these things are covered. That witness sign and they will make one legal document that is called as Panchnama. Whenever the auditor, one of my bosses was fully into taxation, and one of the search we had his own client, there was a search case on him. So we had attended it. That time we all stood for the Panchnama. I remember that very clearly. So now you see, where any assessment under provisions of this chapter is pending, in case of an SC, in whose case a subsequent search is initiated, assessment of subsequent search also will be as per this provision. That is the example here I am giving. This is the example for page 5.13.4. Original search 14th October 24, completion date 31st October 25. Subsequent search 14 December 24, completion date 31st December 25. I should wait for the original assessment to be completed. If original search assessment was completed on 20th October 25, subsequent search assessment shall be completed by, they say, 3 months from the end of the month in which the original assessment is completed. So I should complete between 31st October 25 plus 3 months, 31st January 26. It is not 31st December 25, it is 31st January 26. This is the proviso which says here, you see. In a case where period of completing assessment in respect of subsequent is less than 3 months, such period shall be extended to 3 months. So what they are trying to tell you, see. Original search 14th October 24. Completion date 31st October 25. Subsequent search 14 December 24. Completion date 31st December 25. Time limit here is just 2 months, no difference, unfortunately. I should wait for the original assessment to be completed. Original assessment is completed on, original search assessment is completed on 20th October 25. Which means from 20th October 25 to 31st December 25, there is a next search completion date. Assessment completion date, I have less than 3 months. So they're saying it will be extended to 3 months. If it is less than 3 months, I should say be extended to 3 months. Understood? When I say less than 3 months, it will be extended to 3 months. Which means what, guys? Original assessment completed on 20th October. From 20th October to the next assessment, whenever it's completing, how long is it? How long will this be? Isn't it less than 3 months? Yes. Isn't it less than 3 months? Yes. So I should wait for how long? Should wait for the original assessment to be completed. That is on 20th October 25. From 20th October 25 till 31st December 25 is less than 2 months. So proviso says 3 months from the end of the month in which original assessment is completed. What is the end of the month? 31st October 25 plus 3 months. 31st January 26. 31st January 26. I have to wait till that date, guys. 31st January 26. Done? Cool. So, do one thing. Yes, guys. So, we were discussing the search procedure. Let's finish it off. And then we have to go to the time limits and all those things. So, guys, here I have to do 6 years before plus current year from 1st April to 14th October. Subsequent search 115 BA4, original search 14th October, completion date as per law 31st October. Subsequent search 14th December, completion date 31st December. So basically, if original assessment was completed on 20th October, subsequent search should be completed by 3 months from the end of the month in which original assessment is completed. So 31st October 25 plus 3 months, 31st January 26. Very simple. Then subsequent search. Then you see one more deadly point, subsection 5. Block period 1819, 147 was pending, assume. 1920, 143.3 is done. 2021, 144 is done. 2122, 143.3 is pending. 2223, 147 is pending. 2324, assessment only is pending. Suddenly, the search happens on 10th October, 2nd October 24. What will happen? Other thing, statute abate. Block assessment has happened. SSE appeals to the block assessment. SSE appeals in the block assessment. Department loses the case. Go to the Commissioner of Income Tax appeals, obviously they lose the case. Then it goes to ITAT. There also department loses the case, SSE will win. And on 31st March 29, ITAT will send a order which the CIT receives on 2nd April 29 asking him to quash the search proceeding. Quash means delete the search proceeding. So they delete everything, chapter close. One question now is the old pending assessments which are actually now time barred. 147 and all should be completed. You know the timeline. 12 months from the end of the assessment year in which all that we have seen. That all time limit gone now. Because you went for block assessment, all the time limits under the old assessments are over. Because you have done statute. Will the statute get deleted? And will 18, 19, 21, 22, 22, 23, 23, 24, will it be revived? Revived means what? Will it be revived? Revived means what? Will life come into it again? Was the question. Answer is yes. Deadly section this is. They say if old assessments are pending, it will abate Statue is only temporary till the block assessment is completed. If block assessment results in a payable, department is happy. If block assessment does not result in payable, all the pending assessments will revive. Deadly point. Can it be reopened with under respective provisions even though it is time barred? Yes, they can be revived. See, subsection 5, deadly point. Shall revive. Means what? Even though it is time barred that time, you can ignore the time barring. Shall revive. Correct? Deadly point, guys. Very, very deadly point. It will come back to life. Have you imagine? It will come back to life. Crazy it is. It will come back to life. Hope you got the point. So once later you will copy down, you will understand everything. Okay? You can revise. Total income other than undisclosed income of the assessment year relevant to the previous year in which the last of the order was executed shall be assessed separately. Means disclosed income will be assessed separately. Undisclosed income will be assessed separately. The total tax will be 60%. But the 60% will be on what? Obviously, guys, it will be on the undisclosed portion only, no? To think about it, logically speaking. Last 6 years, assessments are already over. I have paid tax on that. Only on the undisclosed portion, I have to pay 60% plus a penalty of 50%. Why will I pay 60% for everything put together? Am I mad? I've already paid 30%. Again 60% I'll pay on that. Again 90% I'll pay tax. No. For the block period, on what? It will obviously be on the undisclosed portion. Is what you will think. Is what I will think also. Let's see if it is like that or there is some problem. Penalty will be on the undisclosed income always. Here they are telling disclosed income will be taxed separately. Total income relating to the block period shall be charged at a rate specified under 113. What is 113? 60%. Total income. Now this stupid calculation is there of total income. You see, this is the calculation of total income. Procedure. Where search has been initiated, assessing officer shall, in respect of search initiated, will issue a notice to furnish within such period not exceeding 60 days return. So guys, the moment I catch you in October 2024, I will give you a notice. In that I will give you time for 60 days. And I will say, please prepare the return for all 6 years. Total income, which will include the undisclosed income for the block period. I'm giving you a chance to come clean. You only add all the undisclosed income that you feel it is. Then later I will do later again. But you tell, I'm giving you a chance now. Whatever old years you have taken, you add, plus whatever you feel was undisclosed, come on, come clean. Please tell everything now, honestly. You see, that return shall be considered as if it was a return furnished under 139. Deadly. Means it's like a return of 139. And notice under subsection 2 143 shall thereafter be issued. What is that? Scrutiny assessment. It shall be deemed to be a return under 139. Should I give a show cause notice under 148? No. Can I give a revised return in such cases? No, no revised return. So guys, what is the procedure? I'll give you a notice. Within 60 days, you have to give me a return. That's it. Once you give a return, I will also give you 143(2) notice to produce documents, all those things. And what should you write in that return? Everything. Whatever you have already taken into account last 6 years and what you feel is undisclosed, everything you should share. Now I will determine the total income in this manner. And I will pass an order of assessment after determining the tax liability. Sir, can I go to DRP, Dispute Resolution Panel? No, I cannot go to DRC. The total income will be as follows. Important to understand what do you mean by total income. Total income disclosed in the return furnished under 158 BC. That will be assessed income. In this example, all these assessed income, guys, 18, 19, 19, 20, 20, 21, 21, all this. In that 143.3 is done here. 144 is done here. That assessed income I will write. Plus, this is all pending. I will give my declared income. Whatever I feel is declared. Plus masala items. Plus masala items. So what I will do, assessed income I will put plus declared income in other cases. Assessed income in what? In my example, 1920, 2021. Assessed income of 1920, 2021 is assessed already. Then other income will be my returned income. In what? Declared income. Plus, now all this is still pending. I don't want to do golmaal. I'll want to come clean and be honest about everything. Plus, I will add the masala. What is masala? Undisclosed income which has been disclosed now. I am disclosing now, sir. One is, sir, wherever assessment is pending, whatever I have declared, I am giving, sir. Next, sir, wherever I had declared something, then assessment can be plus or minus. Sir, I declared 3 crore, but assessment was finalized at 3.5 crore. I am adding that. Assessed income for the years where it is assessed. Declared income for the where assessment is pending. Plus masala items. Masala items is what? Now I know search has already happened. I don't want to be a part of this entire thing. So I am adding that masala of undisclosed income, but which has been disclosed now. That is point number A. Point number B, you see, total income assessed under 143.3, 144, 147 prior to the, this is assessed income. In my example, it will be 1920, 2021 assessed income. Point number B. Can I say point number B is part of point number A? Point number B is part of point number A. Do you agree? Point number B assessed income is part of point number A assessed income. Yes. See the stupid calculation. First you will take total income, which will be assessed income, declared income, masala income. Then again you will add total income. Total income is nothing but assessed income. That assessed income is nothing but this small part, this one. This is B. B is part of A, deadly. Guys, are you with me? Yes or no? Thumbs up. All of you, thumbs up. Yes or no, guys? Okay. Third one. Total income declared in the return of income filed. Ayo, this is returned income. C. This returned income is here only, declared income C. A includes B and C, guys. A includes B and C. Horrible. I don't know why they did this. Then D. Total income determined where previous year has not ended on the basis of entries. This is what? Income from 1st April 2024 to 14th October 2024. I told you, no? That the search was concluded on 14th October. That also I should add. That also I should add. And lastly, undisclosed income determined by assessing officer. So guys, what all will come? First will be A. A will be B plus C plus undisclosed income disclosed now. Second point is B. Assessed income. C. Declared income. Or you can say returned income. Fourth one, income from 1st April 2024 to 14th October 2024. Beginning of financial year to end of search. Beginning of financial year to what? End of search. Five. Will be the undisclosed income assessed by AO this will be what? Total income. Crazy. This is the total income. Here this is adding twice. B and C is adding twice. Plus undisclosed income plus this income plus. So ultimately total income will be what? B plus C will be what? Assessed income returned income undisclosed income disclosed now. Then income from 1st April 24 to 14th October 24. And then undisclosed income as finally assessed by assessing officer. Okay, understood? Now you see aggregate of all these things. The tax referred to in subsection 7 of 158 BA, 60% shall be charged on the total income determined in the manner in subsection 1 as reduced by clause 234. So stupid. As reduced by clause 234. 234. Because this one will include everything. as reduced by 2, 3, 4. Why 4? Guys, this is based on the entries in the normal course of business. From 1st April 24 to 14th October 24, automatically, obviously, that is not income escaping assessment. Its assessment is happening, so that should be done separately. So they are telling 60% will be on total income minus clause 2, 3, 4. You see here they have given B plus C, again B plus C, and declared income is adding, which means assessed income, returned income. It's already here, B plus C. Again B plus C they are adding here. Think about it. Which means it has become assessed income, return income. Again it is added assessed income, return income, because it's given here. A already includes B plus C. Again B plus C has to be added, because total income is 1 plus 2 plus 3 plus 4 plus 5. So A is already including B. B is already there. C is C. So it will become 2B and 2C actually, to be honest. This is repeated twice. This is repeated twice. I hope you're understanding. I'm showing the entire thing. It is repeated twice. And now they are telling total income minus clause 2, 3, 4. Which means they are telling this you should delete. This one you should delete. Here one you should delete. Ultimately they are telling 60% will be on undisclosed income. I agree. Undisclosed income, I agree. But clause 2 and 3 will only be this one I will subtract. What about this? Huge mistake, guys. They are telling 60% should be on undisclosed income, which is disclosed now. Undisclosed income, which is disclosed by the SSE, assessed by the AO. And they are saying it 60% should be on assessed income and returned income, which is already in part number A. Ideally, they should have simply said, very simple provision, 60% should be only on undisclosed income by AO and undisclosed income disclosed now, and there ended the matter. I do not know why they added B and C here. Again added B and C here, subtracted only 1B and 1C, and they did not subtract this. Are you understanding the mistake? Yes or no, all of you? Did you understand the mistake in the law? Give me thumbs up. Wordings, bad wordings, horrible wordings, simply making it difficult. All of you guys? Simply you tell no, 60% of what? 60% of what? Undisclosed income, and undisclosed income disclosed now, chapter close. If I had just told I will have to pay tax on 60% of this and this, I would have agreed. First of all, in A you defined it is B plus C plus undisclosed income. See the wordings. Total income disclosed in the return furnished. Disclosed income. What is disclosed income? Everything, no? Assessed income, declared income, everything. Then again they are telling assessed income, again they are telling returned income. Assessed plus returned only will be disclosed income, no guys? Whatever was assessed before, whatever was returned before, that is only disclosed income. So first they are telling 1 will include 2 and 3. So 2 and 3 is repeating twice. Then they are telling remove 2 and 3. If 2 and 3 are remove also, it's already repeating twice here, no? Why do you want to take A? Actually 1, 2, 3 not needed only. 4 also not needed. That is this year's income. It need not be undisclosed. Assessment only is not over. Simply you could have told disclosed income they have defined. Okay, disclosed income they have defined. In disclosed income they will tell whatever you are disclosing now. Okay. Correct? Whatever you are disclosing now, disclosed income. Okay, fine. Here they are telling no, total income other than undisclosed income will be done separately. Disclosed income will be discussed separately. Undisclosed income will be assessed at 60%. Okay. So when you are telling that whatever was to be done now, whatever you are taking now, I'll obviously take everything. Disclosed income, that will include the undisclosed portion, but the disclosed portion is taxed separately. Is a mistake, but you ignore the mistake. I'm just want to tell you that. Anyway, guys, simple story is you have to pay tax on undisclosed portion, which I have disclosed now, and the undisclosed portion assessed by the SAO. He will assess it at 10 crore. He will say, sir, in that 4 crore I've already taken, sir, in this. Okay, remaining 6 crore I will charge. 4 plus 6 crore, 60%. And on that penalty also I will levy 50% of the tax is penalty. So 50% of 60% it will be actually 30%. Correct? Deadly point. That's what they're saying. And I will do everything on the basis of evidence which comes to my notice. And if there's any international taxation stuff, I will not consider that because that is considered separately. And they are telling any loss, if any, shall be ignored, which means is only going to be profit. It is always benefiting the revenue, not the SSE. Losses brought forward from the previous year shall not be set off against the undisclosed income. Obviously, previous year losses are there. Can I set off against this income? No, not allowed. You should have declared before only. Now you are declaring and easily using the loss. Some 10 crore loss you are showing. Now undisclosed income is 15 crore. Can you set off 10 crore? Nothing doing. However, I will allow you to set it off in the future. What are they trying to tell? These 6 years put together, you have some loss. All put together, you have some 6 crore loss. Now suddenly they have an income of 10 crore. Can you set this off? No. For this block period, assess separately. And once the block, this entire assessment is over, next assessment year onwards, this 6 crore can be taken here. But think about it, guys. Business loss is only allowed for 8 years. The block assessment is happening for 2 years already. Until that 2 years, I cannot touch this. By the time I finish my block assessment, whatever I am supposed to claim also, I cannot claim, practically speaking, because 8 years is over. Ideally, they are trying to tell 8 years allow you to set off, but in between, if the search happens, that search period you exclude. Nothing can be done. That's the indirect way of they are trying to tell. I'm not giving you benefit. Sir, business loss 8 years I will carry forward. Okay, boss, I'll allow the 8 years if you do not do any golmaal activities. If you do golmaal activities, out of those 8 years, sir, 2 years went in block assessment only. That full assessment went on for 1 year. I cannot help it. Why did you do golmaal activities? I'll not give you the benefit. They are not saying the set off can be done later. The 8 years will be extended by 1 year. No. Are they saying the period will be excluded? Never. They are just saying during the block period, whatever you earn, that you will not be able to set off. However, future years you can set off. Remaining period, if any. Hope you got the point, guys. Remaining period, if any. Similarly, if somebody, other person ka detail also if I get, that also I have to add. Time limit discussed. 12 months from the end of the month in which the authorization was made. If it is a transfer pricing case, it will be extended by 12 more months. Then Guys, during the search period, I will take over the books of accounts. I will seize it. I will hand over to assessing officer. If somebody else, I enter the premises and somebody else's books of accounts is there, I will seize that. I will contact the assessing officer. I will go to the search case. I'll find my other person from Mumbai. His assets are lying there. I will call the Mumbai assessing officer and say, sir, this assessee is your assessee, sir. You take these details. I'll hand over that to that person. That entire procedure, there will be some days, 15 days, 20 days, 1 month, 2 months. That entire process will be excluded from while computing these 12 months. And that extension is maximum 180 days. So if I start my search on 2nd October, completes on 14th October. And then I give it to other assessing officer on 31st October. From 2nd October to 31st October, time will be excluded while computing. So whenever I do 12 months plus these many days I have to add. That's what they're trying to tell. Shall be excluded. Other person, the Delhi guy or the Mumbai guy whose SSE, when I entered, that Mumbai guy's data was there, no? That fellows also will be completed 12 months from the end of the month in which notice was issued to that person. Very simple. I will get all these data. I will like, oh, let me issue a notice to him now. When I issue the notice to him, he will also have the entire thing has to be completed within 12 months from the end of the month in which it was issued. Transfer pricing case, 12 months extra. And other things you already know, guys. Already know. Injunction stay order exclude. If I'm receiving information from DTAA or TIEA, that portion you exclude. The entire principles of natural justice where I give time for them to respond, exclude. If I have given time for you to do special audit, that special audit you exclude. Special audit, I'll tell you in 20 days you have to do the special audit. 20 days you exclude. If I have given for valuation, valuation exclude. Other things are fine, guys. This and all you can ignore, no problem. All this you can ignore, no issues. Interest will be at 1.5% for undisclosed income. 1.5% of the tax on undisclosed income. From the day I'll give you the notice till the end of the assessment, you will have to pay. No choice. Penalty is 50% of the tax of undisclosed income. Ignore this. Too much to read. Leave it. No problem. Not needed, guys. Not needed. If you fail to furnish return of income, no, after I ask you to furnish return of income, deadly point, imprisonment. 3 months to 3 years and with fine. Non-compoundable offense. You cannot escape imprisonment. Deadly. Non-compoundable, guys. Understood? So these points where I have told cross mark, no need to read, simply will create confusion. Other things is Everybody, did you understand the procedure now? Yes or no? All of that's the procedure. New search procedure. That's about it. You see, we made this chart also. Search initiated under section 132 or books, documents, assets requisition on or after 1/9/2024. Block assessment procedure will happen. Issue notice of return of income. Determine total income. So definitions are given what? Block period is 6 assessment years plus current financial year up to the date of execution. Undisclosed income will include money, bullion, jewelry, incorrect claims. Date of execution of last authorization is what? For search, it is last panchnama. Requisition, whenever you receive the books of accounts. Requisition is nothing but it is with some other authority you are taking it. That's it. So, block assessment, section 158 BC. Issue notice for return of income, determine total income, pass assessment order or reassessment order. Then computation of total income, 158 BB. Disclose income as per 158 BC. Compute assessed income as per all the previous orders. Compute returned income as per periods not covered under 1 and 2. This is for when assessment has happened. This is where assessment is not happening. Returned income. Compute determined income for previous year not ended. Determine undisclosed income on basis of evidence found. Compute determined income for previous years not ended. Determine undisclosed income on the basis of evidence found. Calculate total income. Aggregate of 1 to 5. No set off of loss brought forward and unabsorbed depreciation. Where 1 and 4 are a loss, they shall be ignored. Tax and block assessment 113. Total income. Point number 6 minus 234. Tax at 60% plus surcharge to be notified. Assessment order within 12 months from the end of the month of last authorization. Extension of 12 months if it is a TPO. Exclude the maximum period of 180 days for transfer of cases from jurisdictional AO. Time limit for other person is 12 months from the end of the issuance of notice. And extension of 12 months for TPO again. Same, court order, stay order, information on 1990A, special audit, valuation, everything you should exclude. After all exclusions, if the time remaining period is less than 60 days, then you should consider it to be 60 days. Then to be extended to the end of the month. So basically, I told you if it ends on 14th October 2020, 4, and the last date should be 31st December 2025. I will have to exclude all these things now. After excluding also the balance period remaining, it is less than 60 days available. Stay order and all happened till almost, October there was a stay order. November, till November there was a stay order. When the stay was lifted, the maximum time available only is 1 month. So it will be considered as 60 days. And if the time limit has already expired before the end of the month, then it will be extended to the end of that month. Very simple. So that completes the entire search procedure, my dear friends. Now going back to, what do you say, time limits. Time limits of completing the assessment. So come back to all these things. 3.25. 3.25 time limit to complete the assessment and pass the assessment order. So from assessment year, basically now, from it's amended as per Finance Act 23. It is very clear here, this point. Other things you can all ignore. What was there before? Now, 12 months from the end of the assessment year in which the income was first assessable. This is, when will I finish 143 or 144? 12 months from the end of the assessment year in which income was first assessable. For my assessment year 25-26, end of the assessment year is 31st March 26 plus 12 months. 31st March 27. Before 31st March 27, I should complete the full assessment. From where? From till 31/3/27, I should finish 143 and 144. Within 12 months, the end of the assessment year in which the income was first assessable. If it is TPO, then it is increased by another 12 months. If it is 139(8)(a), updated return, it will be 12 years from the end of the financial year in which the updated return was furnished. Updated return can be furnished up to 24 months, the end of the assessment year. From there again, 12 months, from the end of the financial year in which the return was furnished. So updated return of assessment year 25-26, previous year 24-25, let's say was filed on 30th March 2027. End of the financial year 31st March 27 plus 12 months. 31st March 28. It should end. 31st March 28 should end. Then, in case I told you, no, there is a case where there is a condonation of delay. In case there is some problem, I can apply for condonation, requesting them to grant permission for me for the delay. They will pass an order under 119(2)(b). There also, when they pass an order of assessment under 130, 43 or 144. So in case I make a delay, I can go and request the department to give me a condonation of delay, and they can ask me to file a return. Whenever they ask me to file a return, so from then 12 months from the end of the financial year in which such return was furnished. Order under 119(2)(b). This was inserted in Finance Act 24 again. 147, we saw this, you can leave this one. 12 months from the end of the financial year in which notice is served. 147. This is the new 147. 153(3), fresh assessment. This is, the old fellow will give some remedies, fresh assessment. I'll explain this, don't worry. Anyway, so come here. Basically some examples, and then we will come to other areas. Purushottam Das Patel, example. 143(3) order was made on 31/12/2022. 156 demand notice was on 3/1/23. 156 was sent on 5/1/23. SSE, correct, said there's a court order on the income assessed. Put a court order. Now, before that, 153(1), it says before the assessment was made, it says 153(1). Correct? So So 153.1, if you see this section, it says what? Provides time limit for passing order within 12 months from the end of the assessment and income was it first assessable. So where the first order was made. What do you mean by order was made is the question. So it was order came on 31/12/22, which is correct time. But demand notice came 3 days later, which was time barred. Whenever an order goes, I already discussed this, demand notice should go side by side. Just an assessment order without demand notice is void ab initio. There has to be an order along with a demand notice. The only exception is 143.1 intimation. If you remember, intimation is deemed to be demand notice. We saw that in 156 proviso. So whenever an order goes, along with that, demand notice should go. In this particular case, order was done on time. Demand notice went later. So as when is the assessment complete? Only when order is given, or along with the order you need a demand notice, and there is something called income tax note sheet. Income tax note sheet. That is all the calculations they will give. Income tax note sheet. So when is the assessment complete? On the day of the order, or order plus demand notice plus income tax note sheet. So very simple. Court says if the order is made, it means order is signed. It is signed on 3/1/23, which is time barred because you should have done it before 31/12/22. For assessment year 21/22, the time limit was used to be 9 months. That's why the time limit was 31/12/22. For this is the actual case of Purushottam Das. Now it is 12 months, but in 21/22 it was 9 months. So 9 months from end of assessment year will be 31/12/22. So yes, it is time barred. Time barred. So some general provisions. To reach that particular 153.2 stage, we have to discuss this general provisions. Under section 250 and 254, 250 Commissioner of Income Tax Appeals. If you remember, we had stopped here, right? While discussing this, we had stopped here. This part 153.3. So for that, you need a little bit of history, or rather, little bit of context. Only then you'll understand this. So, assessment order of an assessing officer can be appealed against in 2 ways. One, I can directly go to the Commissioner of Income Tax under 264 and ask for a revision of the order. Or I can go to Commissioner of Income Tax Appeals under section 250. And then it will go to Income Tax Appellate Tribunal under 254. So these people are called as the fact-finding authorities, 250 and 254. Then they will go to High Court and then they will go to Supreme Court. They generally talk about question of law or mixed question of law and fact. For example, subsidy. Subsidy, is it a receipt? Is it a capital expenditure? Is it a normal expenditure? I don't know. So that is mixed question of law and fact. Section 150. Assessing officer under section 143.3, 144, 147. What can the assessing officer do? He will pass the order under 143.3 or 144 or 147. What can the appellate authority do? Commissioner of Income Tax Appeals or ITAT, what can they do? They can either affirm the order. Affirm means whatever the lower authority has told, they will say yes. They may delete the order. They may say, no, this is fully wrong. Or the order can be void because of a technical defect. Means what? You have given it to him beyond the due date of appeal. So that's time barred. I cannot do anything about it. Or I may set aside or cancel. Set aside means what? Cancel the order. One is agreeing to the order. One more is what? Deleting the full order. Deleting certain points, that not the full order, deleting certain points. Deleting certain points. Affirm means agreeing. Delete means cancelling certain things. Void, I am not able to do anything because you have filed beyond the due date. And then last one is set aside. That is cancelling the lower authority's order and referring back to the assessing officer and say, please do it again. There is some problem here. I am setting it aside. Means I am cancelling your order. So if I affirm, that's okay. If I delete or make it void, when there is a technical defect, it is called as, interesting to know, appeal effect. It is called where the the appellate authority is giving a appeal effect. AO to follow the appeal effect. So appeal effect is only deletion and making it void. That time limit is given in 153.5. Whereas when I set aside the order and ask my lower authority to do the needful, I will refer it back to CIT or ITAT or Commissioner of Income Tax Appeals also. I will do it now, whatever it is. I can refer back to AO. Power to refer back is given to whom? CIT, CIT Appeals and ITAT. This time limit is given in 153.3. So set aside time limit is given in 153.3. Earlier it was removed. Finance Act 24. Power has been given to Commissioner of Income Tax Appeals to set aside or cancel orders. It was not given before. Now it is given back again. So guys, I can accept the order, delete certain points. I cannot do anything because it is void, or set aside, cancel. When I cancel the order, I will refer back to my juniors. Who has the power to cancel? CIT, ITAT, CIT Appeals also from Finance Act 24. That time limit, my dear friends, is 153.3. Setting aside or cancelling the assessment. All these sections I told you now. Who has the power to do? Commissioner of Income Tax Appeals, ITAT, Commissioner. 153.5 is what? Appeal, otherwise than making fresh assessment, means what? Appeal effect. See how in depth it is. Means what? Deletion or where it is void. I'm not making a fresh assessment. I'm making some changes. Changes is 153.5. Cancelling fully 153.3. So fresh assessment I have to make. Here I am setting aside or cancelling the assessment. No, I have to make a fresh assessment. When should I make it? Within 12 months from the end of the financial year. So if they are cancelling it on 31st January, end of the year 31st March, from there 12 months. Change via Finance Act 24 is what? Reference to 250 inserted. Means Commissioner of Income Tax Appeals also can set aside. Earlier power was not given to him. Again, important small change, important change. So any or finding or direction, if the order is passed by Commissioner of Income Tax Appeals, Commissioner of Income Tax, ITAT, High Court, Supreme Court, all these things, first three things, generally it is not binding on India or state or what, it is only specific to that case. That is Commissioner of Income Tax Appeals, CIT and ITAT. High Court on the other hand, if no appeal is filed against the order with the Supreme Court, it is binding only in that particular state. No contrary decision should be there in any other High Court. It's only to the SSC falling within the High Court jurisdiction. If Karnataka High Court tells that if the contrary decision is not there, it is applicable to all SSCs of Karnataka. Supreme Court decision is binding on everyone, which we'll see. But if there is any retrospective amendment of law, if it is time barred, means that under 149, what's the time limit of reopening assessments? Not search case, reopening assessments. Now it has become 5 years. No, time limit is already over. Nothing can be done. But if the appeal is pending, then case is closed after applying the amendment, because I'm doing a retrospective amendment, right? Case will be closed. But if appeal is not pending, can I reopen the proceedings? No. So there is a section 150 which says you can reopen it any time. So what is the meaning of that? Time limit for notice is 149. You have to follow. In 150 it says you can reopen any time. That any time is restricted to 153.6. What is 153.6? Completion of assessment. Reassessment, recomputation within 12 months from the end of the month in which the order is received or passed by the PCCIT. So they are trying to tell that ultimately in Greenwood Corporation they are trying to tell that entire assessment is to be made before expiry of 12 months from the end of the month in which order is received or passed by the commissioner. So the entire thing is the same thing. One more example of that order is what? Income of one assessment year of an SSC is shifted to another assessment year, or income is excluded from one person and to be added to another person. Now I have to make a revision, right? Can I reopen? Yes. What has happened is by mistake it has come to my assessment, but it should have been clubbed in my wife's hands. Or by mistake it has been clubbed in my wife's hands. Now it has to be actually assessed in my name. In this case, can I reopen anytime? Yes. But that anytime etc. should all be made before the expiry of 12 months from the end of the month in which order is received or passed by the commissioner. This is what it is. Supreme Court cases. For example, assessing officer allowed the deduction. Appeal was not filed. Supreme Court on 10/3/23 disallowed deduction in some other case based on the same expenditure. Yes, assessing officer can issue 148 notice as per section 150. In 150, you can do it any time. So Supreme Court for assessment year 95-96, they have passed one decision today on 10/3/23. Can I open 20-year-old thing? Yes, deadly. On the other hand, assessing officer disallowed deduction. Supreme Court on 10/3/23 allowed the deduction. If the appeal is pending, then apply the changes and close the case. If appeal is still not pending, time limit for rectification under 154 is already exhausted. There is a section called 154. In that, time limit is 4 years. 4 years from the end of the financial year. So that time limit is already over. 95-96 means it would have happened before 2000. Hence, nothing can be done. These all MCQ questions they can ask. I will give these, don't worry. (153)(2). Notice was served on 31/3/22. 1.2 crore was income escaping assessment. Let's leave, no problem. It's not needed. On this one. Remember, in search also you saw that 60-day extension. In search you saw 60-day extension. We just read the 60-day extension. For that example this is. For everything there is a 60-day extension, including for everything there is a 60-day extension, guys. Including for what? Including what do you say? 143. So assessment year 21/22 against 143.3, writ petition was filed on 1/12/22. High Court gave an injunction from 1/12/22 to 21/23. Stay order. 153.1 assessment to be completed for assessment year 21-22. It used to be 9 months from assessment, 9 months from the end of the year. So that one. Now it is 12 months. So 9 months would be 31-12-22. Plus, I should also count the injunction period of 51 days. 1-12-22 to 21-23, 51 days. Total is how many I should finish it off before 20th February 2023. Right? I should complete before this time. But guys, the period between the injunction and it is open. On 20th February, I come out and say today I can now complete the assessment. But how much time do I have? I have time only till 20th February 2023. So on 20th January 2023 to 20th February 2023 is less than 60 days. So it will be increased to 60 days. This is the example of that increase, important example. In that search also, same 60 days concept. After adding that also, if the balance period is less than 60 days, it will be increased to 60 days. Search, 12 months, already discussed. 12 months. Where any assessment or reassessment is pending on the date of initiation of search, the period available for completion will be extended by 12 months. Search has happened, block assessment will continue, all that. But all these periods will be increased by 12 months. But under the new search scheme, old will abate. Can it be revived? Yes, subsection 5 we saw it can be revived. Any search after 1st September 2024, timeline is different. Completion period is different. Any search which is before 1/9/2024, then the other things also will extend by 12 months. Any search happening after 1st September, new timeline. Any search happening before 1st September, 153(3)(a), 153(2), and whatever you saw, no, 143, 144, it will all be extended by 12 more months because search has happened. But all searches happen after 1st September, new timeline. We saw there also it was anyway 12 months. 12 months from the end of the month in which the search was completed. Exclusion of time and all you can go through, nothing great in this. The 60 days cases are here. This you can ignore, guys. Ignore. No point, ignore that. Then appeal effect. Appeal effect. Then what will you do? Let's continue here. Example for that 153.3. Assessment year 15-16. Return of income 30th September 2015. 143.2 was served on 30/6/2016. 143.3 was completed on 31/12/2016. On an appeal, Commissioner of Income Tax Appeals confirmed the order, affirmed the order on 2/1/2019. ITAT on 10/2/2022 through 254 set aside the order. I am giving an example of 153.3. Set aside the order. It was sent to Commissioner of Income Tax on 28/4/2022. End of the financial year was 31/3/23. Time limit 12 months from the end of the financial year in which the Commissioner of Income Tax receives the order. When is he receiving? 28/4/22. What is the end of the financial year? 31/3/23. What is 12 months from that? 31/3/24. You see 152.3. When the order is received. Whereas 263/264, wherever it is passed by PCCIT. This is received. ITAT will send it to CIT from the day I receive it, 12 months. End of the financial year plus 12 months. (153.5) you see. This is appeal effect. 153.5 is what? Appeal effect, where it is deleted or where I make it void. Appeal effect. So, when the higher authority gives an appeal effect, asking me to set aside the order. Set aside the order is 153.3. Appeal effect is what? Deleting some parts of the order or voiding the order because it is barred by time limit, time barred. So what does it say? Time limit for passing of an order in pursuance of orders under 250, 254, 260, 262, all those things, otherwise than by making a fresh assessment or reassessment. So they are cancelling certain parts of the order, but it can be two things. The higher authority will say, I'll cancel it provided there is some verification done. I require some verification. After it's verified, I'll cancel it. Or he will tell, I don't want any verification, directly it is cancelled. If there is no verification needed, directly cancel, different time limit. If verification is needed, different time limit. That I have given here. If no verification is needed, I should pass the order when? 3 months from the end of the month in which the order is received or passed. Commissioner of Income Tax or ITAT will send me an order saying that no verification is needed, please close the issue. Delete certain points. Certain points are there, delete. No verification needed, delete this point. So I should do it within 3 months from the end of the month in which order is received. It can be extended by 6 months. If verification is needed, they'll tell delete this point after verification. Then 12 months from the end of the financial year in which order is received or passed. And if it is received by the transfer pricing officer, Commissioner of Income Tax will give it to transfer pricing officer. Transfer pricing will give it to the assessing officer. AO should do it within 2 months from the end of the month in which he receives from the transfer pricing officer. The gist of the story is when no verification is needed, when verification is needed. Example, when no verification is needed, AO has disallowed expense of 10 lakh, income is assessed at 30 lakh. Commissioner of Income Tax Appeals deletes that point and allows the order. Communication is received on 4/1/2020. Modified order should come 3 months from the end of the month in which order is received. 30/4/2020 can be extended by 6 months. 31/10/2020. Guys, if these examples are not written down, you will not able to understand. You will not be able to understand only. That's why I am telling you the provision, then example. Second proviso, verification of books. AO adds back unexplained credits of 10 lakh. Income is assessed at 40 lakh. Credit span, amount received, balance sheet, and all was not received. SSC appeals. Commissioner of Income Tax says 1/1/2019 he confirms the order. I will appeal to ITAT. ITAT will delete that entire thing subject to production of books. Commissioner of Income Tax receives the order on 18/4/2020. It is 12 months from the end of the financial year in which order is received or passed. What is end of the financial year? 18/4/2020, the end of the financial year, 31/3/21 plus 12 months, 31/3/22. This is 153(5). So any order would is set aside or referred back to AO, fresh assessment 153(3). If appeal effect is there, 153(5). Other cases, Supreme Court order is there, High Court order is there, income is excluded from one assessment year and added in another assessment year, income clubbed from one SSC and excluded in the other SSC. For that we have another section, 153(6)(1). 12 months from the end of the month, not financial year, in which order is received or passed. That is what 153(6)(1) was. Twelve months from the end of the month in which the order is received or passed. Firm is assessed under 148. Time limit is 153(2). For 147 we know. Income escaping assessment. If they reopen 147 for partners also, guys. Firm, they are doing income escaping assessment. Now they are reopening for partners also. That time limit is 153(6)(2). 153(6)(2). Firm, for example, 148 plus 148 AD for 1819, income was more than 50 lakh rupees. Notice was served on 2/4/22. Assessment completed under section 153(2). 12 months from the end of the financial year in which notice was served. We know that 31/3/24. It should be over. Suppose assessment was completed on 17/12/23. Order has been passed. AO can complete 147 for partner also 12 months from the end of the month in which the assessing officer assessment of order in case of firm is passed. That is 17/12/23 plus end of the month 31/12, 31/12/23 1 year, 31/12/24, 31/12/24. 12 months from the end of the month in which the order is received or passed. Twelve months from the end of the month in which order is received or passed. One more example, Onion and Company, return of income 1011, income 40 lakh. Ambi is running the same business, income 58 lakh. A feels that there is diversion of income. Assessing officer 143(3), he will tell under 31/12/2011, he will tell income of 98 lakh is in the hands of the firm and deletes 58 lakh for Ambi. Income of Onion was 40 lakh, Onion and Company, partnership firm, individual 58 lakh. He will say total income is now 98 lakh and deletes 58 lakh for Ambi. Firm appeals to Commissioner of Income Tax Appeals. He will confirm the order. Firm then goes to ITAT. ITAT on the 23/9/21 deletes the order and adds back 58 lakh to Ambi. Income is वापस given back to Ambi. I receive that order on 28/10/21. You see, same dialogue. When the order is received or passed 12 months from the end of the month, not end of the year. So, time limit will be received is 28/10/21. 12 months from the end of the month, 31st October 21 plus 12 months, 31/10/22. 311022. So this is the points of assessment, reassessment. 15361, 12 months. See, 12 months, 12 months. This you can ignore, no problem. This you need to read, guys. Some examples which is given there. This you read, no problem. This we'll see later. Last provision. This is block assessment. Time limit for about 1 year from the end of the month of such revival. Can I revive? Yes, I told you, no. Old cases under block assessment was stuck. Once the block assessment is stopped, old cases can be revived. Subsection 5, revival, deadly section. When I revive that, within how many days should I finish it? 1 year from the end of the month of such revival. I still have 1 year, even though it is time barred under other sections, under 153.8, I can still finish it off within 1 year. This is revival. That's about it, guys. Assessment procedure. Hi, buddies. Good afternoon. Yes, so I think it's done. Have you finished? All haven't voted yet. Did you understand? Okay. So that was regarding 153. Done. Then we have something called as rectification of mistake. 154. When the mistake can be rectified. So guys, rectification of mistake means what? If there is any mistake in the assessment order, if there is any mistake in the assessment order or anything for that matter, then 154 will come. Check it out. To rectify a mistake which is apparent on record. To rectify a mistake which is apparent on record means what? If you see the entire record, on it you will see that there is a mistake. In the sense, apparent on record means what? It should be already mentioned there in the order. Means it is very apparent. If you see the order, you will come to know. That is the meaning of to rectify a mistake which is apparent on record. Means the moment you see the order, you will know that there has been a mistake. You need not dig into it. You need not, analyze it. It is not a misinterpretation of law. It's basically a glaring error whereby you have definitely made a mistake. So, income tax authority, I can go and approach him saying that, sir, it was supposed to be allowed, but you have disallowed. Very crystal clear. You have finally in the order, you have allowed in the main adjustment, but in the order you have given something else. You have not taken the correct figure. Sir, and even the intimation under 143.1, there is some mistake in the arithmetical accuracy, or this particular thing has to be not to be taken, but you have taken. So, to rectify a mistake which is apparent on record, income tax authority may amend any order passed by it, amend any intimation or deemed intimation under 143.1, or even a TDS intimation. The moment you file TDS return also, they will send one intimation under 200 capital A saying that everything is okay, something is not okay, like that. So you can do anything. Mistake apparent on record means there is no second thought about it. It's not like, there are two views to the same problem. One high court has allowed the expense, other high court has disallowed the expense. So you cannot say it is mistake. Mistake is a sure shot law. If there is, for example, under section 36, you can claim bad debts. You have claimed bad debts. Assessing officer has disallowed the bad debts unnecessarily. It is 100% a mistake. So, when there is no second thought about it, there is no investigation needed, nothing. Correct? Like, for example, I have allowed the expense. The assessing officer disallowed the expense. Supreme Court in some other decision held it is correct. It has to be allowed. Disallowance is wrong. That will become a mistake. When Supreme Court says something, there is no second thought about it at all. Supreme Court is 100% correct. That will be a mistake apparent on record. So, how do I rectify a mistake apparent on record? It can be done suo moto. It can be done suo moto means voluntarily, or it can be done by the SSE himself on an application by the SSE, or it could be done by a TDS deductor, or it could be done by a TDS collector. Mistake of Commissioner of Income Tax Appeals or Joint Commissioner of Income Tax Appeals can be rectified only on application by the assessing officer. Right? So, Commissioner of Income Tax Appeals and Joint Commissioner of Income Tax Appeals can be rectified on an application by assessing officer only. So, the higher up CITA, JITA, that can be rectified by the AO's application. Application made. When should you make the application? CBDT has given this clarification. Before expiry of 4 years from the end of the financial year in which the order to be amended is passed. Order to be amended is passed. So, if the order is passed on 31st October 2024, end of the financial year is 31st October 2025. From there, 4 years. End of the financial year is 31st March 2025. Sorry, 31st March 2025. From there, 4 years. 31st March 2029. Before that, you have to make an application for rectification of mistake. Rectification of mistake. Yes. Application can it be made after expiry of 4 years? No, it's invalid. Cannot make an application after the expiry of 4 years. It would be invalid. But there is one exception to it. We'll see later. Rectification order under 154(7) should be passed within 4 years as discussed. For the benefit of an SSE can be passed. If there is a increase in tax, decrease in refund, I should give a show cause notice under 154(3). Saying that why am I rectifying the mistake which is resulting in extra tax. So I have to follow ROOP. ROOP means what? Reasonable opportunity of being heard. Reasonable opportunity of being heard. Plus PONJ, Principles of Natural Justice. Principles of Natural Justice. Can I pass it within 4 years? Yes. Can I pass the application after 4 years? They are trying to tell, basically guys, they are trying to tell that you should apply also and they should give the benefit also. They should pass the rectification order also within 4 years. Can I pass after 4 years? I told you one exception is there. CBDT told for the benefit of the SSE, it is possible as per CBDT. For the benefit of the SSE, it is possible as per the CBDT. So if it results in increase in the tax or decrease in the refund, then it would be invalid. If the application is made immediately, can the assessing officer still take 4 years? So assessment year 21-22, 143.3, 31st October 22, dated, served on 1/11/22. Application by SSE is made on 150, as per section 154 on 1/4/2023. So you see, they are trying to tell that application can be made within 4 years. Rectification also should happen within 4 years. What if I make the application immediately? What is the end of the year? 31st March 2023. I made on 1st April only. Can you still take 4 years? Can it be passed 31st March 27, 31 3 26, 39 23? None of these. This was a question. General rule, it said it should be done within 4 years. But if I pass it immediately, should I do it, still drag it to 4 years, or should I do it as soon as possible? So 154.8 says 6 months from the end of the month in which the application is made. So you should pass it within 6 months from the end of the month in which application is made. 30/4/2023 plus 6 months. So you'll get 31st October 2023. And guys, this is not applicable to suo motu case, or where assessing officer has gone to the CIT appeals and requested him to change that, or assessing officer has gone to the joint assessing officer has applied to what? To rectify the mistake of the joint commissioner of income tax appeals. This one here, you see, mistake of CIT appeals, joint CIT appeals can be rectified application by AO. So this part is not covered in that at 6 months. It is very clear. Application made by the SSC himself, only that can be rectified like this. Application made by the SSC himself can be rectified like this. Which order can be rectified? 143.3 order can be rectified. Deemed intimation can be rectified. 144 best judgment assessment can be rectified. You can't apply for a rectification of a high court order as such. CIT appeals you can do. Supreme Court has given a decision. Based on that, you can ask for rectification. Because guys, High Court, as I told you, there can be multiple issues with High Court judgment. High Court of Karnataka can allow, whereas High Court of some other thing can disallow. So rectification of mistake, it is not apparent on record because there are two views possible. But Supreme Court, there are no two views possible. Retrospective amendment of law. Yes, the moment law is amended, immediately I can go and ask for rectification. Can I do a 154 of a 154? In all these cases, 4 years thing to be followed. Can I do 154 of a 154? Example, Hindware Industries Limited. Assessment year 13-14, 143.3 was passed on 33/2014. AO had by mistake taken depreciation at 5% when actually it was 10%. Plus 43B also was disallowed. Now that had to be allowed now. SSC makes an application under 154 on 12/7/2017 on the 43B issue, not on the depreciation issue. Rectification order was passed on 31/12/2017. Now SSC applied again on 4/7/2020 to rectify the rectified mistake. So because the end of the financial year is 31/3/2018 plus 4 years till 22 I can do. But the original order of 33/2014 maximum I can apply for rectification is 31st March 2018. So this rectification order, application of rectification, is to rectify the rectified order. Can you do a rectification of a rectification order? In 2020, I am trying to rectify the depreciation order. They said there is a mistake in the rectified order about depreciation. So 4 years would be 31/3/2018. And again 4 years from this will be 31/3/2022. So what is the dialogue? Within 4 years from the date when the order sought to be amended is passed. Which is the order sought to be amended? Original order or rectified order? It was obviously the rectified order, guys. So order sought to be amended is not 143.3 order but 154 order of 31/12/2017. So can I do a rectification of rectification? 100% possible. These are all the provisions. So it will be rectification of partners assessment, end of the financial year in which the final order is passed. Rectification of members assessment in AOP BOI, final order is passed, again 4 years. 4 years from the end of final order. Rectification assessment, disallowance of excess loss or depreciation under 147. Excess loss you have done, I want to disallow. Again 4 years from 147 order. Extra exemption you have taken 10 AA, convertible foreign exchange. So here also 4 years. Based on compulsory acquisition, I will have to recompute the capital gains. When can I rectify the order? 4 years from order reducing the compensation has come. Withdrawal of capital gains exemption has happened, so I need to rectify my order. Then how many years? The previous year in which the relevant capital asset was converted or treated as stock in trade. If you convert asset into stock in trade, you should keep it for 8 years. If it's a 100% subsidiary, remember, if a holding company has 100% subsidiary, capital asset is transferred. If the subsidiary company converts it to stock in trade within 8 years, gone. Or if the 100% shareholding reduces below 100%, gone. So now I have to rectify the order because whatever exemption I have given before will be withdrawn. So this will be within 4 years from that day, end of the year. Like that you can go through. Then income has been included in the return, but TDS has been deducted and paid in the subsequent financial year. You have taken income this year, but TDS you have taken of next year. So 1 lakh TDS income, TDS is 10,000. TDS credit you have taken next year, this income you have considered this year. Rectification of mistake. I should do end of the financial year in which tax has been deducted. 4 years from the end of the financial year in which the tax has been deducted. It is deducted in previous year 24-25. Taken into account 25-26. 24-25, 31st March 25. End of the financial year 4 years. By 31st March 29, I should do the needful. Notice of demand is always that, except 143.1, TDS intimation, TCS intimation, this is deemed to be notice of demand. So under insolvency and bankruptcy code, central government also will be called as a creditor. Under insolvency and bankruptcy code, if I am not doing well, for example, I am Jet Airways, I am not doing well. So they have reduced my, basically the Jet Airways has to pay income tax also of 1 crore or 5 crores. Because of the resolution process, Nirmala madam has waived off 1 crore. Instead of 5 crores, I have to pay 4 crores. Now reduced demand notice again I have to give, no, because initial demand notice at 5 crore. Now to give a reduced demand notice. So that also has been given under 156A. So simple interest at 1% per month or part of the month I should give. And the interest will be waived off if there is genuine hardship. Otherwise 1% per month I have to give. Penalty also shall not exceed the amount in arrears. There is an example also, all those things. There's a small concept called protective assessment that you can check it out. That's fine. Not relevant for this